So the idea, as I mentioned earlier, is to take one transaction, right? That would, you think about a phone call takes 2 minutes, a meeting, a meeting takes an hour, closing it and servicing it maybe takes another 15 minutes. What I want to do is I want to slow everything down. We're going to take a solid 4 hours right now, and I'm going to dissect the beginning process of running your business, to the scheduling of the meeting, to running the actual meeting, to then servicing the meeting. This is not designed to be one of those motivational type trainings or anything like that. This is not designed to be one of those, we're going to talk really, really fast type things. So I want you to make sure, have your coffee, silence all the noise, because in business, the devil's in the details, right? It's in what you do to prep, what you do to avoid, what you do to this. So we're going to take one transaction that in a normal day could take an hour and 15 minutes. We're going to stretch that bad boy out to really dissect why does Tony do it this way, right? I'm hoping to see if we can get into some clinics, if possible, where people can role play some of the scripts, where people can role play some of the quotes, where people can do a lot of different things. That's what we're looking to accomplish the first half, right? This is designed for everybody. And the reason I'm starting with final expense is because the reality is you can make, number one, a six-figure income on final expense. Number two, it's in high demand right now, like no other. And number three, it's a very easy product to understand. See, one of the reasons that a lot of people refuse to step out on the ledge and try to go make a sale is because they just don't feel like they know how the product works, and they don't know how to overcome a question that comes to them that they don't know the answer to. Right. So that's always the biggest fear in the world of sales. It's what do I do if they answer a question I don't know? Well, that's why we're going to take our time today. We're going to take that 4 hour window to really break it all down so that by the time we're done, you can feel like you know the ins and outs of this. You know how to prep your day, how to start your day, how to make that phone call, how to overcome the objections, how to get yourself through that process. If you guys remember the back in the day, when not even back in the day, we still do it now. When we talk about, timing in business, and we explain how baby boomers have created generational wealth for businesses. The reason final expense is in such high demand is because of that. We're talking about 76 million baby boomers right now, guys, are hitting retirement. 10,900 of them a day are turning 65. Final expense is going to be in high demand for the next 10 more years, because that's where 43% of the US population is right now. They're in that world. So if you're saying to yourself, man, I want to get to the point where I really learn how to sell high level IULs, I just learn how to sell high level annuities, wouldn't it be good to be able to learn that world, which is a harder world to live in, knowing that you're still making a six-figure income selling a world that's in high demand like final expense? That's the whole idea. I want final expense to be your baseline. That's my, I make 75 to 100,000 just doing basic final expense. And this allows me the ability to take my time learning how to sell high level annuities, learning how to sell high level IULs, because that's a harder industry to be in. But I got to feed myself first. I need that baseline. So that's what I'm going to hopefully give you guys today. And my goal is that by the time you guys leave this training today, you guys will be ready to say, hey, I'm ready to buy that first batch of leads. I'm ready to call that first number. I'm ready to go out to that first appointment. I'm ready to go do it. And I might be alone on an island and I don't have a certified trainer around me, but I'm ready to go out there and try. And all I got to do is kind of just duplicate what I just saw in this Closers College. That's what we're looking to cover first half. Then we're going to take a lunch. When we come back from the lunch, we'll do about an hour and a half for the lunch. When we come back from the lunch, I believe Rubiel is going to give us a presentation on some of the final expense companies and products and services and internal components that they have. And then what's going to happen after that is I'm going to talk about mortgage protection. We're going to go through that same process, a long-winded explanation, a long-winded, 3-4 hour session on how to make one mortgage protection sale. Not just the sale, but how do you prep for it? How do you make the phone call? How do you run the meeting? How do you overcome objections? How do you service that business? A full process done in slow motion, because the mortgage protection is what opens up the door for annuity sales. It's what opens up the door for IUL sales. It's what opens up the door for cross-selling, because now you're in a younger market that has higher demands, right? That's how we're going to close off. Now, I will tell you this. That second session is 100% for qualifiers only. So if you qualified, I need to make sure that we validate that you qualified, and I want to give value to that particular session. But that's what today looks like, right? We're looking to get done around 6 o'clock Eastern time, which is about 5 o'clock Central time. Okay. If you have questions, I don't want you to feel like you can't ask them. That's not what today's about. Okay. Like I said, take your coffee, right? Take your ADD meds if you need to. Stay focused, right? Make sure you got answers for the dogs, answers for the kids, answers for all that stuff, right? My Sandra has her kids here today, and I'm like, this is gonna be a real boring session for the kids. So why don't you make plans sometime in the middle of the day and take them and go somewhere, and go do something with them, because I'm gonna be right here with you guys. Do the same thing. Invest into yourself, because these, just so you guys know, are the types of clinics that I sat in on when I was at Northwestern Mutual. It was an all-day affair. Sit in, boom, let's break down one sale. How do you do it? How do you run it? How do you do this? From everything, illustration, design, quoting, everything, the whole nine. We're going to break that whole piece down for you today. Make sense? Good? Good. And again, feel free to ask questions, because at the end of the day, one question that you ask is probably a question that 10 other people have. And because I've been doing this for so long, sometimes I take the assumption that I'm understood, or I take the assumption that it's easily, it's kind of, right there in your face, not realizing that sometimes I forget what it's like to be that first year agent. That's something that I know off the top of my head is something that I didn't know in the very beginning. So feel free to ask those questions. Good? Okay. So let's break down what exactly first is final expense, right? Before you can sell something, you have to know what it is. Before, you have to know what it is, and you have to understand the market of people that are looking for it. So let me do this. Speaker view. Do that. There we go. Okay, good.
Hey, Tony.
Yes, sir. Yes, sir.
Hey, have you ever thought about just like, I don't know, do you record these and just upload these straight to YouTube, like raw, how you're doing them right now?
Yeah.
That to me is badass.
Just so you know, this whole process is what caused this entire effort mode to form. I have a YouTube channel that has several thousand people and all I did was workshops and trainings on how to run your insurance industry, but it was tied to Practice Company. I had a couple videos that were at like 30, not 30, I'm lying, about 25,000 views. And it caught a huge wave, and the CEO of the IMO that gave us this opportunity stumbled upon my channel, and that's what started it. So yeah. I've already started. I've got like 7 or 8 videos that we're going to be uploading here. I haven't uploaded them yet because, believe it or not, there's a couple people in the organization that I want to respect some of their confidentiality because they haven't made it public yet their move. In the next couple of weeks they will. And once they do, you're going to see me throw in a crap ton of videos because I want to make sure I protect their business. But yeah, I've done that. All right, so let's talk about final expense and what it actually is, right? You first need to understand the types of insurances that exist, right? You've got term life insurance, one. You've got universal life insurance. You've got indexed universal life insurance. You have variable universal life insurance. You have accidental death benefit insurance, ADB. You have whole life insurance. All right, these are 1, 2, 3, 4, 5. These are the type. Am I missing any? Let me see here. Term, the UL, IUL, yeah. I don't think I'm missing here. These are really the types of insurance you're going to stumble upon all the time, right? Now, GUL. I'm sorry?
GUL.
You're right. There it is. That's the one I'm missing, right? So you have GUL. I'm going to even throw in here ROP because nowadays ROP is being talked about as though it's a type of insurance, but really it's a rider that you attach to an insurance, right? So let's kind of break them down a little bit and then we'll discuss which one is actually final expense, okay? So term life insurance is insurance that you're saying to yourself, I want to protect my family, I want to protect myself for a term of my life, a time period of my life, typically anywhere from 10 to 30 years, right? As long as I'm making my monthly payment within that term period, my insurance amount, whatever it is I signed up for, is going to protect me and I'm covered. This is mortgage protection sales right there. Boom. Right? ROP is a rider that basically says that if you make your payments within a certain time period, in that time period, you're going to have the opportunity to cancel the insurance outright and get 100% of your money back. You'll find ROP riders on term policies, right? So if it's a 20-year term, the ROP rider says, if you fulfill this 20 years and paid all the premiums at the 20th year, we're going to give you all your money back. That's what ROP is for, right? Universal life insurance is a form of permanent insurance. When you hear the term permanent, that just basically means that it's a policy that has no expiration date. It's designed to last you the rest of your life. It doesn't necessarily guarantee it, right? It has its mechanisms that could compromise it and cause it not to last your whole life. But ideally, it's designed to last you your whole life. When you hear me say the word permanent, okay? The difference between UL, IULs, VULs, and GULs is really the interest rate, where it's capturing its interest rate, right? A universal life policy captures interest rates, captures its earnings from the interest rates of the government, right? LIBOR rates, BOLI, prime rates. Universal life typically is getting an interest rate based on those interest rates that are out in the market space, okay? LIBOR tends to be the most common, right? IUL is earning its interest rate from an index, like the S&P 500, the Barclays index, a number of different index, right? So again, ULs, they're all a universal life policy. It's just, where am I earning my money from, right? A VUL is earning its money from the variable world. That means that the money is directly invested in the stock market, which means that there's risk, right? A GUL, okay, is earning a fixed guaranteed interest rate, right? That is going to guarantee the insurance policy. This is a product that I sell a lot of because of that word guarantee. I love going into a meeting and talking guarantee. This is like my upsell in the mortgage protection world. Why? Because if I'm going to guarantee the insurance to last forever, I'm going to guarantee the monthly price, I'm going to guarantee the benefits. It's kind of like a lifetime term, right? Because the lifetime term, the time period is guaranteed, the monthly payment's guaranteed, the benefit is guaranteed, but it has an expiration date, right? 30 years, 20 years, whatever you sign up for. So I sell GULs like lifetime terms. I'm going to guarantee you the death benefit. I'm going to guarantee you the living benefit. I'm going to guarantee you the monthly payment. I'm going to guarantee you the return of premium option. I'm going to guarantee you that, and I'm going to guarantee that it lasts for the rest of your life as long as you make your monthly payment on time. Right? So 1, 2, 3. Now, ADB stands for accidental death benefit. Typically, this is the most cost-effective of all of them. Typically, this is the one that you're going to find a lot of people have with their employer plans, right? And companies that are notorious for selling these types of products are like Combined Life, Aflac. There's like super dirt cheap bank. Whenever you hear someone say, "No, I got insurance through my bank. They sent me this little thing and I filled it out and I'm only paying $5 for it." Okay, cool. Let's dissect it. Why is this so cheap? It's because the death has to come from an accident. It's not like passing away from anything. It has to come from an accident. And typically, the death has to happen within a 2-week period of the accident. That's a lot of things that they don't talk about with these policies. So people a lot of times might say, "Well, man, I've got insurance, I'm covered, but I'm only paying $15. Can you beat it?" When someone says, can you beat the price of my insurance? My answer is never yes and it's never no. My answer is, I need to see what type of insurance you have so I can do an apples to apples comparison. Because if I'm going in blind without knowing what you have, it's hard for me to tell you if I can beat it or not. You cannot say that something is good or bad until there's something to compare it against. Simple as that, right? The reason why you guys are so excited right now about the independent world is because you got something to compare it against. You know what it's like to be in a captive world. You know what it's like to be in a low interest rate, low comp world. You know what it is to have to be in a controlled world, right? So it's like, man, it's really sexy over there. I like this independent world because you have something to compare against, right? And so accidental death benefit insurance, you're going to come across people that, oh, I'm paying super cheap. Can you beat it? They're super cheap policies because they only pay in the event of an accident. And again, like I said, you typically have to pass away. You have to typically pass away within a certain time period of the accident. So if it's like a car accident, right? If the person doesn't pass away within a 2-week period and they're still on life support, it's not considered an accidental death benefit claim. Kind of crazy, right? But that's how that works. I'll be honest with you, I don't sell this at all. This to me is garbage. Like this to me, I mean, unless you're like an action junkie, extreme sports kind of person where you could actually pass away from the accident, I'm probably not going to be talking about this. I'll be honest with you. All right. Then there's whole life. Whole life insurance is the oldest of all permanent insurance policies, right? Why do they call it whole life? Because it's designed to last you your whole life. That's why they call it whole life insurance, right? Term insurance was the first one that came out. Then what came out afterwards is whole life insurance. The tax code that gave birth to the ability to earn money tax-free is called the 7702-A tax code. If you look in the Internal Revenue Code book, IRC, Internal Revenue Code 7702-A, that tax code is what gives birth to the ability for people to take money out of insurance policies on a tax-free basis. And it's because this policy was given birth, whole life insurance. Whole life insurance, by nature, it's designed to say you're going to have this insurance policy until age 120, as long as you make these fixed payments until age 100, right? So all whole life policies, unless you customize them, right, they're designed where at age 100, the whole policy is paid up. You no longer have to make any more payments. It's yours. You own it. It's an asset that'll never go away. And this death benefit will last you all the way to age 121. It earns cash based on the performance of that particular insurance company. That's how it earns its cash, through what's called dividends. So how that insurance company performs determines the interest rate that they're going to pay, inside of the policy. Okay. Now you're going to hear concepts like 65 pay or 10 pay. What that basically means when you say I want a 65 pay, it means I want a policy that by 65 it's paid up. So rather than saying, let me get a whole life, and the traditional method is that it's paid up by age 100, I want to have it paid by 65. I want a 65 pay. It's going to cost more money because now you're paying off the cost of that insurance in a shorter period of time. But by 65, the policy is completely paid. You might hear concepts like a 10 pay, right? What's a 10 pay? I want to pay the policy off within the first 10 years, a 20 pay within the first 20 years, right? That concept is there, right? Now, out of all of these, this one right here is final expense. Plain vanilla. Plain vanilla. Super cool. I love plain vanilla ideas. Why is that? How does final expense work? Simple. You're going to have a death benefit. It's going to last you until 121 years of age. You're going to make your monthly payment, and you're not going to, and you'll continue to make your monthly payment until one of two things happens. Either one, you pass away, or two, you reach age 100. Once you reach age 100, you no longer have to make any payments, and you've got this insurance all the way until age 121. Does it build cash? Yes. However, when you're selling final expense policies, I wouldn't even talk about the cash because it's not even worth it. It's not enough of a number to actually have that kind of conversation. It really isn't. It really isn't. And on top of that, it'll open up the door to so many other questions. Well, what could I do this? Or what about this? Or what about this? Stay away from that. Stay away from that world, because the reason someone started looking for final expense to begin with, I guarantee you 100% out of 100% of the time, it's because the person, number one, is on a budget, and number two, wants to make sure that their funeral costs are covered. So although it's a whole life policy, they call it final expense because that's what's on their mind. That's what's on their mind. I want to make sure the final expenses of my life are covered. I want to pay off the funeral home. I want to pay off the service. I want to pay off, everything that entails the passing away of me, I want it covered. I don't want them to worry about that. They're not thinking cash accumulation. And then therefore you don't want to go into that world and be like, okay, let me talk about this part. Sometimes too much information isn't good, right? And if you notice, I have more meetings with you guys about how to sell conceptually overview than I do as detailed as we're going to do today. Every now and again it's needed for the agents, but you'll never see me having that type of analytical conversation with my clients unless they think very technical and analytical. If they think very technical and analytical, you got to be willing to give them the answers. The last thing you want to do is try to push a technical person away from technical mindset, right? You try to sell a technical person on a conceptual basis, they will look at you and think you're disrespecting them. Why aren't you answering my questions? That's how they'll look at you. When it comes to final expense, you're not going to deal too much with a technical person. On their mind is making sure that there's going to be a death benefit in place as long as they're making their monthly payment. Point blank period. That's what it's all about. Right? Now, any questions? Because now what I'm going to do is I'm going to dig deep into this plan. I wanted you to know what are all the plans. Now I'm going to dig deep into this particular plan with reference to final expense.
Tony, I have a quick question.
Yes,
And maybe this may not be important, but you said the UL gets the money, the interest from where?
Universal Life earns an interest from the interest rates that's in the United States, particularly LIBOR interest rates. LIBOR, L-I-B-O-R. What I want you to do is research what LIBOR actually is. It's an interest rate based on what the government is earning on money relative to the banks, relative to lending rates. It's a little bit of a complicated thing to understand, but the best way to explain it is that it's an interest rate that right now the government is leveraging for earning of money, called LIBOR.
Thank you.
Okay.
Thank you.
You're going to see there's other interest rates in the market space like the prime rate. Go ahead, I'm sorry.
I'm sorry, can you repeat the name? Where is it coming from?
LIBOR, L-I-B-O-R. It's an interest rate that the government discloses based on, it's a formula. It's a formula of where inflation is today, what are the lending rates today, how much are people getting for their bonds. It's a number that controls a lot of different areas. If LIBOR rates are down, if interest rate or LIBOR rates are down, typically CD rates at the banks are really low, mortgage rates are really low. All of those rates are really low because the government isn't really making a high interest rate on their investments. That's probably the easiest way to me explain what LIBOR is. It's kind of like the government saying, this is what we're earning on our investments. So then therefore, those are the interest rates. And so the universal life policies, the insurance companies typically invest that money into government bonds. And those government bonds are tied to what? LIBOR rates. Does that make sense? Cool.
Yes, sir. The other question we have is with the accidental death benefit policies, do they have a term or are they permanent? What are they considered?
It's a good question. You're going to see both types. Some of them will be a 30-year plan. Some of them will be a plan that'll last forever as long as you're making your monthly payment. What you're going to see about accidental plans is that a lot of times there's not even any medical underwriting. It's like here, your bank sends you this little notice that says, hey, do you want an extra $50,000 of insurance? You just don't read the fine print and realize it's accidental. Check this box, we'll charge you $10.
Thank you, Tony.
You're very welcome. Any other questions? Okay. So, all right, so now let's dig deeper into whole life and what it really is. When I look at whole life, I split it up into two. Right? You've got your traditional whole life, and then you've got final expense. Right? Traditional whole life, I mean, you can get at anything from 25,000 all the way up to, say infinity. Right? $2 million, $3 million, $4 million, $5 million whole life policies. This is where the infinite banking world exists, just so you guys know. Infinite banking, that whole concept only exists in whole life insurance. It only exists in whole life insurance. It cannot exist in an IUL world. In IUL world exists premium financing, which again, that's totally different training, but just know that. When people talk infinite banking, we're talking a whole life vehicle, okay? How does whole life work? Number one, it's an either or situation. Either or means this: either you get the cash or you leave behind the death benefit. But you won't do both. You won't do both, right? You're gonna essentially have a permanent policy that's designed for you to be completely done with your payments by age 100. The insurance will last until 121. But if you pass away at any point in time, you're either gonna use the cash or you're gonna leave the insurance, but you're never gonna do both. And you might say, well, what if I use the cash up first before I die and then I leave the death benefit? They're gonna reduce the death benefit by the amount of cash that you took. It's an either or situation, okay? I'm not gonna tell you that there aren't good policies out there. There are some decent policies out there. Companies that have probably the most recognition for having the best whole life policies in the market space: New York Life, Mutual of Omaha. I'm sorry, not Mutual of Omaha. New York Life, Northwestern Mutual. Those two companies. Coincidentally enough, those are mutual companies. Mutual companies means that they're not, you can't buy stock of that company. Okay, their shareholders, their policy holders are the owners of the policy. It's a mutual company, which means it's mutually beneficial for the company and for the policy holders. You can't go and buy, you can't go to the New York Stock Exchange and buy stock of that company. Okay, that's why is that beneficial in the mutual world? Mutual companies don't do nearly as much advertising as stock shareholders do, number one. So then therefore that expense is down. That allows for more return for the policyholders. And a mutual company has to pay only one person, which is the policyholders, the cash value, the dividends. They don't got to pay shareholders in stocks. They don't got to pay shareholders and increase the stock. So because they're only having to feed one person, they tend to grow a lot faster and a lot better than a publicly traded stock company. Okay. Can policies grow better than whole life policies? Yes. I believe in the last 20 years, 15, 20 years, the IUL came out, and if it's properly designed, it'll outperform a whole life policy. Does it make sense to always replace a whole life? No, it doesn't. If I come across a Northwestern policy and I know that that policy is in place for 10 years plus, I know for sure that it doesn't make sense to replace it. Because Northwestern Mutual, New York Life, I would even argue Pacific Life, those companies, they have a pretty decent whole life policy, and the returns inside it are anywhere from 5 to 6.5%. And once they're in place for such a long period of time, 10 years, it doesn't make sense to replace it. Okay, but that's what whole life typically is. That's what it is, right? You're not going to find a lot of whole life policies that have living benefits. For example, New York Life, Northwestern Mutual, State Farm, Allstate. None of those companies have living benefits. None of those companies have living benefits. You are going to find a lot of people in the wealth space, doctors, physicians, attorneys, engineers. They might have very, high performing whole life policies, because the financial companies that are attacking that market, again, are the New York Life agents, the Northwestern Mutual agents, and even Guardian Life. That's the other company. Guardian Life has a very strong whole life policy, and it's used as a wealth accumulation product. It really is. It's solicited and sold the same way that we solicit and sell the Index Universal Life. Just obviously a different explanation when it comes to how the money earns interest rate. For 5 years at Northwestern Mutual, guys, 5 years, almost 6. Just so you know, Northwestern Mutual doesn't have an IUL. I learned to sell whole life. For 5.5 years, that's what I sold. I sold whole life insurance. Okay. But that's your traditional whole life. Final expense, however, it's a little bit more plain vanilla. So here's what I mean by plain vanilla. The amount of coverage is going to range anywhere from $2,000 to $40,000, depending on the company you go to, right? I think Mutual of Omaha goes up to 40,000. America goes up to 30,000. I don't even know what the limit is on Oxford. Rubiel, if you know that limit, go ahead and shout it out what the limit is with Oxford. But it's typically between 2,000 to 40,000. Notice the difference. Traditional whole life will go from 25,000 all the way to millions. This one only goes from 2,000 to 40,000 because it's designed to only be needed to cover what? Your final expenses, right? Traditional whole life could require a medical. Typically, medical is over 100,000. Final expense is a non-medical product. The client will not have to go to a doctor or see a physician or see a paramedical nurse and have their blood drawn. They won't have any of that stuff, right? Final expense will typically have anywhere from a 5-minute to a 5-day approval. Very quick product, very, very quick product. You sell America or Oxford, you can apply right then and there at the client's house, and within 5 minutes, the policy is either approved or declined. Simple, right? Which means what? This is considered a simplified issue product. Simplified issue. No medical exam needed. What does a no medical exam mean? It means that we don't have to draw your blood and urine and see where you are today. We're still going to look at the history. We're going to pull medical records, right? You want to know, right, from my technical people, right? You want to know the insides of it, right? When you apply, they're going to do a couple things. They're going to pull your MIB, stands for Medical Information Bureau. That's where doctors put their medical records, right? They're going to pull your RX, which is your prescription history. They're going to pull your MVR, your motor vehicle report. They're going to pull your credit, not to see what your interest score is, but to see if you have any tax liens, judgments, or anything like that, right? And then the last thing they're going to also pull is what's called your LexisNexis. LexisNexis is kind of new. I don't think it even has 10 years of age yet. LexisNexis is a report that they pull on you to see what your pattern of lifestyle is. When I mean by pattern of lifestyle, I mean patterns like, have you changed where you lived frequently? Have you changed where you work frequently? Let's take a look at your credit report and see how consistent you are with paying your things on time. Insurance companies are using this more and more because they're learning that those types of patterns are correlated to people's longevity in life, right? Now you might say, well, wait a minute, what does that have to do with your longevity in life? Let me explain what I mean. In the insurance world, there's a position called an actuary. Right? Anybody ever heard that term, an actuary? Actuaries are kind of crazy, I'm not gonna lie. I think an actuary is the last type of person I'd like to hang out with, right?
Isn't that what Molina is?
No, he works for an actuarial firm.
Oh.
He himself is not an actuary. But listen, don't get me wrong. He gets along with actuaries. I mean, look at this. This will validate, right? Actuaries are like technical on steroids. Honestly, it's like technical to the 20th degree, right? Now, anybody who's ever dealt with Molina, would you agree he's a technical person? Like, be ready. You can't ask that man a 2-minute question. You got to be prepared for a 2-hour answer. You can't. I mean, he's technical to the 10th degree. It's crazy. Actuaries are the exact same thing. They're like, I'm not trying to insult them. I'm just giving you a relative term to them, right? They're like eggheads. They are like engineers on steroids. Their sole job, an actuary's sole job, is to predict people's deaths and to predict the probability and statistics behind that whole concept. That's their whole job, their entire job. They've got to be able to predict, based on your age, your gender, your height, your weight, your this, your that. Based on all of that stuff, they got to be able to predict what your life expectancy is. And the reason they're so important to the insurance world is because they are what help the insurance companies figure out the price that they're going to charge for that insurance policy based on your age, your gender, your health, so many different parameters. And what they've now attached to that is what is your lifestyle patterns? What is your lifestyle patterns? They've done enough research that now they've been able to say, okay, people who tend to relocate from their homes frequently, people that tend to change jobs frequently, people that, have this pattern of pay history in their credit, that pattern is now all of a sudden attached to your lifespan. It's kind of crazy. You know what that tells me? And I don't know the numbers. I'm not an actuary. And an actuary will never disclose to you what the formulas are, by the way. They won't. But what that tells me is this. Apparently, people who change jobs frequently, people who relocate frequently, people who don't pay things on time frequently or have had issues with it, apparently those people have a tendency of not living as long because maybe they have either, that pattern also correlates to, I don't know, alcohol abuse or drug use or inconsistency with health eating habits. I don't know, but there's some correlation to it. So LexisNexis is a report that they do that pulls those patterns, right? So what's the pro and con to LexisNexis? The pro is that it also gave birth to the ability for insurance companies to approve $1 million policies and $2 million policies at a premier rating. But I mean, guys, this whole concept of companies like North American, Allianz, NLG offering $2 and $3 million insurance policies at a premier rating, that didn't exist until LexisNexis. Without a medical, premier rating without a medical, my apologies, I didn't mention that piece, right? The ability to offer $1 million, $2 million policies, premier rating without a medical, it didn't exist until LexisNexis. That's the positive. The con is that some companies, if their LexisNexis declines, it declines them completely and it doesn't even give you the option of getting a medical done for that client. For example, NLG. NLG is very strict with their LexisNexis reports. You submit a policy of $1 million, they're not going to ask you for a medical. They're going to pull your LexisNexis, and if something pops up there, there's a probability that they could get declined even if they have perfect health. And then the insurance company won't even give you the option of getting a medical done. Whereas, for example, companies like Anaco, right? Anaco, if their LexisNexis comes back a little sketchy, that client can still opt to get a full medical exam done in order to try to get a premier rating on their policy. So it's got the pro and con. But nonetheless, these are the things that they're looking at in a final expense. These are the things that they're looking at. Simplified issue just means, hey, we're not going to have to schedule a nurse to come out and see you. Does that make sense, or does anybody have any questions? Good stuff? Okay. Good. Let me see. Okay, good. All right. So, final expense: $2,000 to $40,000 of coverage, non-medical, 5-minute to 5-day approval, simplified issue. This policy will last you until 120 years of age, and you're going to make your payments until what age? What age is the maximum age that you'll make payments into this policy?
100.
100, correct. 100. But wait, the client wants to pay the policy, in 10 years. Is that possible? It is. It's called a 10-pay. It's called a 10-pay. You can have a final expense policy designed to be paid off after 10 years, right? For example, yesterday, actually, one of our agency owners calls me up. He says, man, I called this client and they're interested, but because of their religion, they're not allowed to be in debt. Their religion doesn't permit them to be in debt, and making insurance premiums on a monthly basis to them feels like a debt. So do we have a final expense policy where they can make one payment and it's completely paid off? The answer is yes. It's called a single pay life, SPL, single pay life. And now that's not something you could just log in and run the illustration on. You actually got to call the insurance company and say, hey, listen, I have a client. Here's their name. Here's their date of birth. Here's their gender, smoker, non-smoker. I need a $40,000 quote on a single pay. And they'll tell you what the one-time payment is to have this policy completely paid for. Same thing as you can say, hey, I need a 10 pay, pay it off in 10 years. I need a 20 pay, pay it off in 20 years. I will tell you this, in the final expense world, 99% of the time, it's none of those. It's just what's my monthly payment, and that person in their head is in their mind agreeing to make that monthly payment for the rest of their life. Okay.
How much is a single pay if I were to do one? Just out of curiosity. No idea. Have you ever ran one?
It depends on age, gender, how much
Oh,
insurance,
gotcha.
what their health is. There's so many factors that
Okay.
get tied in. But I mean, don't get me wrong. You know, someone wants a $40,000 single pay, it's probably gonna be like a $15,000-$20,000 payment. You know what I mean? Like it's
That's
not
not
gonna
a
be
bad
a big
upside.
number.
That's still not a bad upside if you look at it in the other way.
Say that one time again. Say it again.
Oh, I said that's not a bad upside if you pay 15,000 and you get 40. You know, if you look at it that way.
Exactly. There's a pro and con. What's the pro of single pay? If the person passes away the very next year, then the family gets the death benefit, but not the cash. He could have avoided having to make such a big payment if he just made a 1-year payment and then passed away. Right? What's the upside to it? You never got to worry about it again. It's paid for, and if you have a huge longevity, you know, you're good. You're good. It worked out for you, right? So, and again, today's training is gonna get technical. You're gonna see that technical side, but you're also gonna see, you know, what I give the client and what I don't give the client. I'm giving this to you guys because honestly, I need to reinforce your confidence about these products. And the biggest thing that holds someone back from going out to the field is a lack of knowledge of how they work. So if you know how it works, you feel more confident. Even though, no lie, guys, I don't talk about this. I don't talk about this. I don't talk about the types of insurances when I sell final expense. I don't. I know them and I'm teaching you them, but I don't even talk about that to the client. You know what I talk about? I go, listen, I can get you $2,000 to $40,000 of coverage. You're not gonna have the medical done. I'll get you approved within 5 minutes to 5 days. You make your monthly payment, and you know, when you pass away, you're gonna leave behind this X death benefit to your family, and this benefit's gonna last you until 120 years of age. That's it. That's all I do. Very cut dry, to the point. You don't want to overcomplicate it with your client. Does that make sense? Okay. Let me see here. Okay, good, cool. So now that we broke this down, okay. Okay. Let me do this. Okay. So now that we broke this bad boy down, all right. Let's talk about companies that are accessible for final expense. I'll give you the company names, and then I'll even give you my presentation of how I explain final expense. Companies that offer final expense, and I'm going to list them off as best as I can off memory from a priority list, like which one you should go to first, then second, then third, then this and that and the other, okay? First company I definitely would go to is Oxford Life. 5-minute approval, electronic application, simple quoting system. We're going to base the majority of training today on Oxford, right there. Okay. Second company I'd go to after that is Foresters. Now, Foresters, unfortunately, I'll be honest with you right now, we're not going to be able to bring Foresters into the platform until about June. Okay, and the main reason for that is because we're still blacked out on that. I as the agency owner, I'm still blacked out on it. You might not be, but I am. And unfortunately, the FMO can't get contracted with them until then. But that's going to be the next go-to, right? Third after that, it's a variety of different companies, to be honest with you. You can go to Great Western. You can go to Gerber. I would actually put Gerber in front of Great Western. It's got a better name, good quoting system. Gerber, Great Western, you know, Mutual of Omaha, right? You know, you even have Americo as an option, right? Those are all options that you can use, right? You know, everyone has a name for their plan, right? Like Forrester's plan is called the Plan Right. Mutual of Omaha is called Living Promise. Americo is called the was it Premier Eagle? I don't remember exactly what it, I don't remember exactly what it's called. But again, how do I present final expense is simple. This I'm going to give you right now is my presentation when I'm literally sitting in front of that client and I'm explaining it, right? A couple things when it comes to sitting with clients. You have to understand the market of the person, right? So do me a favor for a moment before I give you the presentation. Let's list off the characteristics of a final expense client, right? A final expense client that you guys are going to get from a lead generation. Feel free to unmute yourself and start giving me the characteristics of a typical final expense client.
Over the age of 70.
50 plus, typically.
50 plus.
Okay. What else?
Someone who has some medical conditions, probably.
Not typically. No, you're going to get that, but you're going to get a mix. You'll get a little bit of both. Another characteristic.
They're on a budget.
There you go. They're on what's called fixed income. Why? Because the majority of these, although I say 50 plus, the reality is the majority of them are going to be 60 to 65 plus, which means they're on what? What type of income? Social Security income.
Social Security.
Social Security income. They're on a fixed income. They're on a limited income, so they're on a budget. They're on a budget. Now, here's another component you need to be aware of when it comes to the lead generation process of final expense. They're typically middle Americans. The wealth of America, when it comes to medical decisions, financial decisions, they seek out referrals from their peers. You're not going to find the wealth of America going on Google and searching for final expense insurance, but you will find middle America doing that because middle America doesn't get educated on finances. Middle America doesn't have an advisor constantly sitting down with them having reviews. Middle America doesn't have conversations with their peers about, their retirement plans, their goal. They don't have that. So they go on Google. Google becomes their go-to. 62% of final expense in the middle American market is looked for online. Online, kind of crazy, something that you've never been learned, never been taught in the few years you've been in the industry, right? From any other organization, you probably didn't know that. 62% of the baby boomer generation, that's middle Americans, when they go looking for insurance, they go online first. And going online then triggers what? The social media advertisements coming out. And that's what starts the lead generation process. It's because of that, right? So think about 76 million baby boomers, 43% of the United States, right? Think about 76 million baby boomers and 62% of them are searching online for final expense insurance. So this is their typical demographic. Now, to defend a little bit of what Ola said, you are going to get some people, people in the lead bucket that have one or two of these things: medical issues or 90 plus years of age. You're going to find them. I come across them all the time. I mean, look, the last one that I looked at is a guy who has AIDS. His HIV, not AIDS, I'm sorry, his HIV. You know what that means? That means he's been denied left and right. So anytime you find somebody that's soliciting insurance, he's gonna, hey, I'm interested. Because the reality is, if he finds a company that's willing to cover him, he's gonna take it quick, right? Just like people 90 plus. People that are 90 plus, they're looking at their life and they're like, man, it's any moment. And I need to make sure my final expenses are covered, and I procrastinated, so I gotta find something. And nothing fits within their budget, or nothing is actually qualifiable because of that. So one good homework I would want you guys to do is, and I think Gerber might be the one that has the answer. What's the oldest you can be to still get a final expense policy? Right? Most companies, I think it's till 85. Some companies go to 90. I think, don't quote me on it, I think Gerber will go to 95. But that's the one that's that number you want to know. And I'll be honest with you, off the top of my head, I don't know the answer to that one. But I encourage you guys to go out and just kind of research. Call the 800 number of the sales department and ask them what's the oldest you can be to still qualify for a final expense policy, right? And each company's gonna have a different answer. Okay, I got a 93-year-old right now. Is Howard on? I don't think Howard is on. Howard is actually the one that I think Tony Gerber would provide that as an option. But this is the demographic. This is the majority of your final expense clientele. That's who they're going to be. Okay. So now that you know how the product works, now that you know the type of person, right? You know the product, you know the type of person. Let me now give you the presentation I give when I'm face to face with them. And then I'm going to talk about the lead generation aspects, because you need to understand how the lead is captured, so you understand the psychology behind it when you make the phone call. Okay. I'm lying. Let me also give you a little bit more about this generation, 50+ generation, right? Some patterns that you need to know about the 50+ generation. Professionalism is high on their priority list. Punctuality is high on their priority list. Okay. Simple explanation is a necessity in this priority list. Why is simple explanation such a necessity? Sometimes you're going to deal with people that you could just tell they're not that healthy. You're going to deal with people that are much older and, they're not processing as fast as you and I are able to process. And so you need to be willing to walk them through it, slowly explain the process, right? Let me see some faces. Just correct. I want to ask a question. Man, everybody blocked themselves out. Let me see some faces, y'all. Come on now. I'm going to block myself off a little bit. So anybody here by raise of hands, right? You have like a grandma or grandpa and they're much older, right? Don't you talk to them a little bit slower? Don't you kind of help them process a little bit, right? That's your market. That's that market, guys. You've got to be really patient with those people. You've got to be really patient with that generation. Respect to them is big. Punctuality, professionalism is big. They're not the show up in shorts and a t-shirt people. They're not. They're more of the show up in a suit and tie type of person. They're also, what this is what they're not big fans of. Technology is a no-go for them. They're face-to-face, belly-to-belly, shake my hand, look at me in the eyes. That's that old school generation. You need to know about that market and understand how that market likes to be treated and likes to be sold. You need to understand that, right? They're not the jargon. You're not going to talk jargon with those people. You've got to be willing to speak professionally with them. Hello, sir. How good? Good morning, sir. Good evening. Thank you so much, ma'am. That's that old school generation. You know what I'm saying? Millennials very different, right? The 30-year-old nowadays and the 40-year-old nowadays. You know what I mean? It's a very different. I'll give you kind of an example, right? And this is just something that I saw on social media, right? If Practice Company recently had a guest speaker on one of their conventions, right? Someone that I know indirectly. I know him, Tim Tebow, right? Everybody knows Tim Tebow, right? When Tim Tebow came up on stage, he had a blazer, right? He had a button-down shirt that was untucked. It wasn't tucked in; it was untucked. He had some dark jeans, and he had a pair of Air Force One sneakers with the tongue of the sneakers out, hanging out. This was the main attraction. This was the highlight speaker of the event, right? I guarantee you that would have never been what would walk through the door if it would have been 20 years ago, 30 years ago. It just wouldn't have been. Let me give you another example. Church. I remember when I was a kid going to church, it was, suits and ties everywhere. Suit and tie. You don't go to church without your church clothes, right? Your church shoes. You had to shine your shoes. You had to put on that tie. Ladies had to put on the dresses, had to put on the little gloves, right? Go to church now, right? I go to church now. My pastor's wearing jeans, He's wearing jeans. He's wearing a button-down shirt. It's not tucked in. You know what I'm saying? People are walking in a little bit much more casual. So you have to understand how the generation still views professionalism. It's changed. It's changed. But just because we're millennials, just because we're in this generation, doesn't mean we can't meet these people in what they still consider their world of professionalism. You're always gonna have something against you when you go meet these guys. They look at you and they think you're young. You're not professional. You got to prove them otherwise. I'm going to prove to you that I am professional. Meaning a couple things. I'm going to dress in a button down. I'm going to be cleanly groomed. I mean, nowadays it's somewhat become kind of a social trend for guys to have these crazy, rugged, rough beards. I'm not against beards. I mean, guys, look, I have a beard as well. But I've seen some people where I'm like, bro, you look like Apache Chia Pet, dude. You got pieces everywhere. Like, clean it up, edge it up, look right. You know what I mean? It's just the truth, right? I mean, that generation looks negative upon pierced ears. They look negative upon tattoos. They look negative in that world. You know, saggy pants. They don't see that. They don't see that. You know who taught me to dress in suits? It was a baby boomer. When I worked in the banks, I didn't know any of that world. My parents didn't teach me that world. So I would buy suits from JCPenney's and I didn't get them tailored. So my pants kind of sagged a little bit. And then it was a baby boomer one time that said to me this. He said, listen, you want to make it seem to your client that you're wearing the suit and not that the suit is wearing you. I was like, what? He says, you want to make more sales? He says, get your stuff tailored. You'd be amazed what an extra $15, $20 investment in your suits will do for you. And he says, and something else, buy shoehorns. And I was like, what the hell is a shoehorn? You guys know what a shoehorn is? That wooden thing you put in the shoes to keep them stretched out, like professional dress shoes, right? It's amazing. But that's how that generation thinks. That's the professional world. You still got to go meet those people in that way. You still got to be willing to meet those people that way, right? Like that. Just get in that mindset, right? Okay. So again, what have we talked about so far? How does the product work? We talked about it, right? We talked about the demographic of that person. Now we talked about the way that person thinks. We talked about the psychology of the way that person thinks. Business cards to them is still a big thing, right? I don't typically give business cards out to the millennial. You know what I give to millennials? My social media hashtag. Even the Gen Xers, right? You want my content? Listen, you want social media? Let me add you in. Boom, 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 done, right? Baby boomers don't think that way. Give them a business card. Here's my business card, right? You know what? Some of the things that they look at, right? It's crazy, but they do. They want to see what your email is. They want to see that it's not a Gmail account or a Yahoo account. They want to see a real email. Now, if you're thinking, holy crap, do I need to get one? It's like $5 a month, guys. GoDaddy.com is like $4.99 a month for an email that has the professional ending, right? If you guys know, my email is t.martinez@kfgbroker.com. I pay like $4 a month for that. Like, get it, right? Be that professional. So when they look at your business card, they see a professional email, they see a professional mobile number. They see that world. They see that world, okay? So those are the things that you have to understand about the psychology of a sale. You have to understand what you're about to walk into. If they offer you water, they're going to offer you water. They're going to offer you crackers. They're going to offer you that stuff. You accept it. Accept it. Especially, and I don't know, and I say this because I do have a bias in this. I know this market, especially in the Latino community. Maybe a lot of you guys would agree with me and say, if you deal, the Black community as well too, like, because I have experience in that world. You know your people more than obviously I do, but understand them. They're offering you a drink. They're offering you a cracker, something. Remember, these are grandparents. They still look at you like a grandkid. So when they're offering you something, they are offering it to you as a gesture of kindness. The best thing you could do is accept it, because they know if you accept it, you feel comfortable. And if you feel comfortable, they feel comfortable. If you show them that you're a little hesitant, they're still going to be on their guard with you. They're still going to be on their guard with you. You know what I'm saying? They're still going to be on their guard. Compliment their house. These little itty bitty things, guys, are big. I wipe my feet on the rug when they open the door to show that I can respect their house. And I make sure that they're visually there to see me wipe my feet. You get what I'm saying? If I notice that they're in their flip-flops or they're in their socks, I ask them at the door, ma'am or sir is how I speak to them. Would you prefer that I take my shoes off? I want to be respectful of your home. Those types of things matter, guys. Those little itty bitty things sometimes are the deal breakers or the deal makers of your sale. So you have to understand the psychology of a baby boomer, because that's ultimately who you're selling to right here. 76 million of them. You might not think like them. You might not dress like them. You might not talk like them. But if you want that person to be your clientele, you've got to be willing to adapt to them. And that's what a real salesman knows how to do. They know how to adjust to the market that they're in. You know, you see me hanging out in the Latino community, you're going to see that I turn really Latino. I start talking Spanish to them more than anything. I start bringing up old jargons. I do. You see me hanging out with the African American community, I can adapt and switch to that without a problem. You see me talking to the younger generation, I can talk their language, no problem. You see me talk to the older generation, I can flip my language. You've got to understand who your audience is and you got to adjust to them. And that's how this audience here thinks. That's how this audience here thinks. Ma'am, sir goes a long way. Thank you goes a long way. Shaking someone in their hands and looking at them in their eyes when you're shaking their hand goes a long way. Making sure you don't sit down at that dinner because they're going to take you to their dinner table, right? They're going to take you to their table. Making sure you don't sit down until they sit down, that goes a long way. A business card goes a long way. Guys, it costs $40 for business cards. $40 for business cards, right? Like literally legit. And if you're like, man, I don't have a logo yet, I don't have any of that yet. You know, if I'm your VP, I got a guy right now. He runs a company called Smiley Graphics. He has all the logos and everything. You give him a call, you give him your information, your name, your date of birth, you give him all that stuff, and he'll get you 1,000 cards for $40, and then whatever the shipping and handling cost is based on where you live. Right? And for my VPs, if you have your logo, you have your business card design ready to go, send him that design and he'll do the same thing for you and your agency. But that business card goes a long way. You'd be amazed. That business card goes a long way. That generation of people are the ones that still have the business card books. You guys know what I'm talking about? Where you flip it and it's the vinyl. That's them. They still have that. They still have that stuff, bro. They still have that. You got to understand that market. You got to understand that market. You got to. Clean your cars. Some people look at that. People look at your car. They want to see if the car that's pulling up, is it a clean car? Because it says something about who you are. It says something about who you are. That doesn't mean you need to have an expensive or a fancy car. On the contrary, to be honest with you, in that market space, if you have a fancy car and an average car, I prefer you go out in the average car than the fancy one. Because that market, that older generation, just so you know, one of the things that they're very cautious about, are you ready? Elderly fraud. They're very cautious of that. They know that there's a lot of people out there, younger people out there that are trying to hustle their age bracket. So if you show up in a fancy car, what does that say to them? You're making a lot of money or you're taking someone's money. Either which way, you and money are always hand in hand. You show up humble, and you're in a better place. Believe it or not, you are. You're in a better place if you do that, right? The Wealth of America market's totally different. They want a financial advisor. They want to see success. It's a different market. It's a different intro. It's a completely different everything. You know what I mean? When I worked at Northwestern Mutual, I was driving 5 Series BMWs and I was driving red Corvettes. I mean, I was driving 3-piece suits. My briefcase had wheels. Y'all know those briefcases, right? You open up that and you wheel it like it was a whole different world. You know what I mean? You never saw me with piercings. I was always clean. Like you never saw that. It's a different world. Middle American market, baby boomer market, they don't want to see you pull up in a 7 Series. They'd rather see you pull up in a regular car, but at least make it a clean car. Make it a clean car. You know what I'm saying? I'll take it to another level. And again, this is more about your level of comfort. I'm just downloading my experiences to you right now. If you look at the environment of where you're in, try to relate to them. One of the things that my girlfriend says to me all the time and her kids say to me all the time, they're like, bro, you know about everything in life. The reason I know about everything in life is because I've learned about people. It's not because I've been the person that experienced it, but it's because I've been around people and I've learned about cultures. I've learned about races. I've learned about, different likes and dislikes that they've had. And so I'm able to relate to them. Become an anthropologist in this world and learn personalities. Learn about it. If I'm talking to an Arabic man, an Arabic woman, I'm going to tell them salam alaikum. Why? Because I know that's their way of saying hello. You know what I'm saying? I know that culture, also has a big thing about women not looking at men in the eyes. So I try not to look at them in the eyes, but I look at the man square in the eyes. It's a different psychology. If I go into their house and I happen to see a cross and I know that they're Christians, I have no problem praying with them at the table. But that's me. That's my level of comfort. I want to relate to them. I have no problem with that. I understand the Cuban culture versus the Puerto Rican culture versus the Mexican culture versus the Dominican culture. I can relate to them. I know the kinds of foods that they eat. So if I get a chance to talk about the foods, I'm going to compliment some of their foods. I mean, look, I know Pueblo's Mexican. You've never heard me talk about plantains with Pueblo, but you'll hear me talk about tacos all day long with Pueblo. You hear me talk about pico de gallo all day long with Pueblo. You will, because I can relate in that world. You gotta kind of go into this and say, do I want to make this a career? You're selling yourself more than you're selling the company. You're selling yourself more than you're selling the product. Knowing the product is important, but people follow you. They don't follow the company. So you've got to become an anthropologist and say to yourself, I want to learn about that culture, that demographic. That demographic thinks like this. And I'm going to be the first one to tell you, I hate wearing suits. I hate putting on stinking ties. I hate it with a bloody passion. But you know what? If I go see them, I'm going to put it on. I'm going to go see them put it on. Because I'd rather make the sale, help the family, and come home with the bacon, right? The money, than to be like, nah, I just wanted to be casual. They're going to like me for who I am, or they're not going to like me. You're going to be broke with that mindset. That's what's going to happen. You're going to be broke with that mindset. So be willing to say, okay, I have to adapt. I got to get ready for that, right? Because of COVID-19, you want to prep for that world too. What do I mean by that? This is what I mean by that. Have hand sanitizer ready. Have a mask ready. Have gloves ready. I don't care if you believe in it or if you don't. I'm not even going to give you my perspective on it. I'm not here to do that. I'm not here to impose my belief on it. I'm not here to impose my belief on a quarantine, on a lockdown, on a Republican view, a Democrat. I'm not here to give that to you. I'm here to give you the psychology of sales. Show up with it. And I promise you, the person that doesn't believe it will tell you they don't believe in it. And if you don't believe in it, go ahead and take it off. But the person that does believe in it and sees that you prep for it will respect you for it. And I'd rather have it versus not have it. Have it ready to go. Have it ready to go. Make sure in your phone call, you let them know, I'm prepared to have a COVID-safe meeting with you. I'm certified. That word certified is a big word. Specialized, that's another big word. I'm certified to have a COVID-safe world with you, a COVID-safe meeting with you, man. I'm going to be coming with gloves, mask, and hand sanitizer. And I just want to know, ma'am or sir, right? Notice I'm already speaking ma'am or sir because I'm talking to that generation. I want to know, in which manner would you prefer for us to meet? I can meet in your home, masks, gloves, 6 feet apart from your table, right? Or I can meet outside of the front of your house. I'll bring a fold-out table. We can be outside in the open air, still meet the 6 feet distancing rules. Or, ma'am, I could stay in my car. You could stay in your house. All I would need you to do is come outside so I can visually verify that you are who you are. And from there, we can transact business over the phone. Which way would you prefer? That kind of stuff lets them know you're a professional. You're not new to the game. Even though you might be, you're at least getting coached by someone who's not new to the game. And they know that you're respecting their viewpoint. Does that make sense? That's the way you want to prep when you go to the meeting. Subscribe to if you're going to be out on the field, subscribe to the car wash service that costs like $20 a month where you can take your car in consistently, unlimited times to get it washed. Go and get it washed once a week. Go clean it up once a week. Make it look nice. Show them that you're a professional, right? You ever gone in an Uber that was dirty and you're like, what the hell? Like, for real? Most Uber drivers clean their car at least once a day. Most of them constantly air freshening it because that's their office. That's their office. Your car, in a way, is still the office to your client. You might not be having them come into the car, but don't think for a second they're not looking out the window to see what car's pulling up. Don't think for a second they're not looking out the window to see if you're showing up in a car that looks raggedy, full of dirt and dust and this and grime. And don't think for a second that they're not. Don't think it. And that old school generation right there, just so you know, some of them are used to walking you out to your car. They're not the have a good day, bye-bye, they stay in. No, that's old school. They're the, I'm going to walk you to your car and I'm going to show you from a respect standpoint, you're my guest, I'm going to walk you to your car. You don't think that when you open that car door, they're not going to be looking and seeing if it's clean or dirty in there? You don't think they're going to look through the windows to see if it's clean or dirty in there? Papers all over the place? No, they want to know that the person that they just bought life insurance with, the person that will be there when they pass away that'll deliver the check is organized enough and not going to have papers all over the place. You get what I'm saying? That's the world that you're in right now. That's the world that you're in. So understanding the psychology of them is very important. Let me now give you the presentation, okay? When I give the presentation of final expense, by the way, is there any questions about any of that topic before I move on? Feel free to ask, okay? When I give the presentation, number one, I bring with me a legal pad. I have a pad with me. I have yellow legal paper, not white, yellow. People that are visually impaired see better in yellow than they do in white. And when I'm writing with a black Sharpie. It's thicker. It's easier to visually see. I always have a black Sharpie with me. I have a black pen with me, and I have my pad. Now, something that I've learned that I encourage you to practice. If you don't practice this, you're going to shoot yourself in the foot. But I've learned to write backwards. So if I'm sitting and having a business meeting with them, they're across from me on the table, which means when I'm presenting like this, right? Like pretend this is on the table, and I'm doing it backwards. Actually, matter of fact, I could probably do it with you guys right now, so you guys can see what I'm talking about. Boom, boom, boom. Let me see here. Hang on one second. Hey, let's see if that works. Okay. So when I'm presenting, I'll say, listen, ma'am, you know, when I'm explaining final expense insurance, I'll say, here's the first question I ask is, ma'am, how old are you? Oh, I'm 67, she'll say, right? Okay. So the way final expense works is, if you're 67 years of age, we're going to give you coverage and protection all the way until 121 years of age. Now, the kind of coverage that we can give you is going to be anywhere from $2,000 to $40,000. And you're going to have this $2,000 to $40,000 of coverage the rest of your life. Now, how does this plan work? It's pretty simple. You make your monthly payment. And as long as you're making your monthly payment, if something should happen to you inside of that time period, we're going to pay your family this dollar amount that you signed up for in the form of a death benefit. And by the way, just so you know that this money is going to come to your family on a tax-free basis. Now, there is one way that you can tap into this money before passing away, and that's if you have a terminal illness. If the doctors declare that you have less than 12 months left to live, you'll be able to tap into this money within that time period. Now, the only way you would stop making payments is either you pass away or you reach age 100. Once you reach age 100, you no longer have to make payments any longer, right? So what's the pro to this vehicle? The positive is pretty cost effective. It doesn't cost a lot of money. Something like this is probably going to range anywhere from $70 to $100 a month. What's the negative to this vehicle? The negative to this vehicle is that it only pays out in the event of a death benefit or a terminal illness. Now, there's another product that I'd like to talk to you about that if it makes sense, might make sense for you to look into it, okay? This product is called a Guaranteed Universal Life. This product is gonna work the same way from 67 years of age, because that's how old you are, all the way to age 100. Let me ask you a question, ma'am. Is there longevity in your family? Is there is there anyone in your family that's lived past 100? No, not at all. Most people, my grandmother lived till she was 92. Okay, so if I give you coverage until age 100, would that make you feel comfortable? I can go longer, it just costs more money. So I typically go to age 100. No, age 100 is fine. Okay, perfect. The way this one works is very simple. This one's gonna give you coverage anywhere from 25,000 all the way to 100,000 or sometimes even more. So this one's gonna give you a greater amount of coverage than this one. Now, the way this one works is very simple. You make your monthly payment, and as long as you're making your monthly payment every single month, you're protected from 67 all the way to age 100. Now, how do you get access to this money within this time period? You're still gonna have the same death benefit. You still get this money tax-free, but you're also gonna have something else called living benefits. Living benefit means you're gonna be able to tap into this money if you develop cancer, stroke, a heart attack, or heaven forbid, you need a nurse to come and take care of you. Let me ask you a question, ma'am. You have children, right? Yes, I have children. How many do you have? I have 2 kids. Would you prefer they become your nurses if you need it, or you prefer they become the supervisors of your nurses if you need it? No, I would prefer they become the supervisors of my nurses. Does your daughter or your son have the finances to pay for a nurse in today's world? No, they don't at all. They're getting up and going. They're providing for their family. Okay. Would you like to make sure that your insurance gives you access to cash while you're alive so you can use it to pay for the nurse? Yes, I would. Okay. Listen, a plan like this, so that you know, costs a little bit more money than $60 to $70. A plan like this is probably going to range anywhere from 100 plus to even $200. But there's greater value in the plans. And some of these plans, not all of them, I have to check to see if you qualify, but some of these plans even have a return of premium option, which means you can get your money back after a 20-year period if you choose to cancel the policy and get all your money back. So what's the pro to this one? Pro to this plan, living benefits. Pro to this plan, potential return of premium. What's the negative to this plan? It expires at age 100 rather than age 121, which in all reality, I can help this plan go all the way to age 121 if you're willing to pay more money for that piece of money. So out of these 2 plans right here, ma'am, which is the one that makes the most sense to you? That's my presentation. That's my presentation. Now, you might say, well, Tony, don't you have a flip chart for this? I do. I'm not going to tell you that I don't. I'm going to tell you this. I'm able to tell the story by drawing it. And they're focused in on what I'm drawing versus showing them an actual flip chart and their eyes wandering through the whole flip chart. Why is the flip chart there? In my opinion, it's there for that new agent who still doesn't know how to do this and needs to use it to learn. Because if you're going to use the flip chart, what you're doing is this. You're still doing the same presentation, but instead of drawing it out, you're pointing it out. You're pointing it out. But you're starting to build that muscle memory, this habit. You're starting to learn to do this, right? You don't want to just point it out. You actually want to try to draw it with your pen as you're doing it. Because if you really want to get good at this, like you really want to build credibility, learn to do it this way backwards. Out of 10 people that I do this backwards to, at least 5 of them say to me, it's pretty impressive you know how to do that backwards. You really know what you're talking about. And let me tell you something. When people look for financial advisors, tax preparers, and doctors, they want to feel like they're with the best. And the best knows how to do things like this. That shows them this ain't your first rodeo. So this presentation that I just did right now, if I were you guys, I'd be doing 10, 20, 30 of these with your spouse at home. Literally just muscle memory. Get that muscle memory, get that muscle memory, get that muscle memory, get that muscle memory. Anybody have any questions about this presentation? No?
No, but that was really good presentation, Tony. And I'm gonna work on my biceps too, just so I can be swole like you, man. That's great. That was great, man. That was awesome.
I appreciate it, man. I appreciate it. But I mean that honestly, that's my presentation when it comes to final expense. That's how I initiate it, right? I build rapport. Let me bring this back up. Okay. So after I've done my intro, that's my presentation. And I let them decide. From that point forward, take out my laptop or take out my tablet, and what they tell me, I just start running quotes. That's just simple. I'm not talking indexing, cash accumulation. I'm not talking about any of that stuff. Those are two very simple plans that you want to be able to get in the market and sell. Here's the difference. Boom, boom, boom. Now you do those out of 10, six of them, 7 of them are probably going to buy final expense policies because, again, they're on a fixed income. But you might come across 1, 2 that can afford $150, $200 a month, who wants 30,000. Maybe all they want is 30,000 of coverage, but they like the living benefits. So they can get 30,000 final expense that doesn't have living benefits. They get 30,000 GUL that does have living benefits. But wait a minute, Tony, you've only talked about final expense companies. Which one would you use for GULs? There's 2 companies. North American has a GUL platform, and American National. Both of them have a living benefit platform. Both of them will do non-medical underwriting. Now, the one thing you need to know about a GUL is that they could ask for a medical. A GUL can ask for a medical exam. A final expense won't. Final expense is either approved or declined. GUL could ask for a medical. But those are the 2 ones that you want to look at. The reason why I said the ROP could possibly be there is because sometimes based on their age, the ROP rider is not even an option for them. So I never throw it out as a guarantee, right? It could possibly be there. What is there for sure? Death benefit and living benefit. Living benefit for that age bracket is not about cancer, stroke, or heart attack. It's about long-term care. It's about long-term care. So the language I'm having with them at that point in time is exactly that. My language with them is, when you hit 75 and you hit 80, 85, if you need a nurse to take care of you, right? If you need a nurse to take care of you, would you prefer that a licensed professional nurse be the one that takes care of you and your children be their supervisor, or would you prefer that your kids be your nurse and caregiver? No parent on the planet wants to burden their children having to wipe their butt. No parent on the planet. So you got to give them that reality check. This gives you access to that so that your children could be the supervisors of the nurse rather than becoming your nurse. And sometimes they say, well, what do you mean? I don't understand, right? I'll explain to them. I said, it's a very different feeling. It's a very different feeling when a child is crying in the arms of their parent than it is when a parent is crying in the arms of their child. That's a very different experience. That's a gut check feeling. So if and when it comes to the point that you need assistance in getting out of bed, changing yourself, dressing yourself, feeding yourself, using the restroom, would you prefer that you have the finances to make sure that there's someone there to help you, where your children could oversee, supervise, and make sure that your quality of care is good, and at your home? Or would you prefer that your children stop their lives to become your nurse? Not a single person says to me, I want my kids to take care of me like that. They want their kids to be there, but they don't want their kids to be the one doing the job. And this insurance, ma'am, it gives you the option. Either you leave the money behind to cover the final costs, or you use the money to cover that assistance. But the choice, ma'am, is yours. Or the choice, sir, is yours. It's always ma'am or sir. Millennial generation is different. Millennial generation, they love to be talked to by their first name. Right? They love that. Edgar, bro, my dude, how you doing, man? Let's talk. They love that. If Edgar's 65, it's sir. It's sir, and it's ma'am. That's just the way their generation thinks. You got to understand that. So you got to learn how to adapt to people's cultures. You got to understand to adapt to their generation. That's my final expense presentation. Legit, that's 100% my presentation. Anybody have any questions?
That's it?
That's it.
That's it.
Thank you, Tony, for just simplifying things. And I think, honestly, let me point out something. So that's your presentation, right? You spend a lot more time coaching us and teaching us the preparation of doing the presentation, the mannerism, the expectation of the client, understanding that generation pretty much. So I love it.
No,
I love it. Thank
absolutely,
you.
it simplified it very, very well for us, man.
Good, good. So let's do this. On my clock right now, it's 9:53. I'm sure people could use a restroom break or just a break in general. I'm gonna pause. I'm gonna pause right now. Why don't we get back in? It's 9:53. Why don't we get back at 10:10 my time? So that's a 17-minute break. Gives people time to use the restrooms, maybe get some coffee or something of that sort, and we'll get started right back away. As long as everybody can give me their commitment that they can be back at that time. I would recommend don't log off. Just mute yourself, mute the camera, and just be back at that time. So we're not waiting for other people to come back in. Because believe it or not, when people log out and they log back in, I'm ADD. It's like it stops me from what I'm doing when I see that name pop up. So just don't log off, mute yourself, turn off your camera, and then let's get back on right at 10:10 Eastern time. That would be 9:10 Central time, and what 7:10 Pacific time, if there's anybody even here from California. All right, guys, good? Okay, cool. All right, so we're back from break. Okay, you know, something that I want to get your feedback, but I want to point this out. This is something that, yeah, no, not full screen. Get back. Speaker view, there you go, okay. Something that Beverly just mentioned, and it stuck out to me what she had said. Again, this is why I don't mind you guys commenting, because you know I can talk for hours about this industry. I go on autopilot, like I know like the back of my hand. I've done it so much. But something that she pointed out that I really want to emphasize. You know, she said to me, "That's it, right?" We did the presentation. She's like, "That's it." Like, man, you spent so much time with the prepping, the psychology, the this and the that, and the presentation is so easy, right? Like that's probably what you guys were thinking. And this is the best example I can give you, this best analogy that in my opinion would make you go, oh, I understand, I get it, right? My daughter right now is taking ballet, and she's prepping for one recital that's in June. She started this in January. You know what that means? That means from January to June, for 6 months, she goes twice a week to the ballet academy. Twice a week, she role plays and practices this recital. She stretches out at home. She's working out her muscles. She's practicing the routine. I would tell you she probably practices the routine 5 times a week. We're talking about 26 weeks of practicing this routine. 26 weeks of stretching, 26 weeks of prepping her body, her muscle memory, her coordination, her memory of the role, the routine, all for this. You ready? All for one 5-minute recital that she has in June. One. And if you think about a professional dancer, right? You think about that. How often do they have a recital and a recital and a recital and a recital and a recital? Just practice for that one 5-minute presentation. And that one 5-minute presentation is what makes them money. They don't get paid for the practice. They don't get paid for all the endless, you know, hours of, you know, working out their muscles and getting physically fit and working out their, you know, their flexibility and practicing the routine. They don't get paid for the busted up toes that they have, and you know what I mean, the ice packs. They don't get paid. They get paid a fortune for that 5-minute dance, right? You look at, for example, the Super Bowl. Look at the Super Bowl 2 years ago, right? When it was Shakira and J-Lo that performed. How long was the halftime show? 5 minutes, 10 minutes? 10 minutes tops, I think. And you got to ask yourself, holy crap, how much did these guys practice? How much did they go over and over and routine? And let's get up early, let's work our muscles, let's practice, it's this, it's that, or it's this, it's that, it's this lift, it's this, just let's throw that. Oh my God, I hit the floor. No, you're not doing it right. You got to do it this right. You're not doing it on the right count. For like a 5-minute halftime show. That probably paid them millions, right? Now, if you ask yourself, did they really get paid millions for that 5 minutes? Or did they get paid millions for the countless hours that they did before? right? They're getting paid millions, and maybe it's and that 5 minute is important, but it was all that prep work that they're getting paid for. It was all the practices. It was all the, you know, like sports, the same exact thing. Look at sports, right? How many countless hours are people going to the court and throwing that ball and throwing that ball and throwing it? My son just finished basketball right now, and he won champion. They won the championship this past Wednesday, and it was an hour-long game. It was an hour-long game. Mine, guys, 11 to 14-year age, right? And it was like intense. It was like intense, like cutthroat. I want to fight some parents type stuff, right? But what was it really that led them to the win? Was it that 1 hour game, or was it the countless weekends that he and I were out there throwing that ball around? The countless Wednesdays after school that we were going to practice, the repositioning, the do this, to do that, for game day. So yes, I'm spending a lot of time with you guys with all of this prep, because I want you to understand all of that stuff is a lot of the times the deal breaker between making the sale and not making the sale. All for this little itty bitty, 5-minute presentation that I just gave. All for this little itty bitty. It's saying Mr. or Mrs. It's showing up with a clean car. It's shaking their hand and looking at them in the eyes. It's wiping your feet at the door. It's accepting their water when they offer you the water. It's understanding the psychology of how that generation thinks so that you know how to respond to the way they are. It's putting on that tie. It's ironing that shirt. It's putting on that dress. Those little itty bitty things that you might overlook, because you might think to yourself, the shirt doesn't matter. And in the grand scheme of things, the ironed shirt, right, the tie, in the grand scheme of things really doesn't matter to the value of that policy. But them buying that policy because they feel comfortable with you being their agent does matter. And that tie does matter. That iron shirt does matter. Showing up on time does matter. Looking at them in the eyes does matter. Saying sir and ma'am does matter. It matters to them because they're looking at you and they're interviewing you. They're saying, can you represent me when I'm not here? And are you credible enough and professional enough for me to trust in the fact that what you're recommending to me is going to provide and protect my family? This is the part that I can tell you I genuinely love about what it is that we're doing within TKO Financial Network. I cannot stand practice companies' closeout mentality when people were just rushing to turn business in, not knowing what they were selling, not really giving proper explanation, not really getting the right information. Don't worry, we'll just put this information in, we'll change it later. Let me not go over the policy. Let me not review it with you. What if something happened to those people and they weren't properly protected and didn't have the right plans? Could you actually look at yourself, look at that family in the face and say, man, I didn't take the right time to really recommend them something that made sense to their budget. I recommended something that was overpriced, but because I was going after a promotion and I just needed the business to be submitted, I sold them on an overpriced policy that they canceled 2 months later, and then on the 3rd month they passed away. Could you live with yourself if that actually happened? I don't think many of us could. I don't think many of us could. So I'm giving you all this prep work, guys, because it'll become muscle memory and you'll overthink it. But it's that important, all that little itty bitty stuff. It's that important, all that type of detail stuff. It really genuinely is that important to understand that kind of psychology for this little presentation right here, all to get here. But let me tell you what I remove. I want to get back into it, right? Let me tell you what I remove from my meeting. I don't do a dime analysis in that meeting. I don't do a budget in that meeting. I don't do that. I introduce what I do. I do give my what I call my approach language. I make sure that they understand I also work retirement planning, right? But I don't do a budget. I don't do a dime analysis. That generation, remember, final expense coming from lead, middle American market, fixed income. They're on a budget. What they're trying to figure out is how much coverage can they get for the money they're willing to spend. Dime analysis is irrelevant at that point in time. It's how much can I get? How much coverage can I get relative to what I'm willing to spend? So your job is to present. Which of the two are you more interested in? Oh, I'm really liking the way that GUL works, but I can't afford $100 a month, man. My budget is $50. Okay, great, no problem. I'm gonna digress right back to final expense. But if they can afford the $100, 100, 150, 200, run them a number based on their budget and show them this is how much final expense you'll get for this budget. This is how much GUL you'll get for that budget. And then all you're doing in the quote is you're kind of playing with the numbers and tweaking it up and down, up and down, up and down until you get to a place where they're like, okay, I can afford that. It's a budget conversation. Dime analysis is irrelevant then. You're not going to say, well, how much do how much you want to spend on your florals, on your funeral, on your, how much you want to spend on the casket. You're not having that conversation. They want to get the most that they can with the budget that they're willing to spend, because they acknowledge whatever dollar amount that is, they're removing that dollar amount from their accessible discretionary income for the rest of their lives. That's the commitment that they're making to themselves. So my presentation is a hell of a lot easier there. Now, couple things as well too, couple pointers for you as well too. Ladies, you're gonna like this. Gentlemen, you might not, but some gentlemen might, right? Like, to me, it's important, right? Before you go out to the meetings, make sure you have clean nails. We're about to look at your fingers. We're about to look at your fingers as you're presenting. We're about to look at that. Make sure your nails are cleaned. So you know what that means? Ladies, get your nails done. It's kind of, it's kind of funny. Like last week I went to the headquarters of one of the IMOs that we sell products with, right? And I tell Sandra, come with me, because they're gonna teach us something administratively that we're gonna capture. We're gonna take over this part of the business administratively. I gotta get my nails done. What? Like what? Like, I don't relate to that world, right? Like, what are you talking about? No, we're going to Miami. It's a 2-hour drive. I gotta stop. I gotta get my nails. I gotta do this over there. There's no way I'm going to that office. I'm the representation of you and this huge organization of people that are following you. I can't come in there with my nails, And I'm like, I had to step back for a moment and say to myself, does it matter to me to make sure that my nails are clean when I go see a client? It does. So I understand now her perspective. So ladies, make sure your nails are done, right? That's a sign of professionalism, apparently to the female, right? Gentlemen, make sure your nails are trimmed. Like, bro, you want to lose a client? Show them nails that are eaten. Show them nails that you're biting, rather than nails that you've actually used clippers on. And you know what I mean? Like, don't get me wrong. I'm not telling you to go get manicures and, gel them and make them nice and shiny or what. I'm not telling you to do that. If that's your cup of tea, go ahead and do it, but have clean nails. Have clean nails. I'll tell you, when I first got into this business, my dad was a mechanic, right? So I know how to do a lot of things, guys. My dad was a mechanic, a carpenter. Like, Cubans know how to do all kinds of stuff. And so I learned a lot, and I used to work on cars a lot, and I still to this day work a lot on cars. I like it. My brother's amazing at it. He took it and went to a whole nother level than me. But why am I telling you this story? When I first got into this business, I still worked on cars, and one thing that I learned, grease monkeys. You ever work on cars and you try to clean your hands and it's hard to get that grease off? When I got into this industry, I realized I got to wear gloves every time I work on cars, because there's absolutely no way I can work the entire weekend on my car, right? If I'm doing stuff to it, changing the brakes, doing this, doing that, and then show up Monday, no matter how much I clean my hands, there's always going to be a little bit of grease, a little bit of dirt, a little bit of grime that's still on the nail or on the fingers. Like, I can't have that. I gotta get rid of that, right? I gotta make sure that these are clean, because these are being looked at constantly when I'm on the field doing this. Constantly when I'm on the field doing this. They look at that, they look at that, they look at that, right? Gum. Take gum with you. Literally put some gum in your mouth before you go to the meeting, and don't be this guy. And you're playing with it and you're this. No. Matter of fact, don't do gum. Do a little spray mint. Don't, I don't want you to accidentally be the freaking cow in the house. Again, millennial generation doesn't see that as too bad, but the baby boomer generation, that's rude. That's very rude to them. You know what I'm saying? It's almost like you're low class in their mind if you're doing that. Mint, right? Take a Tic Tac, put a mint, spray mint, whatever you're gonna do. There's nothing wrong with putting on a little bit of cologne before you go into the meeting. Guys, you're trying to seduce them to want to work with you. You have to seduce all their senses. Visually, you have to look professional, right? From a nose, you got to smell good. You got to smell professional, right? The only sense you're not going to please there is their mouth, unless you're bringing snacks with you. Like, you know what I'm saying? But those little things, I promise you, make a world of difference when it comes to seeing your client. You're gonna wear a suit, gentlemen, go get it tailored. Don't have the suit wear you, make sure you're wearing the suit. Same thing that was taught to me at a young age. And yeah, I was that guy. I've made all those mistakes. I didn't know any better, bro. My parents don't know any of that stuff. They've never worn, I think my dad's worn a suit twice in his life. They were both to funerals, you know what I mean? Like, they don't know that world. I had to learn that, you know what I mean? And it was an older gentleman that taught me that. You know, I'd show up to work at Wachovia Bank with these suits from JCPenney's that I got on Black Friday for $99. But I didn't take the extra $15 to get them tailored, and they were bigger on me. Why? Because I grew up in a generation, you guys remember the 90s generation, you go to high school, right? The baggy pants, right? Like, to me, I could correlate that to the suit world too. Like, I'm wearing a suit, but at least it's my style. No, get your stuff tailored. Find a tailor, build a good relationship with that person. 10, $15, get your pants hemmed, get your suits done. You know, you don't got to buy expensive stuff, guys. You really don't. Genuinely, guys, you don't have to buy expensive stuff. You genuinely do not have to buy expensive stuff. You can go to JCPenney's. You can go to Macy's. You know, I typically, like, when I was on a budget, it was Black Friday for me. Black Friday for me, suits were on sale. I'm going after it. I can go after it. Marshalls and Ross, you can buy the button downs with a tie. You know what I mean? Learn how to do a tie, for goodness sake. Don't do the clip-ons, please. Learn how to put a tie. It's not hard. Go to YouTube. There's like 50 different videos on it. Right? Trim your beard. Look right. You know what I mean? You know, get a good haircut. The tape line. Believe it, that stuff matters. That stuff matters. Right? I'm not gonna give too much advice for the ladies because I don't know how to, you know, look right. You know what I'm saying? Like, look professional. Pueblo does a great job looking professional. And I only say that because I've actually spent physical time with her. I don't think I've spent physical time with a lot of you all. Looking here. Right? So I'm sure she knows exactly how to coach you all in that, if that's something advice. But, you know, you get what I'm going with. Look professional. Don't go crazy with your colors. Gentlemen, old school generation. You know what old school generation means? White.
Don't go crazy on that cologne either, Tony.
100% right. You're right. You're not trying to take a bath in it. You're right. You're not trying to take a bath in it. You know what I mean?
If I can piggyback off of it, it's like it's in my community, especially if you go with any Europeans, if you show up with nails not done or with jeans, for example, in Polish community, if I would show up with jeans, they would not really look at me professional. It would be much harder to close. So yeah, I can totally agree with that. Heels, you know, nice pants, clean look, most definitely.
And the nails used neutral colors, not flashy colors.
Yeah.
100%. Speaking of the color, right? You see what they're saying with the nails, the colors. Susie, you wanted to say something?
No, the nail colors, you have to be very, very subtle, not the red ones, because you're not trying to show your fingers. You're trying to have them look at your finger and guide them through the letters. Yeah, if you are showing something to them.
So this also ties in the advice I'll give you. And I was about to give that with regards to those colors that the gentlemen wear. Your shirts, right? White or blue. That's that presidential look. White button-down shirts or blue. Your ties, red or blue. You shouldn't be doing those crazy, you know, pleated color, different imprints. You know, no, that's not that generation. That's not that generation, guys. I promise you, that's not that generation. You want to figure out what kind of suit you should wear, take a look at what every single president has worn for the last 20 years. That's what that generation looks for. It's called the presidential look, right? Blue suits, black suits, cream colored suits, white shirts, blue suits, red ties, blue ties. It's that kind of world. It's that kind of world, right? If you wear blue suits, you're wearing brown belt, brown shoes. If you're wearing black suits, you're wearing black belt, black shoes. You're not wearing black belt, brown shoes. You're not wearing a black suit with brown shoes. You're not doing that. You're not doing that. And this is more to the gentleman than anything. If you want more advice on that, let's talk offline and I'll kind of coach you through that world, because that generation is old school. And no matter how much you might think, you know, I shouldn't be judged, people will judge. We are human beings. We're going to judge no matter what. I'm just teaching you what that generation looks at. I'm just teaching you what they look at. And Susie's 100% right with regards to the ladies with their nails, right? So you got to ask yourself, right? Do you want to show off your style and your this and your that, or do you want to work in the financial services industry, make a crap ton of money, and you know what I mean? So all I'm getting at is that there's a time and a place, and some adjustments have to, you got to be willing to make some adjustments for the industry that you're going to work in. That's what this industry calls for. That's what this industry calls for. If you're completely adamantly against it, because the way you want to dress is the way you want to dress, and you want to be that way no matter what, and it's not in alignment with what I'm advising you, then you might not want to work the final expense world. You might not. You might want to work the mortgage protection world, stay in the millennial generation. I'm just being very honest. Those are the things that you need to prep for and anticipate. Okay. A couple things you want to prep for are this. I'll tell you this. Couple things you want to prep for. And I was having this conversation with Wee yesterday. You're gonna be nervous no matter what. There's nothing I can do to remove nervousness from that meeting. You're gonna be nervous. What I can do, however, is coach you and guide you on the things that you need to start making a routine so that those aren't the things that break you when you're nervous. Some of you guys are saying to yourself, well, I'm taking notes. I can always refresh on my notes. Listen, when you're on the phone with somebody for the first time, when you're in the meeting, those notes that you just wrote, guys, that becomes a blur. You can't even find what you're looking for on that paper when you're in action mode. You can't even find it. So what I can do is tell you the things that you should prep to do before you go to the meeting. You should prep. If you're bringing your laptop and your phone is the hotspot for your internet, that's one thing you have to assume. The millennial generation, they might not have Wi-Fi. So don't assume that they have a Wi-Fi. Make sure your phone has Wi-Fi or you have a device. Invest into yourself, right? Like I have a little Wi-Fi pack with Verizon, like $20 a month. I have that. When I go out to the field, I bring it with me because if they don't have Wi-Fi, I still need to get on the Wi-Fi, so I have it with me, right? But prep your computer to connect to your phone. Literally turn on your Wi-Fi at home and make sure that it finds it so that it's easy to find when you're there, because when you're nervous, it's hard for you you're stumbling around the computer. Oh my, it's going to make you more nervous. It's going to make you sweaty. You know what I mean? Like prep your computer for that, prep your laptop for that, prep your tablet for that, whatever it is, prep for it, prep for that, right? Open up your computer and save the websites to run quotes on your bookmarks. And get the muscle memory. Open up your internet, boom, find this. Open up your internet, boom, find this. So you know where it is, so it becomes muscle memory to you. All you're doing is you're flexing your muscles on the things when you're in game time, you don't want to think about. You want your muscles, you want your body to just be able to do it easily. Open up the quotes, run quick quotes, play with quotes. Age, date of birth, like do it, not 30 times, not 40, 50, 60, 70 times. Run different quotes with the applications. It's not about memorizing the price for each point. It's about getting your body used to running quotes and knowing where to click, where to this, where to that. I think on this call right now, Rubiel's with me, Frank's with me, Puebly's with me. I'm trying to think of people that have seen me do actual closing meetings. Wee's with me, Lamont's with me. Okay, I think all of you guys have seen me share my digital F&A when the client commits to taking applications. I can do an entire application in 10 minutes, maybe less. You know why? You know how many times I've done an application on that document? I know that document like the back of my hand. I know exactly where things are. But do you know what I also realized that I needed to do? I needed to practice it behind the scenes first, because there's nothing more unprofessional than you go to the meeting, the client commits to taking the application and you don't know how to open up the application. You don't know where it is. You don't know where the things are. You don't know what you're trying to capture. You don't know, like, holy crap, you lose credibility. You're not trying to lose credibility. You want to show them, man, this was an easy process. It was a smooth process, right? You're very professional. I feel very comfortable working with you. They want to feel that. Even if you're brand new, they got to feel like they're working with someone who's been doing it for years. They have to. So it's not what you're doing in the scenes, what you're doing behind the scenes. So practice getting your laptop on the internet, using your hotspot on your phone. Practice opening up the website to run the quotes. Practice this presentation. There should be 50, 60, 70 of these sheets right here. You know what I do with this? This is my business card. This is my business card because you know what I do when I'm done with the meeting? I do this, ready? I tear it out. I put my business card on there. Here you go. Now they have the presentation right there for them to look at if they decide, I want to think about it. There it is. Here it is. It's for you. Boom. Take it. No problem. Right? Practice that. Go buy yourself some legal pads and go do it. Go do it 5, 6, 7, 8 times with people in your family. And then you know what you want to do? You want to ask your family, do you understand what I just explained? Because here's the cool thing. If they understand it, that means that your client will understand it. Don't just think that because you understand it, that they're going to understand it. Talk to people that don't know anything about it and be like, hey, did you understand it? Can you explain it to me again? That's how you're going to measure, am I explaining it the right way, right? Be aware of how fast you're speaking. When you're nervous, you tend to speak fast because you just want to get through it quickly. No, slow down, take a breather. What's the objective here? Is it presenting or is it closing? It's closing. You need to slow yourself down. You need to enunciate, right? Practice this. Believe it or not, this is something you need to practice. Some of y'all always have these faces like you're ready to kill somebody. Practice this. Hi, nice to meet you. My name is Tony Martinez. You have a lovely home, right? Thank you so much for giving me the opportunity to chat with you. I say that. Thank you so much for giving me the opportunity to talk with you today, right? I hope I can bring the value that you're looking for. That's appreciation. Showing appreciation is a big deal, guys, especially to that generation. There's nothing wrong with that. There's absolutely nothing wrong with that. Show the appreciation. Thank you so much for having me. I really appreciate it. You have a lovely home. Right? Let's talk about insurance. You mentioned that you're looking for insurance. Talk to me a little bit about it. What were you looking for? Right? Look at the face. You're up. You're alert. Your eyes are open. Right? Your posture. You're not doing this. Well, you know, what are we going to talk about today? This isn't what you're doing. This is what you're doing. This is what you're doing. And you're leaned in forward. There's a psychology to that. You lean forward, they lean forward. You lean back, they lean back. If you want them to say yes, this is what you do. Are you ready? Right? You're looking to protect your family, right? Look, a couple of y'all already started nodding your head just because I did. There's a psychology to that. If I want them to focus in, I'm going to lean in. If I want them to be relaxed, I'm going to relax. If I want them to say yes, I'm going to nod my head. There's genuinely, I promise you, there's a psychology that you can look at it online. There's a psychology to that type of sale, but you got to practice that. Today's a long closers college, a very technical orientation, not orientation, a very technical clinic. But this is not going to be what makes you the professional. It's what you do on Sunday when I'm not running training, on Monday when I'm not running training. I want your friends and family and your kids to call me up because they're so annoyed because of how much you're role playing this. That's what you need to be doing. It's not what you're doing when you're in general training with me. It's what you're doing off the court. It's 100% what you're doing off the court. You know what I mean? Kobe Bryant said something in an interview. He said, I want to work with gym rats. If I got to convince you to go to the gym, I don't want to work with you. I'm not going to lower my standards to you. I want to work with people that want to be at the gym. I don't got to fight for them to get at the gym. Why does that matter to him? Because he realizes it's what you're doing off the court that determines what you do on the court. So if I got to negotiate with you, if I got to haggle with you, I got to fight you to role play what I'm teaching you, if I got to fight you to start flexing your muscles and creating that muscle memory off the court, what makes you think I'm going to want to go and work with you on the field? You're not going to learn this business just by listening to an instructor like myself tell you the way it goes. You got to take this information and say, okay, coach, I'm going to role play this, man. I'm going to do it over and over and over and over. And the other commitment you have to make to yourself is this. Yes, I want you to role play behind the scenes, but I also want you to set yourself on a deadline of when you're going to go out to the field and present. Don't think I got to master this behind the scenes before I go to the court and actually try to perform. No lie. If today's Saturday and we're running this college, I would want everybody out by Wednesday. But that means you're spending Sunday with your family and you're taking a couple hours to role play this behind the scenes. You're spending Monday role playing. And then you know what you're doing on Tuesday? You're getting on the phone. As nervous as you might be, you're getting on the phone because you're going to be out on the field Wednesday to implement what you just learned. You want to solidify what you just learned? Go and implement it. if you don't go implement in the next 3 to 5 business days, guys, if you don't go implement, you're gonna learn that you're gonna forget 90% of what I just taught you, because you didn't take it from here and apply it to your physical body out there. It's muscle memory. Everything is muscle memory. Everything is muscle memory. Everything. So practice that. Getting on the Wi-Fi, like I said, running the quotes, adjusting the numbers back and forth, clicking between companies, explaining the company, right? Explain the company, know about the company history. Don't expect for me to tell you the company history. Know the company histories. Mutual of Omaha, how long they've been around? What are they rated? Oxford, how long they've been around? What are they rated? Right? Understand that piece. Understand that piece. Get used to that. This presentation that I just did, guys, I mean, I'm telling you, there needs to be 40, 50, 60 sheets of this on the side of your bed because of how many times you've done it. That needs to be there.
Can you put that up closer, Tony, so we can take a picture of it?
Of course. I mean, there you go. Go for it. Let me smile. Right? That needs to, guys, you need to get used to that stuff. That stuff, what you do off the court is going to determine what you do on the court. It's going to do it. So let me get back into it, because now we're going to work on scripts on the phone, then we're going to work on quotes, then we're going to role play what it is to be in the field. Okay. We're going to be taking lunch at 12:30, my time, Eastern time. But at 12 o'clock, Rubiel is going to give you guys a presentation on some of the companies that we have from a final expense standpoint. Our lunch is going to be an hour and a half, so from 12:30 to 1. Then at 1 o'clock, we're going to have Minor on, and he's going to do I'm sorry, not 12:30 to 1, 12:30 to 2, an hour and a half. My apologies, I keep getting that confused. So from 12:30 to 2 Eastern time is going to be lunch, an hour and a half. And then at 2 o'clock, let me see here real quick. At 2 o'clock, we're going to have, so I'm just confirming it right now. And Minor, shoot me a text message if you're hearing this message as well too. But at 2 p.m., we're going to have Paul, who runs a pre-licensing company, talk about his program for the non-licensed agents to do a training session on his program. It's a pretty cool program. He does a Q&A session on Saturdays, and he's going to talk about that. We'll probably talk about that for about a half hour. That'll be from 2, and then around 2:30, 2:45, we're going to have Minor Ramos come and talk about mortgage protection in the companies that we represent. And then from that point till 6 o'clock, I'm going to be doing the same thing that I'm doing now, but instead for final expense, we're going to talk about mortgage protection, because now you've got a different psychology of sale, because you got a different client, you got a younger client, and I'm going to teach you the opportunities to find there. So I believe Minor is on. Shoot me a text message, Minor, if you got that with regards to the time, because it changes a little bit from what we talked about. Good, awesome. Thank you so much. I appreciate that. So let's keep going. Let's talk about the script, okay? Okay, the kind of leads that you're gonna buy are 2 types of leads, right? Both of them is really the same script. One lead is going to cost you $9 to $11. Another lead is going to cost you $28 a lead. What's the difference between them? Caliber and quality. And today I'm not really here to talk about the caliber and quality of each of them. That's a different training. But just understand that there is definitely a bigger value. There's definitely a difference in the caliber and quality between the $9 to $11 leads versus the $28 leads. There's a massive, massive difference. And it's really how the lead is obtained, how the lead information is obtained, okay? What I will say this about lead generation, if you want to go out and explore your own companies for leads, number one, avoid telemarketing leads. Don't do telemarketing leads, because telemarketing leads is basically a call center in another country that's randomly cold calling people and getting them to agree that they want final expense insurance. The call center agent is convincing them, versus exclusive, what's called click leads, exclusive click leads or funnel leads, where the person themselves went looking for insurance and submitted their information for somebody to call. That's a whole different. I'd rather talk to people that are looking for insurance than talk to people that were convinced that they needed insurance all day long. Telemarketing leads are typically a heck of a lot cheaper for that reason, right? You want to use click leads, funnel leads, exclusive leads. So that's the kind of terminology you're looking for. 99% of them are found from Facebook. The difference between the $11 leads and the $28 leads is simple. $11 leads are not in real time. That lead was obtained within like a 3 to 7 day period type scenario, number one. Number two, the questionnaire that they filled out came from Facebook. And the downside to a questionnaire from Facebook is that there's an autofill feature that Facebook has, which captures the client information the moment they click into that advertisement. So sometimes that person clicks into that advertisement, their information gets autofilled, and then they click out because they're not interested, but it's a lead that you received, right? That's why they're $9 to $11. But then they're also not in real time. Is there a lot of success in that world? There is. I'm not going to tell you there's not. There's a lot of people succeeding in that world right now, but I just want you to understand how they work, right? That's a list that you got to be willing to work intensely. Call 2-3 times a day. You know what I'm saying? Leave text messages. You got to be willing to do a drop by. You got to really work that list. And then there's the $28, what I call high intent leads. Those leads are still generated from Facebook, except the questionnaire is not on Facebook. The advertisement is on Facebook, but the advertisement redirects them to a website outside of Facebook. Then the questions that are in that website, the only way those questions get filled in is because the consumer filled them in manually. It wasn't auto-filled. That means they took time and energy to read the questions and answer the questions, and they answered multiple questions. That's a higher intent lead. Plus, it comes to you in real time. So when you get it, it's a minute after they filled it out. It costs more money for those types of leads, but there's a lot of greater return from those leads. Whether you're using one or the other, doesn't matter. The script that I'm going to give you is the one that you want to be using. So let me open the script, and then I'm going to talk about the psychology behind the script. Here we go. So there was a company back in the day. Okay. Let me start with this. I don't like to typically give tribute to myself on things that I teach you guys. A lot of things I learned from other people. However, this, I actually created myself. So I'm going to kind of pat myself on the back in this, because if this works, I'm going to be really excited. Okay. But there's a company there's a company called AIL, American Income Life. You guys ever heard of that company, American Income Life? All right. Yeah. Let me see. There we go. Okay, good. I see a lot more faces now. Okay. So American Income Life.
Tony.
Yes, ma'am.
Ola is very familiar with them.
Oh, yeah? Okay. So you came from there. You did a little bit with them.
That was my start. That was my original start in life insurance industry, American Income Life.
Gotcha. Now, let's have this dialogue then, if you don't mind, because I'm pretty sure it's AIL that did this. They used to have this packet that they would give. It was like a kids program that they would solicit and offer for free. Am I right? Can you talk about that? Can you talk about that packet?
Yes, they had a little package that you can utilize as if your kids would disappear, and you need to use it as an Amber Alert, where you could put a little picture of your kid, and also you put height and weight, color of their eyes, or color of their hair. So then when something happens, you don't have to look for stuff. You just update it once a year, which was a entrance for you to come back again. And you know, it's very beneficial. So that would be one part of the script. So yeah, and I remember when I started there, they gave us a week. We had actually a 5-page script to learn, and we were recorded. So they were actually requiring you, before you went into a field and you had an access to the leads, that you had to go in front of a camera in the room in front of 2 managers, and you would have to go through the script. They would ask you questions, distract you. So you had to have a very good muscle memory for that script.
There you go. Now that package was free, correct?
Correct.
Was your script attached to that? You get this free complimentary thing, right?
Correct.
And the psychology behind that was people would want free, therefore they'll schedule to obtain that.
Correct.
And then
correct. So they would give you the child packet, and on top of it, they would give you 2,000 accidental certificate, which was only good for 1 year. And then afterwards, you would actually have to pay for it if you would want to keep it.
And what were you trying to do when you were in that meeting, aside from offering them that free packet? What was your end goal?
To sell life insurance, the whole life insurance that they're offering, or term insurance, which was extremely expensive.
There you go. So about a month ago, thank you so much for that, Ola, by the way. So a couple of months ago, where am I at? Yeah. Let's do this, sorry. How do I do that? Yeah, I'm sorry. There we go. Okay. So a couple months ago, it was like 2, 3 in the morning, and I was just kind of thinking about these scripts and the scripts and the scripts. And it just hit me. I was like, man, I got an idea that I think could really work and take off. And so what I created was a legal packet. I call it the Kaizen Soulmate. We're going to go over here shortly. What it is, it's a packet that has a section where the client could fill out their assets and liabilities, a section where the insurance agent could write down their contact information, a little third-party letter from the insurance policy to the insured, almost humanizing the insurance policy. But the most important thing that it has is the very back, which is legal documentation, right? A power of attorney, a last will and testament, and a medical care directive. 3 very important documents that people in the middle American space 9 times out of 10 don't have, and 9 times out of 10 feel that they need to pay a lot of money to obtain and talk to some type of an estate planner. And so the hook is very similar to what AIL is doing. In the script is, I just want you to know you qualify for this state-approved packet that includes X, Y, and Z. So whether you have your insurance or you don't, I just want you to know I'm in your area and I'd love an opportunity to stop by and drop it off. And the psychology behind it is the client's gonna say, I really want that packet. I love what it brings, it's free, why not, right? They're gonna say yes because of the free, the goodie, the freebie. Your objective at that point in time is to do what? Build rapport with them and try to see if you can open up an insurance case, right? It's not about giving away free packets, it's about getting in front of people, right? And so that's the psychology behind it. I can tell you this, guys, right now, this week alone, I bought 23 high-intent exclusive leads. 6 people so far have responded that they're interested in that packet. And now it gives me 6 meetings to physically see people, shake their hand, and again, begin that art of seduction, where I'm selling my personality, selling who I am, and getting a chance to get them to open up about their insurance needs. But it all starts with what? The packet. It all starts with the packet, the packet, the packet. So what you guys are going to see is that after this training, I'm going to put on on our chat room, I'm going to put the PDF of that packet there for you guys to grab, use it. I want you to use it. It's designed for you. Now, what you do with it is up to you. If you're lazy and cheap, you'll print it out, you'll staple it, and you'll bring it with you, and that's it. If you're professional and you understand what it is to anticipate and prep for a meeting, you'll invest a little bit. You'll print it out on cream-colored paper, okay? You'll get it bound at an Office Max or a Staples, put a nice folder on it, and give it a professional look that also includes your business card. That's the package. Some of you won't even use it. Some of you are gonna be just like every other insurance agent. I'm coming with a quote and that's it. You got to stick out, guys. There's so many people out there that are selling insurance. You have to stick out like a sore thumb and bring value. You got to bring value to them wanting to do business with you versus the other guy. You have to bring value. It's not about the quote. It's not about the price. It's the value you're bringing to the table. Just like TKO is an independent platform. I know you guys can go and contract anywhere else that you want to, but I got to bring you enough value that you can say to yourself, I know I can go, but I'd rather stay here because of the value. The value. Same thing with your consumer. Same exact concept, guys. So let me go through the script with you, and then we'll go over the packet. When should you call a lead? The moment it arrives. That's the #1 question a lot of people like to ask me. When should we call the lead? The moment they freaking arrive. But I work a full-time job. The moment that they arrive, try to make every effort you can to call them right then and there. Is there any way to speed that curve? Yes. Use the TKO CRM that we put together because it starts to text message all of your leads instantly the moment you upload them whether you're in a meeting, whether you're at work, whether you're busy or not, it begins that communication. So the consumer, the prospect, the lead feels like it's you texting them right away. Out of 6 meetings, guys, I've scheduled 3 of them because the automation text messaged them and they started responding back. And the only reason I knew to respond back to that particular person was because they text messaged back. The CRM is amazing with regards to that and it's so cost effective. And no lie, guys, there shouldn't be a single person that's not subscribed to the CRM. There shouldn't be a single person that's not subscribed to the CRM if you want speed to be in your business, if you want to succeed. And the investment on that is nothing more than $50 a month on a month-to-month contract. This is not about generating a profit. This is about covering the overheads of that software and giving you the ability to sell more, sell more, sell more. Success needs speed. Speed and technology go side by side. So leverage that piece, okay? Here's the script. I'm gonna go through it right now, one time all the way through, and then I'm gonna go back and I'm gonna chop it up into pieces and give you the psychology behind it, okay? So the prospect's name is John. The agent is Tony, me, right? I just got the lead. Hello, is this John? Yes, it is. Thanks for taking my call, John. My name is Tony Martinez. I'm with the Benefits Department of the state of Florida. My license number is P104692. I'm calling because you're entitled to a complimentary state-approved legal packet that includes a last will and testament, a medical last request form, and a financial power of attorney that you may use when you find the life insurance policy that you recently had inquired about. Now listen, John, I'm not a telemarketer or a sales agent. I'm a field underwriter, and due to the high volume of requests due to COVID-19, I've been assigned to your case, and I wanted to know if you could speak for 5 minutes. Sure. Well, listen, John, in order to verify who you are, I need to verify a few things. I have your address down as ... Is that correct? Yes, it is. I have your date of birth down as ... Is that correct? Yes, it is. I have your request for coverage in the amount of $5,000 to $100,000 of coverage. Is that correct? Yes, it is. That's great. John, are you a smoker of any type of tobacco or marijuana? No, I'm not. Thank you. Listen, John, I'm scheduled to be out in your area to drop off these state-approved documents and provide you with a COVID-safe option to receive them. When, in the next 24 to 48 hours, would you be available for about 25 to 30 minutes? Tomorrow I'll be available. Have you found your insurance policy, or will you be needing a licensed insurance agent to provide you a quote that you may use for those documents? I haven't found one yet. Thank you. How does 10 a.m. tomorrow or 12 noon sound? 10 a.m. sounds good. Now listen, I'll be driving a gray Ford F-150. Does your house number appear on the mailbox or on the building? Or it appears on the mailbox. Perfect. Please take my work number down, as I would like for you to reach me within 12 hours of our scheduled meeting if you need to make any arrangements. My direct number is 239-784-1118. John, if I don't hear from you, can I assume that we're good to go for our appointment? Yes. Great. I'll bring with me the state-approved legal packet and look forward to meeting you. Have a great day. That's the script, right? Very professional, right? A couple things I want you to know about the way that I said it. I enunciated. I changed my tonality. I stopped on the words that were important. I didn't speed through it, okay? Sometimes you might even need to slow it down. If the person says to you, wait, what? Slow it down, it's okay. It's okay to slow that piece down. Now, let me go over the psychology behind it, because there's pieces in there that are intentionally there because the psychology is to give them an impression and to give them a reaction, okay? So the first one, is this John? Yes, it is. I'm not gonna use first and last name. When you use first and last name, it's the universal, you're trying to sell me something, you don't know me. But if you say their first name, it gets their mind immediately listening in because they think that the person might know who they are. Like if a random person calls Puebli, right? Hey, Maria, she's probably gonna stop her and be like, wait, what? But if the person calls and says, hi, is this Maria Elisigarra? Now all of a sudden Puebli's like, wait, hold on, who the hell are you? You got my number from somewhere. Don't use last names. Don't use last name, first name, right? Now, the other piece is, thanks for taking my call, John. You know what I don't say? I don't say, how are you? How are you is, again, the universal, I'm trying to sell you something. But when you say, thanks for taking my call, you're still showing respect, and now they're listening in. My name is Tony Martinez. I'm with the benefits department of the state of Florida. When you say you're with the benefits department of the state that you're in, to them, you're like a public official. Now they want to listen. I'm giving them my license number to give more credibility to who I am in my profession. My license number is ... Does it really matter that they have my license number? No, but by giving it, they're going to be listening in a little bit more because they're looking at you as a state official. I'm calling because you are entitled to a complimentary state approved. Look at the psychology behind that. It's state approved and it's complimentary. This is official. This is legit. A state approved legal packet that includes a last will and testament, a medical last request form, and a financial power of attorney that you may use when you find the life insurance policy that you recently made an inquiry about. The call is starting off with my intention being the program, the packet, not the insurance. See what I'm saying? There's a psychology behind that. Now listen, I'm not a telemarketer or a sales agent. Boom, they're gonna drop their guard. You're not trying to sell me something. I'm a field underwriter, which is exactly what we are. And due to the high volume of requests to COVID-19 reminds them it's important. There's things going on in today's world that are affecting people's lives. I've been assigned to your case and wanted to know if you could speak for 5 minutes. Now you're asking for permission. There's nothing wrong with that. There's a psychology behind that. In order to verify who you are, I just need to verify a few things. I have your address down as ... The reason you're getting that information is because you're letting them know you have data on them. You're also verifying that address is correct. Because if it's incorrect, you want the correct address. Simple as that. You just verify. When someone calls you, for example, I call Edgar, right? And I can tell Edgar on the phone his address and his date of birth. Edgar's like, wait, this guy knows stuff about me, right? He's not asking me for the information. He knows it about me, right? I have your request for coverage in the amount of 5 to 100,000, correct? Yes. That's great. John, are you a smoker of any type of tobacco or marijuana? What you're getting right now is you're getting enough information that if you wanted to run a quote before you went to go see the person, you could have it there ready to go. I know the state they live in. I know whether they're a smoker or non-smoker. I know roughly how much coverage they're looking for, and I also know their date of birth. I can run a quote. Now, here's what's crazy. The high intent leads that I'm talking about, you don't even get their date of birth, you get the year of their birth. Because what the marketing company has recognized is that people don't want to give their confidential information out. They don't. But if all you're asking for is the year of their birth, they don't feel like they're giving out their full date of birth. If all you're asking for is their first name and not their last name, they don't feel like they're giving out too much confidential information. It's kind of cool. This marketing company's really done a great job at that. Sorry. Okay, so there's a psychology behind that. Everything right now is a psychology. What are you trying to accomplish in the phone call? The appointment. You're trying to accomplish the appointment. You're not trying to do a presentation on the phone. You're not trying to run quotes on the phone. That's not to say that some people aren't going to force your hand to get them a quote. That will happen. But just understand your objective. I'm trying to get the appointment because right now you're only getting one line of communication, and that's through the phone. You're going to get a very different type of communication when you're what? Face to face, in front of me, shaking my hand, taking a look at my mannerisms, my facial gestures, taking a look at my professionalism, my respect that I have for your home. It's a very different it's a very different type of close when you're face to face. So you're trying to close the appointment, not the policy. Okay? This is sales. Welcome to that world. Everything is one close after another close after another close. Everything is a win. I win, I got an appointment. Win, I'm in the door. Win, I got to present. Win, it's a win, it's a win, it's a win. If you're going right for the jugular right away, you're out of luck. Gentlemen, you guys know what I'm talking about. You barely know a girl. You're like, hey, you want to go out? No, you gotta massage that a little bit. Get to know who I am. Let me make you laugh a couple times. Let me see what kind of, facial gestures you're giving, whether or not you have an interest in me or not. Smell my cologne. I'm dressed nice. Like I've got to somewhat seduce you before I go in for the kill. And the kill is what? First is what? Would you like to go out on a date? Boom. Right? Then after you go on the date, it's game time. Can I impress them? Can I learn enough about them, right, before the date that what I give to them during the date is the data that I learned about them? right? A good closer in that world knows, let me find out what they like, what kind of food they like, what kind of environment. Let me find out what they like so that when we go on the date, I'm giving them exactly what they like versus guessing. Let me find out what they like. Like those are the questions you want to ask, right? It's the same concept. That's what it is. You're closing little by little, little by little, little by little. You're getting closer to the closing table, right? The closing table is a little bit different in dating, but you guys know what I'm trying to get at, right? You're not trying to get the application right away. You're trying to get the appointment. Okay, so let me keep going. Great, John, smoker, not smoker. Okay, thank you. Now, oh, there we go. Okay, thank you. I'm scheduled to be out in your area to drop off these state-approved documents and provide you with a COVID-safe option to receive them. Okay, what's the psychology behind that? I'm scheduled to be out in your area. When you say it that way, they look at it like this person's going to be already in my area. He's already going to be here. He's not coming out just for me. He's already scheduled to be out there. I might as well give him a 15, 20-minute window to meet me, right? And I want to provide you a COVID-safe option to receive them. Wow, he's a preemptive thinker. He already has a way of providing me a method to get that document to me and still be COVID safe. It's important to give that out because some people are going to tell you no right away simply because they're afraid of COVID-19. But if you let them know ahead of time, you catch them, you catch them at the curve before they give you the objection. Some people won't even give you the objection, but if you present it, I have a COVID safe method for us to meet. Okay, all of a sudden, you're ready to, you're going to get a higher chance of a yes. When in the next 24 to 48 hours would you be available for about 25 to 30 minutes? I'm giving them choices, but I'm still controlling the choices. I'm not going to say to them, when can we meet? Because they might tell me next week. The choice is the next 24 to 48 hours because there's something that I do know, urgency matters. The same reason why it's important to call the lead the moment the lead comes in so that they remember that they even filled out that questionnaire. It's also important to schedule the meeting within 24 to 40 hours because it stays hot. Something I want you guys to understand, even exclusive leads aren't that exclusive. It's exclusive to the point where that particular company has made an agreement and a commitment not to give that name and number to somebody else of that company. But what's stopping that client from filling out 4 or 5 different questionnaires from 4 or 5 different companies? There's nothing stopping them. You ever type something up on Google, and then you go to Facebook and you find that stuff everywhere? 5, 6, 7, 8 different advertisements. What's stopping the client that types up life insurance on Google from going into Facebook and filling out a questionnaire to 4 or 5 different advertisements and 4 or 5 different companies? So urgency matters. The thing I need you to understand is the moment that lead hits your desk, it's going to hit somebody else's desk in the next 2-3 days. Who's going to act faster? Early bird gets the worm kind of mentality. Act urgently. When in the next 24 to 40 hours can we meet? I'm giving them choices, but I'm still controlling the choices. I need to see if you're available for 25 to 30 minutes. Does that mean you need to finish the meeting in 25 to 30 minutes? Not really. But 25 to 30 minutes is appealing to them to say yes. Your meeting could last 2 hours. If they give you the 2 hours, take the 2 hours. Your first couple meetings will, by the way. So when you're planning your calendar in the beginning, my advice is put a 3-hour gap between all your meetings. When you're brand new to the game, put a 3-hour gap. Expect that you're going to make some mistakes, but don't feel like you got to rush to it because you got another appointment waiting. Put a 3-hour gap. It's okay. You're learning how to flex that muscle and get better at it and better at it and better at it. Don't measure yourself to me. Like I can have a meeting in 30 minutes to an hour and open and close, but I'm also a product of 15 years. My first meetings took hours. You talk to Howard, Howard will tell you his first closing was 3 hours. And that wasn't none but like maybe 3 months ago. His closings now are taking 45 minutes to an hour. It wasn't the trainings that I'm giving. The training helped sharpen the knife. It was life experience. It was going and practicing it and doing it. So now he's getting better at it. But for first timers, give a 3-hour window for yourself. You're telling the client 25 to 30 minutes, you might take an hour. If the conversation is going well and there's a genuine need, they're not going to be upset with it. Okay. Have you found your insurance policy, or will you be needing a licensed insurance agent to provide you a quote that you may use for those documents? That lets you know if they have insurance and want insurance, or if they don't. Because some people will schedule with you and they'll tell you, I want that packet, but I already got my insurance. It's okay. It's okay. It gives you an opportunity to get in front of that person. It gives you an opportunity to maybe get a chance to compare their insurance. It gives you an opportunity to get in front. That's what it does. It just gives you an opportunity to get in front. That's 100% what it does, right? You know, and I'll use this as an example. I got Josh Collier, who's on the call here right now. You know, Josh Collier came to us from WFG.
What's up, Tony?
What's going on, bud? You know, Josh Collier has been on my social media now for like 2 years. We've probably spoken on social media a good 3 or 4 times.
Right.
And the first time, second time, third time, he was adamant. Tony, I'm not going nowhere. I am not going nowhere. I am pinnacle leadership development, bro. I think even the last time he spoke to me, he was kind of direct about it. Bro, I'm not moving nowhere. You know what he did yesterday? He coded up. He's already done contracting. He's ready to get going. So why do I say that? Even if they tell you no on the phone, as long as you're willing to get in front of them, you have another opportunity. No just means not now. You still haven't massaged it enough. You still haven't built enough rapport. You still haven't gotten them at the right time. But the fact that you dropped off the business card, the fact that you showed them that you're a professional, maybe no will be not now, and they won't take action right then and there, but they'll call you a few years from now, or they'll call you next month. And the right time will come as long as you were able to get in front of them. Same concept. That's why your social media is just that. You know what I do when I'm prospecting? I add everybody to my social media that I can. Everybody, because they're going to see me over and over and over, and it's just a matter of time. Same concept. That's why you want to get in front of them, okay? Have you found your insurance policy, or we already did that? Okay, thanks. How does 10 a.m. to 12 noon sound? Again, I'm giving people choices. When you present something, guys, whether it's a time to meet, whether it's an insurance product, whether it's a monthly amount, you're not giving them 3, 4, 5 choices. People will paralyze themselves when they have so much choices to pick. You give them 2. 2, we can meet either today or tomorrow. Which one works? Today, great. Morning or afternoon? Morning, great. 9 a.m. or 11 a.m., great. They can make decisions when there's 2. You give them 3, 4, and 5, they're getting flustered. Just like when I present insurances. Look what I did here, right? You got final expense, you got GUL. I didn't go into IUL. I didn't go into term insurance. Number one, that market space is really not the right fit, but it's easy for them to say, do I want this one or this one? I want this one. Okay, great. Which one makes sense? $50 or $100? I give 2 choices. Boom, 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 boom. And from there, it's just a process of elimination. Till you pigeonhole them into what it is that they themselves disclose that they wanted. They themselves disclose what they wanted, right? Perfect. Please take my work number down as I would like for you to reach me within 12 hours of our scheduled meeting if you need to make any changes. Why do I do this? Because if you're using the CRM, you have a different phone number than your mobile number. You're using a different one. Give them your mobile number and make sure they know that you're professional enough that you're requesting a 12-hour notice. It's not going to stop it every time. Sometimes people will call you an hour before the meeting, but some people will be professional enough and courteous enough that they'll give you a 12 hours notice so that you could reposition your calendar. You can move things around. Now, something I'm huge about, I cannot stand when agents do this. I'll call you the day before to confirm. I'll call you the morning of to confirm. Don't do that. Do not be their alarm clock. When on earth has an appointment at a physician's office, when have they ever said to you, I'll call you the day of to confirm? I'm not saying that they don't. They typically have an automation system that calls to confirm, but they don't disclose that. You know why they don't do that? If you tell somebody, I'll call you the day of to confirm, there's a high likelihood they're not going to put it on their calendar. They're going to wait for you to remind them. And if you remind them after they've already put another appointment on, they're going to have to cancel on you. So I do not. I ask them, can you let me know within 12 hours if you need to reposition this calendar? Yes. And then comes the pivotal close. If I don't hear from you, can I assume that we are good to go for our appointment? You know what that means? The ball's in their court. They've got to call me and tell me if they want to cancel. I'm not calling to confirm. And you might say to me, well, what if they ask you? I politely decline. Yes, I politely decline. And then, can you call me to confirm? I'll tell them, listen, I'll be honest with you. I could tell you yes, but the likelihood of me actually doing is slim to none because my calendar is backed up, left and right. So I'll tell you what. I'll respect your time and make sure that I put this on my calendar so that you don't get double booked and you can respect my time and do the same. Nothing wrong with saying that. Absolutely nothing wrong with treating yourself like a professional. Don't bend over backwards for your clients like that, because when they feel like they got you like that, they'll have you like that forever. Respect yourself as a professional. They'll tell you, hey, can you call me to confirm? Listen, I'd love to tell you that I can, but there's a high likelihood that I won't. And it's not because I don't want to. It's just because my calendar is so completely backed up that there's a high likelihood I probably will forget. But I'll tell you what I will do. I'm going to put you on my calendar, and I'm going to respect your time to make sure that you don't get double booked on my calendar if you could politely and professionally do the same thing on your calendar. Is that okay with you? Yes, it is. I'm going to give you also my direct number. That way you know you can get directly to me and not my office. Here's my number. If something comes up ahead of time, can you let me know within a 12-hour window so that I could reposition my calendar? And I'll do the exact same for you. If something comes up on my calendar, I'll let you know ahead of time so I'm not wasting your time. Is that okay with you? Yes, it is. Perfect. If I don't hear from you, can I assume that we're good to meet? Yes, no problem. The other thing is, the meeting that I schedule is in their house. You know where it's not? It's not at a Dunkin' Donuts. It's not at a Starbucks. It's not going to be a place that requires them to get in their car and go to. Because if they forget and you show up, they're not there. But if they forget and you show up to their house, there's a high likelihood that what? They're there. They're there already. So it's like, oh man, this person drove all the way out here. I'm already here. Like, let me let them in, even though they might have forgotten, because they're not always going to remember. You can ask them to remember. You can ask them to put it on the calendar. You can't. It's hard. I mean, you control what you can control, but you minimize what you can minimize. I minimize being the person that calls and confirms them. I minimize there being a third party place where they have to drive to meet me. I try to minimize a one-legged meeting. I ask them, is your spouse going to be available as well too for that meeting? Yes, perfect, because I prefer, and I tell them that, I prefer to meet with both husband and wife for these types of financial decisions. Oh, she's not going to be available. Well, when do you think she would be available? So when we have this meeting, all parties are present. Simple. I mean, no lie. That's the, some of you all, you know, when you came on board, true or not true, I did your kickoff meeting. We knocked out the first week. You still have to do your financial analysis, or you've done it. Did I not schedule it when you and your spouse was available? Not you alone? That's important. That's important. That's massively important. Unless that person tells me, no, it's not going to happen, they're not needed, I'm not going to schedule that. I try to schedule a meeting where both decision makers are present, because I need to read the psychology of them. One of them might be budget conscious, one of them might be benefit conscious. You don't know until you get in front of that person and understand the psychology of them. You got to be able to try to cater to both. There is a psychology to that. The reason I like to have meetings with husbands and wives, number one, if it's a high ticket sale, chances are both will need to agree to that. A wife will not typically sign up for $200-300 a month without husband being there to approve it, and the same vice versa. Because the last thing they want to do is go home and be like, hey, ma'am, hey, honey, I signed up for $300 a month out of our budget. Wait, what? Without talking to me? Now all of a sudden you're already in hot water. You're already in hot water with the other person because you were able to get that person's significant other to agree to a number without them talking to them first. You don't want that, especially in the Latino community. I'll tell you right now, you want to see policies canceled real quick, okay? Get the husbands to agree to numbers that wife wasn't there for. Get wives to agree to a number that husbands weren't there for. I dare you, I challenge you. You'll find a chargeback quick happening. Intentionally, the other person will cancel on you because they'll look at you and be like, how did you have that much power to get my spouse to agree to a number without talking to me? I don't even want you to be my agent. Now you're done, you're hit. Husband and wives together, decision makers together, decision makers together. All the time, as much as you possibly can control, decision makers together. I can't stress that enough, guys. That will literally increase your ratio of success by a whirlwind just by having significant others together. Great. I'll be bringing with me the State Approved legal partner and look forward to meeting you. Yes, ma'am.
I had an encounter with one of my friends who she basically took over the finances of them too, and she didn't want her husband to find out about any life insurance policy, or so I had to write it on the side, you know. But it's a risk you take.
And don't get me wrong, sometimes that happens. I'm not going to tell you it doesn't. But if you notice she specifically said why she didn't want spouse there. I try to get the spouse there. I try my very best to always get the spouse there, but you know, sometimes that stuff happens. It does happen. Be prepared for some crazy stories, guys. No lie. I mean, I'll tell you a story similar to that, Lulu, that happened to me. I had a client where the husband was adamant about never doing a budget with the spouse present. Don't ever sit down and do a budget when you're sitting with my wife. And it took me a couple years to figure out why. And it's because he had a lover and he was spending like $2,000 a month on the lover's mortgage. And he didn't want to disclose that money. And that happens, right? You've still got to be professional about it as best as you can. You've got to respect confidentiality. Believe it or not, there's confidentiality that you have to respect between spouses too. This isn't one of those husbands, my client, so I got to disclose everything to the wife and vice versa. You respect each individual person's confidentiality, and you need to. You might not agree with those lifestyle choices, but you got to respect them. You got to respect them. Okay, so that's the psychology within that script. You notice how much little, why certain words matter, the way that they come out. There's a psychology behind that, and that's something that I 100% pay a lot of tribute to Northwestern Mutual teaching me this. They spend countless, I'm not even gonna say hours, I'm talking about 3 years of training with sales coaches, language coaches to really help me understand why things are said the way that they are. Because you could be the best presenter of products, you can have the very best product, but if you don't know how to schedule meetings to present your product, you're dead in the water. That's the best skill set you could start working. How do I schedule on the phone? How do I schedule on the phone? I say this to people all the time. I could be a floating bobblehead. I could have no arms, no legs, no body. But if I could talk, I can make 6 figures. If I can talk, I can make 6 figures. Your words, your scripts, your objection handling is everything in this business, especially when you're selling an intangible asset. You can't touch insurance. You got to feel it. You got to get good in your words. So this is something I encourage everybody to role play it over and over and over and over and over to the point where you could just hit play and go in your sleep. Go in your sleep and go after it, right? Now, let me talk about objections for a moment. Okay. That's the biggest piece I want you to also work is objections. Your fear in calling is, what if they give me an objection? What am I going to say? But if you know the answer, you're not so scared. Honestly, you're not so scared. So let's talk about it. I'm not interested. I can understand that. Apparently you or someone you know recently requested information online. You actually qualify for a state-approved legal packet that includes a last will and testament, a medical care directive, and a power of attorney. Not sure if you already purchased insurance, but these forms can be used for it. What changed your mind so recently? It's okay to ask them, what changed your mind? You know what's crazy? When they say not interested, sometimes it's just bad timing. But it's just so easy for them. It's not interested. They're just so easy. But if you peel back the layers and what changed your mind, bro? Right? Well, listen, I just got into a fight with my wife about it because we were looking for insurance and she doesn't think we can afford it. You know how many times I hear that? They say not interested because they just got in a fight with their spouse. So they're just trying to get away from what they got in a fight. What changed your mind, bro? My bad, not bro. Bros to the millennial generation. What changed your mind, sir? Right? Oh, I got in a fight with my wife. She doesn't think we can afford it because we're older. And okay, sir, let me ask you a question. What dollar amount is she trying to make sure you don't go over? Oh, she doesn't think, we can afford $50. She thinks it's going to cost more money. Okay. So let me ask you a question. If I can find you something that stays within $50, can I make you look like the superhero to your family? Right? So let me ask you a question, sir. If I can find a solution that stays within $50, can I make you look like a superhero to your family? Yes. Okay. And listen, I say that a lot, I specialize in working with people that are on a very tight budget. I see here in the address that you're located in Naples, Florida. Is that correct? Yes, it is. Coincidentally enough, I'm scheduled to be out in that area today and tomorrow. What's a good time for us to sit down and chat for 20 to 25 minutes? Oh, tomorrow would work. Notice I'm not asking, can we sit? And they're not thinking I'm scheduling them and I have no other appointments. I'm already scheduled to be out there. And my specialty happens to be what they're struggling with. My specialty is whatever they're struggling with. It's always that. It's always that, guys. It's always that. Do you have insurance? Yes, I have insurance. Great. My specialty is working with people that have existing coverage and helping them save 20 to 30% on their premiums. Would a 20 to 30% premium reduction help you or benefit you in your household? Well, yes, it would. Do you have insurance in place? No, I don't. Great. My specialty is working with people that are getting insurance for the first time ever. I don't think again, whatever the objection they have, that's my specialty. People love working with specialists. They love. It's why, you know, health insurance, right, has a $25 copay for your PCP, right, your physician. What does it call it? The primary care physician, right? Yeah, PCP. But it's a $65 copay to go see who? The specialist. Right? I'm the specialist. Whatever your problem is, man, I got you. This is psychology to that. You gotta be ready for that kind of world. Right? I already have coverage. That's great. You actually qualify for a state-approved legal packet that includes a last will and testament, a medical care directive, and a power of attorney. My area of specialty, see, is in regards to saving you 30 to 40% on your existing costs. Would this state-approved packet be of interest and a reduction of your current coverage be of interest to you? Who would say no to that? If they're really listening and that's their real objection, who would say no to it? Right? Can we talk on the phone? Yes, we can. However, you actually qualify for a state-approved legal packet that includes a last will and testament, a medical care directive, and a power of attorney. I'm limited on what we can discuss because of elderly fraud laws and confidentiality rules. All I need is about 15 minutes to visually see you are who you say you are so that we can discuss more in detail. When in the next 24 to 48 hours will we sit down for a chat? Right? I don't remember filling this out. I can understand. You actually qualify for a state-approved legal packet that includes a last will and testament, a medical care directive, and a power of attorney. Perhaps it was one of your loved ones who filled it out. Either case, I'm here to tell you that you qualify for these benefits, and so you may not want them to go to waste. Right? Would that be okay with you if we continue our talk? Sure. I asked to be taken off your list. Yes, you can. You actually qualify for a state-approved legal packet that includes a last will and testament, a medical care directive, and a power of attorney. I just have to advise you that the other organizations that may have received your information might call you as well, but I'll make sure that my organization doesn't call you again. Can I ask you what changed your interest? Okay, what changed your mind, bro? Again, you don't know unless you ask. It could be anything. Listen, it's just that right now I don't have the money. I get paid on the 15th. I'm on fixed income, Well, listen, I'll tell you what if on the 15th we get a chance to chat? Matter of fact, I'll do something better for you. You're in Naples, Florida, aren't you? I am. Listen, I'm scheduled to be out there tomorrow and the next day. Why don't I at least show you what products are available to you? And if any of them make sense, on the 15th, you can make a decision to take action or not. How does that sound? That sounds great. Right? I mean, you just don't know. You have no idea. Some people tell you, well, you know what it is? I don't live in this area. I live in New York. Great, that's not a problem. I specialize in working with people from New York. Matter of fact, I got a lot of friends and family out there, and I've got an agent out there that works in New York. Right? That's awesome. Like, whatever the problem is, you're not going to know unless you ask. So don't just accept whatever objection they give you. Overcome it and then ask what's holding them back, what's changing your mind. Right? That's going to require this. I will tell you this. You have to learn to control your nerves. You're going to be nervous. It's okay. They're just human beings. They're just human beings. God made everybody the same. There's nobody more superior than anybody on this planet. Nobody. I don't bow down or kneel for nobody other than God himself. They're just human beings. Be willing to just have a conversation. So you got to calm your nerves and just be willing to have a conversation with them. What changed your mind? Right? What caused the sudden shift? You'd be amazed. Some people won't answer. Some people click. It's okay. Don't get butthurt by it. Move on. Next one. Some people, they don't mind telling their story. Believe it or not, we live in a world today where not many people just stop to listen to people's stories. So when you show them that you're willing to listen to their story, you'd be amazed how much stuff they disclose to you, how much they vent to you about their life, about what's holding them back. But you'll never know if you don't ask. That's going to require you to block out whatever your surrounding needs to be blocked off. You need to be laser focused in on what they're saying. You can't be busy doing other things, is what I'm trying to get at. Block it off, okay? And just ask them, hey, what changed your mind? You know, it's one of the things that I like to do when I'm making calls. I have this. Use this. It's a Bluetooth, but it's very thick because it drowns out my outside noise. I want to focus on them. I need to be on point. I need to be ready to overcome whatever objection they're giving me. I gotta listen because I don't know what specialty I'm about to tell them I am until they tell me what the problem is. You know what I mean? Like, I can't afford it. Listen, my specialty is working with people that are on a tight budget, right? I don't get paid till the 15th. Listen, that's okay. That's okay. Listen, you're in Naples, aren't you? Yes, I am. I'm scheduled to be out in your area the next 24 to 48 hours. I'm going to be in your area anyways. You know, would you be willing to give me 20, 25 minutes so I can share with you the types of products that you do qualify for? I have this packet that you qualify for anyways. And then if you want to take action, we can wait till the 15th to do it. Right? Like, you don't know. No, it was my wife who was looking for it. And, you know, I don't know if I want it. My wife's the one who handles all my finances. Listen, that's okay. I'm completely prepared and ready to speak with her. What's her name, by the way? I'm sure she's a lovely lady. Oh, her name is Jan. Well, what time does Jan get home? She gets home today at 7. Would you be okay if I gave you a call around 7:30? That way I could chat with both of you? Yeah, sure, no problem. I'm not interested. No problem. Somebody made an inquiry, but I do want you to know you qualify for this package. What changed your mind? Can you take me off the list? Of course I can. Not a problem at all. I can take you off the list, but I just want you to know there is a packet that you qualify for. It'd be a shame for it to go to waste. And I want you to know that I'm going to remove you from my list, but it's not stopping other companies from reaching out to you as well, too. Can I ask you, what was it that changed your mind? I never filled out this questionnaire. Listen, a lot of the time, sometimes it's not the actual person that fills out the questionnaire. Maybe it was a family member, maybe it was a parent, maybe it was a spouse, maybe it was your children. I'm not exactly sure, but I'm not calling you because of that. I'm calling you because there's a packet that you qualify for. You might not want to let it go to waste. You have, you know, when in the next 24 to 48 hours do you think we could chat? You know what I'm saying? I need to be on point. Boom, 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 boom. I'm training you guys right now. Let me tell you how much on point I have to be with you guys, because it's the same thing to me when I talk to a client. Okay, I told my girlfriend. I said, listen, I'm gonna be training all day long. I said I'm gonna probably move my station to the room, because I want to make sure that, you know, I don't get distracted with kids coming up and down or this, that, and the other. And I also don't want the kids to feel like they got to be stuck in their room all day long while I'm training. She says to me, no, it's okay. They're probably going to sleep in, so you could be there the first morning, and the second half, we're going to take them out. We're going to leave. What is that? Why do I do that preemptively? I got to make sure I don't have any distractions. I'm focused. I'm giving you guys the type of scripts and languages that I do with my clients, so you guys can do it. But if I got to be focused, trust me, if I'm 15 years in the game and I got to be focused, you got to be focused. And I'm not saying that to belittle you. I'm saying that because I know what it was to be in your first, second, third, and fourth year. I remember those years. I remember how laser focused I needed to be in something that I still didn't have 10 years behind my belt on. So if I got to be focused, trust me, you got to be focused. You got to be focused. You got to be ready. I have a bunch of young kids. Oh my God, I can't control them. They go make phone calls in your car. Do what you got to do to bring home the bacon, y'all. Being honest with you, like, seriously, I can't control my kids because they're young. They're this. Go to the car. Go to the car. I work till late. Do you want to work there forever? No, I don't. Okay, well, then you're going to have to put some hours outside of those hours. You have to find a way to block off some time. Right? I go to bed super late. Oh my God, I can't get up early to make phone calls. Listen, how badly do you want to win? Is it worth watching the 2 a.m. show? You got to pick your pain. Either pick the pain of getting up early or pick the pain of having an empty wallet. What do you want? I'm not here to motivate you. I'm here to work with motivated people that are willing to understand that they got to make a change in who they are if they want to change in their future life. I'm just giving you the skill sets that I was given. I didn't create this. I was given this. I was put up to the challenge, and I looked at my family and I said, my family's worth it. I'm going to change. I'm going to improve. I'm going to get better. You look at me 10 years ago and you'd say, Tony, I had no idea that was you 10 years ago. Shy as hell, afraid to talk in front of people. You could never put me up on stage. Never in life could you put me up on stage. I'm just a product of 15 years of doing this. So think about this. What is one thing that you're super good at it? You could do it with your eyes closed. And then ask yourself, how many times have you done it to get to that level? Whatever it is, I don't care if it's a sport, if it's a hobby, if it's a skill set, if it's cooking, whatever it is. What is one thing that you are so good at it. Like you could do it with your eyes closed. And then ask yourself, how many times did you have to do it to get to that level? I guarantee you it didn't happen overnight. I guarantee you it didn't happen overnight. I wasn't born insurance agent. I was a shy kid. I grew up in look, when I was 21, 22, 23, I lived in a 90% Caucasian community. Naples, Florida, go research it. This is a city boy from Miami that all of a sudden is now a black city boy from Miami, right? That all of a sudden is stuck in a 90% Caucasian community, the third wealthiest city in America. And I got to work in the financial services industry, a retirement waiting room. Everybody here in Naples is in their 60s. They've got wealth management advisors. I'm competing against Merrill Lynch, Morgan Stanley, Edward Jones, and here comes little me, 23 years of age, right? I got youth against me. I got my race against me. I got the color of my skin against me. And I'm competing against financial advisors that have CFA, CFP, CHFC designations, driving these fancy freaking Bentleys. And I'm competing up against them in this world. Trust me, I am nothing more than a product of thousands of hours invested into this skill set. That's all that I am. And you have that ability to do the exact same thing too. There's nothing, I had no head start. There's nothing better about me. There's no advantage that I have over you. There's none. There's none. But you just got to be willing to say, I'm going to practice this craft. I'm going to practice this skill set. That's my language. That's my scripts. Now, how do I make calls? Let me show you how I make calls. It's simple. 8 a.m. starts my calls. 8 a.m. to 9 a.m. starts my first round of calls. 12 o'clock in the afternoon starts my second round of calls. 7 to 8 p.m. starts my third round of calls. If you want to have a structured calendar, you spend all day Monday making calls. You spend all day Thursday making calls. All day Monday, all day Thursday. If you don't want to do, if you can't do the 8 a.m., 12 o'clock, 7 o'clock every day, if you're not that person, because maybe work obligations or whatever, spend all day Monday making calls and all day Thursday making calls. Here's why. Everything you do on Monday is to schedule for Tuesday and Wednesday. And everything you do on Thursday is to schedule for Friday and Saturday. And Sunday is your day to do what you wish. Sunday is my day for Jesus. I might run 1 or 2 meetings, but for the most part, that's my day that I try to spend with family. I run 1 or 2 meetings, if that. Most of the times I don't even, especially if I have my kids. But Monday, phone zone for Tuesday, Wednesday. Thursday, phone zone for Friday, Saturday. And here's something I need you to know. You all want to be entrepreneurs. You want to know something stressful? You're unemployed every moment you're not in front of somebody. Take that to heart. You're unemployed every moment of the day that you're not in front of somebody. So what's money-making activity, Tony? What are the things I should be doing to make money? Number one, money-making activity are the things that you do that generate income during golden hours. Golden hours is 9 a.m. to 9 p.m. 9 a.m. to 9 p.m. are your golden hours. I'm only doing MMA activity during those hours. What is that? Exactly as that. It's simple. I'm either making phone calls, I'm either trying to find ways to get phone numbers to make phone calls, or I'm in a client meeting. I'll repeat it. I'm either making phone calls, I'm either trying to find ways to get phone numbers to make phone calls, or I'm in a client meeting, or obviously an agent meeting, an agent orientation, because that's also your business. But if I'm not doing those 3 things, I'm not doing what I should be doing from 9 a.m. to 9 p.m. But Tony, I've got underwriting to do it after 9 o'clock. But Tony, I got applications to submit, do it after 9 o'clock. But Tony, I got emails to reply to, do it after 9 o'clock. But Tony, I got to come up with this logo for my business card. You ready for the answer? You ready? You ready? Do it after 9 o'clock. But I got my family to take care of. That's exactly why I'm telling you to do it after 9 o'clock, because you got a family to take care of. Your reason, your excuse needs to be your reason. Your excuse needs to become your reason. Read that, listen to that twice. Your excuse for not focusing on your business needs to become your reason for focusing on the business. It needs to be. It needs to be. My calendar, guys, no lie, when I have my kids, you know, on the weekends, let's just say, and it's a Saturday, I do training in the morning time, I run a couple meetings by 5 o'clock, from 5 to 9:30, 10 o'clock on Saturdays is for my kids. But that doesn't mean that I worked half the day. That just means when my kids go to sleep at 10 o'clock, I still got to work from 10 to 2 in the morning. That's all that means. And that's the benefit of being an entrepreneur. I can position my calendar, I can adjust. I can move things in my day. I can do that. Nobody can tell me no. but I'm unemployed every moment of the day that I'm not in front of somebody or trying to find a way to be in front of somebody. So make sure you're not unemployed. Whatever you need to do to not be unemployed. And it all starts with what you do with your phone zones. How much you respect your Monday dials and your Thursday dials, or if you're going to compartmentalize it, your every morning 8 a.m., your every afternoon 12 o'clock, and your every evening 7 o'clock phone zones. Another meeting that you should have is at the end of your day called the posting and planning day. Posting and planning at the end of your day. It's a half-hour meeting with yourself. You're literally just going to download everything that happened onto a tracker, right? So how many people that rescheduled on me need to go back into my call list so I can call them tomorrow? How many people that I met with that I opened up a case need to go into my pipeline of open cases? How many referrals did I get that I need to go ahead and put into my call list for tomorrow? You know, with my tracker, I need to track how many dials I made, how many appointments I held, because I need to see my analytics of my business. That you can't be the person that downloads all of that on Sunday evening only. Well, what are the chances of you remembering on Sunday what you did on Monday? So you know when you do it at the end of your day. That little half hour you give yourself to prep your call list, to prep your pipeline, to do that stuff, case design. That's why it's called posting and planning. Planning, I opened up a case, let me run the illustrations so that I'm ready, right? The reason that matters so much is because you want to get up in the morning of your day, have your morning routine, your morning affirmations, your morning prayer, your morning breakfast, your morning whatever, and then boom, off the gates running. I already know who I got to call. I already know who I got to follow up with. I already know who's a I already know. If you don't have a system for your reschedules, you're leaving money on the table. You're leaving money on the table because people, they will reschedule on you. It's your job to get them back on the calendar. And if you don't try to get them back on the calendar, you did all that stinking work for nothing. You're a one close wonder. One close wonder. You know what one close wonders are? Those are people that close on first meetings, first meeting attempts. I scheduled, they met, I closed. You know how much business you leave on the table just because there's reschedules that you don't get back on your calendar? You need to have a system for that. You know what the system is? Posting and planning at the end of your day. Last 30 minutes, I got to take all the people that rescheduled on me, put them back on my call list because I need to make sure I call them tomorrow and get them back on my calendar. Simple as that. Simple as that. And that's people that didn't already give you another time. If you cancel on me, no problem. When can we meet again? This isn't, oh, I'll call you later. No, okay, you want to reschedule? Cool. When do you want to meet again? When do you want to meet again? When do you want to meet again? So again, it's not that it's a no, it's just not now. Okay, cool. When? That's the way you run your business. Because if they say yes one time, they have a high likelihood of saying yes again the second time. Don't leave that business on the table. Don't be a one closed wonder. Don't be that. You're leaving business on the table. That's my scripts that I just gave you. When I'm doing my own phone zone, you know what I'm doing? I dial the number 3 times, hang up, call again. Dial the number 3 times, hang up, call again. Dial the number 3 times. If they don't answer, I have a text message that I leave, boom, and an email that gets sent out because I use the CRM software. Copy, paste, copy, paste, copy, paste. Speed, boom, 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 boom. But if they see your number call 3 times in a row, I don't wait for the phone to call, voicemail, hang up, call again. No, dial 3 times, hang up, dial 3 times, hang up, dial 3 times. When they see that happening, that the phone doesn't stop ringing, they're gonna answer. Now, if you've got this little, voice in the back of your head, I don't want to annoy people. Oh my God. Listen, shut up. Get over it. I'm sorry. I'm just being honest with you. Your objective on a call list is this. Either you get off my list or you get on my calendar. Either you get off my list or you get on my calendar. Simple. You answered the phone, you're annoyed, not interested, cool. Tell me you're not interested because I don't want to keep calling you. I'm not trying to spin my wheels here. Either get off my list or get on my calendar. But when you're on my list, you're giving me more work to do. And all I'm dying to do is get to the next list. Either get off my list or get on my calendar. Call 3 times, they'll answer. They don't answer in the morning, call again in the evening. When they see that same number popping up, eventually, hello, who is this? Listen, my name is Tony Martinez. I'm a field underwriter in the state of Florida. My license number is ... and ... I apologize. I have called you several times, but I'm calling you because it's an urgent matter. Well, what happened? Well, I'm calling because you recently made an inquiry for life insurance and there's a legal packet approved by the state of Florida that you qualify for, and it's my responsibility to let you know about that. Well, what is the packet? Well, it includes a medical care directive, a last will and testament, and a financial power of attorney. I don't know if you've purchased your life insurance yet or not, but you could use this for that insurance policy. And I need 5 minutes just to verify who you are. I have your address down as ... Is that correct? Yes, it is. I have your date of birth down as ... Is that correct? Yes, it is. Yes, it is. Okay, cool, no problem. Thank you so much. Listen, have you found, it shows you that you were looking for anywhere from $2,000 to $100,000 of coverage. Have you found your insurance policy yet? No, I haven't. You still in the market for it? Yes, I am. You're in Naples, Florida, aren't you? Yes, I am. Listen, I'm scheduled to be out in your area in the next 24 to 48 hours. And I was just curious, which of those 2 days would make sense for me to stop by for 15 to 20 minutes? Oh, tomorrow works. Great. Morning or afternoon? Afternoon. Okay. 2 o'clock or 7 o'clock? 7 p.m. Awesome. Let me give you my direct number. That way, if something comes up on your end, I need you to give me at least a 12 hours notice. Is that okay with you? Yes. My number is 239-784-1118. Now, Mr. Client, listen, can I assume that if I don't hear from you that we're good to go? Well, can you call me the day of? I really wish I could, and no lie, I would love to do that. I would love to call you, but the reality is a high likelihood I'm not going to call you because my calendar is completely, utterly slammed. But I'll tell you what I will do for you. I'm going to put you on my calendar to make sure that my life doesn't double book. I don't double book on your calendar, and I respect your hours if you'll kindly do the exact same for me. Is that okay with you? Great. If I don't hear from you, I look forward to meeting you. I'll have this legal packet ready for me and prepared to have a COVID-safe type of meeting. Is that okay with you? Yes, it is. Speak to you then. Have a great evening. Boom. Next. I'm not interested. That's not a problem, sir. I can completely understand that. Can I ask you, there's this legal packet that you do qualify for. Can I ask you what changed your mind? Right? You take me off your list. Absolutely. I have no problem taking you off the list. I just want you to know there's a legal document, a legal packet that you qualify for. And although I'm going to remove you from my list, I just want you to know something. There's other companies that probably have your information. They're going to call you as well too. Can I ask you what changed your mind? Can you give me a quote over the phone? I can, but I just want you to understand something. I'm limited to what I can give you because of elderly fraud laws and confidentiality rules. There is a legal document, there is a legal packet that you qualify for, approved by the state of Florida, that includes a power of attorney, a medical care directive, and a last will and testament. I'd love to be able to provide that for you in a COVID-safe type of a manner. You're scheduled here you're in Naples, Florida, aren't you? Great. I'm actually going to be out that way in the next 24 to 48 hours. When's a good time for us to sit down where I can at least drop off that packet? You get what I'm saying? Look, now something else. How often do you think I've done that script? You want to know what's crazy? I'll tell you something that's crazy. When did I come up with that script? Anybody remember? I said it a little while ago. When did I come up with that script?
About a week ago?
About a month ago. Month and a half ago. So this script is not 15 years of age. This script is only a month and a half old. You know what the difference is? Being an entrepreneur is not about how long you've been an entrepreneur. It's about how many times you went up to the plate. It's how many times you went up to the plate. It's not about how long you've been an entrepreneur. Why do I say that? This script is only a month and a half old. However, I've already done this script to myself at least 1,000 times. That's the difference. It's how many times I went into work. The problem with entrepreneurs nowadays is, I've been at it for 3 years now and I'm not making any money. Okay, well, let me ask you a question. In the last 3 years, how many phone calls do you think you've made? How many appointments do you think you've had? I get that. I'm not winning. I don't know why. Okay, so how many calls did you make last month? I'm making about 15 calls a day. You're doing that every single day? Yes. Okay, let's do the numbers. Hang on a second. How many days you work? 6 days a week. Okay, so 15 times 6 times 4 weeks. So you made 360 calls in a month. Is that what you're telling me? Yes. I make 400 calls a week. Do you think maybe it's not that the business isn't working for you, but maybe you're just not working the business? Well, I didn't think about that. Entrepreneurship is not about how long you've been here as an entrepreneur. Entrepreneur is how many times you've gone up to the plate. Employees get a pay raise based on how long they've been there. I've been here now for a year. I'm due a raise. Entrepreneurs don't get a pay raise based on how long they've been an entrepreneur. It's how many times have you gone up to bat. So if I said this to you guys right now, and I said to you, it's going to take 50 failed meetings for you to make $1 million, what's the first thing you want to do? You want to get through those 50 quick. It's your choice now. Honestly, it's your choice. How fast you want to get through those 50 failed meetings. Because if at the end of the rope it's a 6-figure income or a 7-figure income, now it's on you. Is it going to take you, you know, 5 years to get through 50 meetings, 10 years to get through 50 failed meetings? Or are you the person that's determined enough to knock it out within your first 6 months? That's the difference between the people who succeed and the people who fail. How fast they're willing to get through the failures. This script is only a month and a half old, yet I just showed you that I can go through it and drill it to you guys without a problem because I've done it at least 1,000 times already. To myself, to my dog, to my kids, to the phone calls that I've made. I've already done it. My family's completely aggravated and annoyed with it. But I need to get good at that to be able to fill my bank account. So it's either the pain of learning the script or the pain of an empty wallet. The choice is yours. 100% yours. 100% yours. 100%. Now, I got 9 more minutes left, if I'm not mistaken. And then at 12 o'clock, I'm going to give 12:30, yes. And then at 12 o'clock, we're going to bring up Rubiel, who's put together a pretty good presentation on the products. Couple things that I want to give you. Boom, 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 boom. I'm sharing the, yes, I am. I'm sharing the screen. Okay. This is the Kaizen Soulmate packet. And again, I'm going to send this as a PDF to you guys, so be on the lookout for it. It'll be in the Microsoft Teams as a PDF for you to download. Okay, it'll be no problem. If you have Evernote, it's already there. If you don't have Evernote, go to your upline VP and request to be on Evernote. They'll give you the instructions on how to get on there. It's a pretty cool packet. Take a look at it. Kaizen Soulmate, right? Hello, John. I'm so glad you decided to bring me into your life. I know we have a great relationship, but more importantly, I know that I will be there for you without fail when you part ways and transition from this earth. Somebody, go ahead and mute yourself, please, if you can. Somebody, I don't know who it is. Let me see. Okay, we're good now. Okay. The following pages explain all I'm here to do for you and your loved ones. Take time to read this in detail. Make sure you fill it out completely. And if you need any assistance, contact the maker of this plan, your TKO agent, right? Ola. Right? Okay. Letter from me to you. I am your life insurance policy. You and I have similar purposes in this world. It has always been your job to provide food, clothing, shelter, schooling, medicine, and other things for your loved ones. You've worked hard to provide for them and made sure as you have grown older that you are not a burden to them. You've done all of this while I lie safe in your safety deposit box or another safe place. I have faith and trust in you. Out of your earnings will come my cost for my upkeep. At times I might appear insignificant to you, but someday, and who knows when that day will come, you and I will exchange places. When you are laid to rest, I will come alive and do your job. I may provide food, clothing, shelter, schooling, medicine, and perhaps even more importantly, I can make sure that your financial wishes are met and that your family's time of great sorrow, they will not have to be concerned about how they will pay for their final needs. When your work and labor are done, mine will begin. Just as I have faith in you, you can have faith that through me, your loved ones and support of your family can carry on. Whether you feel the price for paying for my upkeep is a burden, remember that I will do more for you and your family than you will ever do for me. If you will do your part, I promise I will do mine. Sincerely, your life insurance policy. The next page is parting words from your loved ones. Leave a last words message to your loved ones. We never know when that last day will come. A gift of closure during a time of grief allows your loved ones to know how much they meant to you. To read the goodbyes, the proud of you, the be happy, the I love you messages is truly food for a grieving soul. Take a moment to write a message to your loved ones as though today was the last day for you on earth. Then you have the open space to fill that out. Then you have agent information, policy information, the bank information that's used to pay for the policy. This is information that beneficiaries need to have, but a lot of them don't have. They don't have this. This is like the emergency kit when, excuse my French, when shit hits the fan. Assets, liabilities, where are the assets? What are the account numbers? What are the balances so that we know where things are? And then this is for you guys, you, the insurance agent. You go to this website right here. You go to personal, last will and testament, select the state, hit the state at the blue hyperlink instead of filling in the box. Download a blank template to the right. Also download at the bottom, Advanced Directive and Durable Financial Power Attorney. I've literally step by step gone and prepped for you so you can print them out and download them and have them there. Remove this page, insert all those legal documents, and there's your packet. There's your packet. That packet is gold, and that packet is free. It's free. That's the value proposition you're doing when people schedule. They want that packet as long as you know how to sell that packet the right way. And it gives you an opportunity to do what? To present your product. It gives you an opportunity to present your product. You know how easy it is to run quotes? Look at this. I'll even post this link on the website.
Tony, can I ask a question?
Yes, ma'am. I've got literally 5 minutes before I put Rubio on, so go ahead.
Okay, so that one that you just went through, so we don't just give them the website, we print it out and we could give it to them.
100%.
Okay.
You print it out and you attach it to the form. Those instructions are for you, the agent. And I'm going to actually write that in there. You'll see it. It'll say, agent, do this. So it cues you in. You got to print it out and have it. But I did it that way because if you're in Illinois, you need Illinois state approved. If you're in Florida, you need Florida approved. If you're in Cali, you need Cali approved. That website will let you download the state approved documents. And if you follow the instructions, it's a free document. If you fill it in on the website, they charge you. But if you download the template and have it as a PDF, it's free. And that's really what you want. You want to give them the packet, explain it to them, explain that piece to them, guys. It's important. You want to know how to find more clientele? This is how you find more clientele. A lot of agents mess this up. Let me stop this here for a moment before I go into, and I'll show you the quote system afterwards. You want to know the art of nesting. Nesting is what I did to make a six-figure income at Northwestern Mutual at a 50% contract with 0 leads and 0 recruiting. Nesting. A family tree, you put a nest in that family tree and you hang out in that family tree. That's the whole idea why it's called nesting. Here's how you do it. It's more than just asking for referrals. Okay, it's called a fiduciary meeting. Please, 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 if you master this, you'll make so much money. Write this down. It's called a fiduciary meeting. When you write the application, you let them know, I need 3 contingent beneficiaries. Why? Because the primary beneficiary is typically the kids or the spouse. That's an automatic. I need 3 contingent beneficiaries. If you and your spouse pass away, you and your spouse and your kids pass away. 3. Who are the 3? Get their names, get their phone numbers, get their date of birth, get all that stuff. A lot of people skip it just because they don't want to add that work to the application. You're lazy if you do it that way. You're lazy. Stop being lazy. Get that info. You know why? Because that's gold. And then when you get the info, here's what you're going to say. Mr. Client, it's my fiduciary responsibility. Okay, I need to have a fiduciary meeting with all 3 of these contingent beneficiaries. Nowadays in this industry, a lot of contingent beneficiaries don't even know that there's insurance in place and don't even know what this insurance does. It's my responsibility to make sure that they know what this policy does in the event of. They need to know the living benefits behind it. They need to know the death benefit behind it. They need to know the policy number, the protocol. They need to know the phone number. They need to know what their point of action is. And it's my responsibility to make sure that they have that. So Mr. Client, with your permission, while this policy is going through underwriting, I'm going to reach out to these individuals, introduce myself to them. I'm going to compliment the heck out of you and the fact that you decided to protect your family. And I'm going to make sure that they recognize how honored they are that you selected them to be the inheritance of the money, but they need to understand what this policy does and doesn't do. You know what the client says? Sure, no problem. You know what you do while you're in underwriting? You call them up. Hi, is this Jan? Great, Jan, listen, my name is Tony Martinez. I'm a field underwriter. I'm calling in reference to John. John, I believe he's your uncle, right? Yes, he is. Well, listen, I just want you to know John recently took out an insurance policy and he's assigned you as a contingent beneficiary. It's my responsibility that I set up a 15 to 20 minute meeting with you. It could be a virtual meeting, not a problem, where I explain to you what the protocol is in the event that you have to exercise this insurance policy and be the executor to it. When in the next 24 to 40 hours could I possibly have that? Wait, John took out an insurance policy? Yes, he did, and he assigned you as the beneficiary, the contingent beneficiary. But a lot of people nowadays don't even know that those policies exist. So I just want you to be aware of what it does and what it doesn't do, because if something does happen and he needs you to be there, you need to know what your step 1, step 2, and step 3. And then what it does, it gives you an opportunity to do what? Present again. You get to present the product. You know what you also get a chance to do? Present other products to the person. Build rapport with that person. Now you just got to use your swagger, your charisma to build that relationship. You have 5 meetings, I guarantee you every 5 you'll close 1. And now what you're doing is you're hanging out in the family tree. That's nesting. You made this person a client, that person a client, this person a client, that person a client, this person. People will get so upset with you in the family tree that you haven't called them fast enough. I've had that happen where they're like, bro, you called up my cousin, but you ain't called me yet. Why ain't you called me yet? Listen, man, nobody assigned you as a beneficiary until now. Don't get mad at me, get mad at your family. But it gets you from final expense, 60-year-old market, to who? The 40-year-old market. The nieces, the nephews. That's where you get into the IUL space, the rollover space, the kid IUL space. Now we're talking big tickets, but now you're working in the family tree. That's how you do that, guys. That is how you do it. I'm gonna take another 5 more minutes, and then I want Rubiel to chat. But I want to show you guys this because I committed to doing it for you. I want to show you how easy it is to run quotes. This is the Oxford calculator. I'm gonna post this link right now in the chat room. And I want you to save it on your phone. Copy and paste it. Save it on your phone as a phone app, so it's there, ready to go. Save it on your bookmarks on your computer, so it's there, ready to go. Look how easy. I just hit Oxford, boom, because I have it saved. I have it there. Look how easy it is to run a quote. Valued client. Who am I in front of? I'm in front of John Smith. John, what's your date of birth? Oh, no problem. My date of birth is August 18th, 1963. Right? What date are we going to make this effective? Let's say we make it effective today, 2/27, 2/21. Calculate. Look how simple this is, guys. Male or female? Male. Clients paying monthly? Nicotine user? Yes or no? No. How much coverage do we want? Well, Mr. Client, what's your budget? I can only afford $50. Let's start with 10,000. Let's calculate it. $37 a month. What do I need to do? What do I need to do? He gave me $50 as a budget. What do I need to do? Anybody? Anybody? Come on now, you know the answer.
Increase the death benefit.
That's right. Increase the death benefit. Let's go up to 15,000. Recalculate it. 54. See how easy that is? Mr. Client, I can get you $15,000 worth of coverage for $54.26. How does that sound to you? That sounds pretty good. How does this policy work? Well, let me show you. Bam. You get what I'm saying? Look how easy that is. Look how easy it is to run that quote. Boom, boom, boom. You're done. You're ready to go. You're ready to go. After we get back from lunch, I'm going to show you how easy it is once you get a contract number with Oxford to be able to log in and submit an electronic application.
Tony, can I have a quick question?
Yes, ma'am.
Do you think that we can utilize the package with our clients that we actually have, the existing clients, to go back to actually revisit them?
Heck yeah.
Okay.
Heck yeah. That's a great way to go back and have an annual review. Again, it's a free giveaway. People want free. So all you're doing is you're leveraging it as an opportunity to get in front of them. Get in front of them. When people say, oh, can you mail me the packet? Unfortunately, I'm not able to because I need to verify identification because of elderly laws and state regulations. I need to physically drop it off. Now, I am certified to provide your COVID-safe method to drop it off, but I'm gonna need 15 to 20 minutes of your time. No, I just want you to drop it off. I'm sorry, man, I can't help you. Take it away. Anyways, real quick, is this beneficial? Does this help? Okay, good. What I'd like to do next is this. Okay, I want you guys to show some love, show some respect. You put a lot of time and energy into this. My man Rubiel, who's running the agency out in the Illinois area called BBA, Bringing Back America, if I'm not mistaken is his name, is gonna go ahead and talk. I'm gonna make you the co-host. So, because I know you got something to present, take some notes. He's gonna go over final expense, the ins and outs, the companies, the products, and everything like that. And when he's done, we're gonna take a lunch break for an hour and a half and get ready for second session, guys. I appreciate everything that you guys have done. I appreciate the trust you've given me, you've given in me to train you and develop you. And my only hope and prayer is that you guys take the information that I've been able to give you. You go out there, you be willing to fall forward, and you provide for your families. Rubiel, are you on the call, brother?
Yeah, brother. I'm here, coach.
The floor is yours. Give this man some love.
Hey, all right.
Shout out to my MD,
Yeah,
OKMD, taking over
BBA.
Illinois, OKMD.
Órale, Rubiel, órale.
We definitely need some retraining or untraining, MD and VP kind of definitions. I was talking to Tony about that yesterday. You know, some of you guys probably don't know me, but my name is Ruby Alzari Gonzalez. I'm actually born and raised here in Chicago. You know, I'm part of the team of BBA. And Tony's first thing was, what does it stand for? And it was funny that Jazz was the one that threw it out there. She's like, I have to say it. It's her words, not mine, but she said Bad Bitches Associations. It's not the name of them, but it sounds good. But it's actually bringing back America, guys. Bringing back America. Let's keep the PG, guys. But you know, it's an honor to be here, really. When Tony reached out, you know, to do the BOM a couple of weeks ago, I was honored. But for this, man, this is great. You know, I'm excited about the team that is getting built out here. You know, we have Lisette Zavala. She actually got, within a couple of days, she got appointed. She got her leads. She got all this stuff going on, and who brought her in was Jasmine. You know, and then you got Frank the Tank. Frank the Tank, man. That guy will text you at 4 a.m. just to see if you're up. So Tony, he does get up early, man, but he goes to sleep early too, you know, so he has to get his beauty sleep, if that's what you call it. I don't know if it's working, but it is what it is, man. But you know, I want you know, earn my spot today, you know. So you know, my story, my background, you know, I was in a practice company. Before that was another practice company. And I was actually introduced to this industry by Richard Love. Some of you guys remember him. I'm forever indebted to the guy, you know, because he gave me the opportunity, got to see this, you know. I still talk to the guy. He's still close friends with me, you know, unlike many others. They just block me out or whatever. But you know, that is what it is. But basically, you know, Rich Love, he came to my office one day, and my story is simple, man. My mom wanted a policy. My mom had a policy back before my parents got divorced. They got divorced when they're in their 40s. She had a policy for $250, paying about $87. Now she's 62 when we're sitting down with Rich. And unfortunately, she had cancer, diabetes. She had a list of things. And unfortunately, everybody said no. And lo and behold, there was a company that could help her, but she was outside of the market, our captive market. I guess that's what it was. I didn't even know I was captive at the time. And I'm thinking I could help her out. I couldn't, but you know what? I had somebody hook her up. But that's one of the things that I learned quickly. You know, you have to watch out for that captive, man. If you can't help somebody else, you got to find a company that does, and hopefully you're not captive with this particular company, and take it from there. But you know, I went over to the other practice company. It was 27 of us that jumped over, and it was all because, you know, we believed in the guy. You know, I still love the guy. I still respect the guy. Him and his wife have done amazing stuff and opened my eyes to the possibilities. And a lot of you guys know who I'm talking about. So you know, if they could do it, you know, why not us? I remember before they made the jump, they barely made $150,000, $200,000, and all of a sudden they just blew up. You know, so it's just working. It's like you said, just get to work, man. Get to work. But you know, when I came to the practice company, I quickly, you know, it was 27 of us came over in January 2015. And we went to a first convention. It was like probably 2,300 people. 2,300 people. It was like, you know, it was like small, man. We fit in a little room. It was crazy. It wasn't as loud as it is now. But from the previous practice company, it was 30,000 of us. You know, and we were lost in MGM. so it was great. We were family, you know, we ate together, we hanged out together. And but eventually what happens is that the company starts growing. You know, as the company starts growing, well, certain things start going awry, you know, you lose certain controls, and certain businesses run certain ways. And you know, then you start pushing people to do stuff. I gotta say, I'm probably guilty, you know, but you know, I had my team pretty much when I had my MD promotion. I hit my MD promotion back in 2017. I know, like, Jasmine was there, you know, Mariela was there, Billy was there, and we did a couple things, you know, we whipped up a credit card, and I helped a couple promotions happen. I think Jasmine remembers this, you know, but I always did it for them. And we got a couple directors out of that right now, also with MDs. But it's like something that Tony said earlier. You know, what are you running for? What are you working for? You know, are you working for that recognition? Are you working for that promotion? Are you running for that? Or are you running to get paid, man? And a lot of times what we're finding now in the practice company is that a lot of people got to MD, right? And most of the business, maybe 40 to 30 or 40% of the business wasn't real business. So when you're looking at a big convention, yes, they're getting celebrated, but they're asking you for money to go eat. Hey, bro, can you hook it up for $5, man? I need to get a cab, you know? So it was sad, but that's just the way it is. People are I don't know if they're afraid or what, but you know, I started backing out. I started, I think Angie said it perfectly once, is that you start to lose passion. You start losing passion for that company. And you start realizing your values, and it doesn't equal theirs. So I started backing out, and before I knew it, I went from almost making 45,000 one year to making barely 3,000, 6,000 last year, and I wasn't in it. So a couple people reached out to me from Family First, and at first I said no, and then I lost an agent and another agent. Let me check it out. so somebody else from MSM back in the day, I'm sorry, but she actually reached out to me. Hey, let's check it out. So we did. Angie was part of that, and she jumped, I jumped, and here comes Angie. You know, so it was crazy. It was crazy at work, but a lot of people were getting threatened. A lot of people were getting called on to see if they're going to make a jump out, you know, by the P's of B's, you know, so that it is what it is, you know, but it's so hard to leave a company now, you know, it's so hard. You can imagine working for a company, you're right, that's going to hold you from leaving that company, right? How does it make you feel when it's so hard to leave a company you don't want to be part of anymore, you know? So it is what it is, you know, but, you know, and a lot of people, what they're afraid of leaving is, you know, they're afraid of being, you know, considered uncoachable, considered being unaligned, big blacklisted, to be pretty much, you know, bullied on social media. But it is what it is. You got to build thick skin and go with the flow, man, because you know what? It's so much better over here. I'll tell you that right now. We just finally getting appointed, right? And I'm not trying to jab at Tony. And this is new. This is a brand new company. Last time it was 2,300. I was one of 27 in a certain group. We had like the first, I don't know when you guys jumped in. I was within the first 50 maybe people in the company. And I got to see it from the ground up, how it works, how Tony barely even slept, man. So all power to him, man. I don't know how he did it, man, but thank you so much, man. But you know, that's pretty much that. But let me get into this, man. Let me get into this real quick. You know, Tony brought up the whole final expense. I thought it was going to be a different training for me, but hey, it is what it is. So let me share with you what I got together, and I hope I could help you out with some of these things here that could help you with your business, right? So final expense is what we're going to be talking about today. I'm going to give you a quick synopsis about it, and then I'll give you a couple companies and overview on each one of them. Okay, so real quick, hey, BBA, there we go. So let me see, let me put it up. Let me put it, there we go. You guys see my screen? Thumbs up, okay. So here we go, man. So really at the end of the day, man, my mom was in this situation. You know, I remember back in the day, we had Nationwide back then, and she loved living long-term care. She was 62. She was seeing other people who was older than her, and she's like, this is something I need. Unfortunately, she was rejected, and then rejected again by Pacific Life and Transamerica. You name it, she was rejected, man. But it came down to final expense. That's the only thing that actually helped her out, get a policy for herself. So, and you got to think about it. Her main thing was she didn't want to be a burden. She's like, give me anything, right? Give me anything. So at least when I go away, if anything happens to me between now and, you know, whenever, I'm not a burden on you guys. So naturally, the average cost of a funeral is $10,000, right? You know, so keep that in mind. But who really has that money, right? You know, no, it costs some money for people that even amongst family members of 6 or 7 brothers, it's always fighting over who's going to pay what, right? So what are they paying for? Well, they're paying maybe to pay down some credit cards, pay down some medical expenses, right? So it's crazy. It's crazy what builds up, and when you're at that age, you're not working anymore, man. You're living off Social Security. So, and then who's going to be responsible for paying all this stuff? Well, your kids, and that's one of the things my mom was worried about. So although I wasn't able to help her out, I pretty much helped her with the payment, still do to this day. We had a 20-year, and we paid about, I think it's $79 we're paying for $19,000. So there are 2 types of final expenses. There's a guarantee issue, and there's the simplify issues. Which one is better? It really depends on your health, man. It depends on your health because, man, you see it on TV. You see all these commercials about final expense. You see, you may have, maybe, I don't know, some of you guys there, you know, I look older than most of you guys. You may be getting little retirement people, you know, because my mother lives with us. So that's why I get it. I swear to God, that's why I get it. If not, maybe it's me, but you know, you get all this stuff through the mail, right? You get all these stuff talking about no medical questions, right? No exams, you know, and you got to ask yourself, is that legit? Well, yeah, it sort of is. You know, it just depends on what side of this wall you land on, right? So there's two types of final expense coverages, right? That's the guarantee side. The guarantee side is just they're gonna get you what you need, right? It's gonna be more expensive. Why? Because you're pretty much been denied by everybody else, right? That's like my mom, you know, and it's gonna be pricey. You know, now if you're somewhat healthy, right? You know, guarantee. I like to say it in Spanish. I'm like, "Estás un pie a la tumba," meaning you're one foot away from your grave, right? That's guaranteed lives. That's what I call it. They check your blood, if you have a heartbeat in urine, right? But simplified issue is pretty much, you know what? There are some medical questions. Yeah, it's a little cheaper, you know, so you could get in there. So keep that in mind. You know what happens, this is what happened a lot of times with the guarantee side. You know, if you get in, something happens within the first 2 years, well, they won't pay out the insurance policy. They'll just, the first year, they'll just give you the first 10% of whatever you pay plus 10%. The second year usually is 20% in whatever you paid. And a lot of time, if it's modified, well, you got another year. So it's 30% in whatever you paid, because, you know, it's just the risk is high, right? It's all based on your health and based on the risk. These are companies. They're doing the best for what's best for the company, not for the client, right? So you're in the place of the client. So you're trying to do the best you can for the client. Remember that. Simplified issue cost it does cost less, you know, than guarantee issue. You know, see, and does it have the same waiting period? Well, it actually has a less waiting period than guaranteed. Some people think simplified issue policies are better, but it's not that it's better. It's just it's cheaper and it's easier to get to because you're healthier, right? It just depends, like I said, your age and your health, because nobody's going to be any younger than we are today, and nobody's going to be any healthier than we are today, you know? So if you're sitting down with somebody today, I hear from Tony, I hear from a lot of individuals that have been training, you know, get that thing done today, man, because who knows what's going to happen in the next 2-3 days. You know, I heard somebody say, you know, you're one med away from being denied, you know? So keep that in mind. So simplify issues. There's no exam, but there are some questions. All right, I'm going to show you some of the questions in a minute. If it's modified or graded, you know, it's going to be a little more expensive, and it might be one. It might be more expensive. Two, might take a couple of years to get certified. Maybe instead of 2 years of getting just the premiums back, maybe it'll be 3 years. Okay, let me see. How long does it take to final expense? You know, it really depends on which one you're doing. Some of them, within a couple minutes, you get at the policy right there and then. Another one might be a couple days. You know, so that's the nice thing about final expense that I've seen. Man, we're getting paid a lot faster. Even, you know, I did some policies this week, and IUL and a term, and within a day it was approved. You know, so it just depends on the health and everything. You know, so how life insurance and so this is a good one. You know, a lot of people ask me this, and maybe asking you guys. You know, I'm a tax accountant, right? So of course you're going to be asking me this, right? Is the proceeds taxed, or you know, are they taxed at all? Well, actually, they're not. You know, this is something you're doing yourself, not through a company, right? And you know what? Your family gets every single penny of it, right? Or maybe it's a preneed, right? Maybe the cemetery gets everything, you know, for the burial, right? It depends how you set it up. How expensive is it, man? It just depends on your age and health, man. The older you are, of course, the more expensive it's going to be, and chances are the older you are, the more unhealthy you are, man. So that's why a lot of times we want to go see people. You know, you want to make sure. I seen a video recording in Family Life. Like, we want to go meet the person, make sure they're not over 400 pounds, right? That they're able to walk around, right? So you could see if they actually are insurable. You know, here's an example. You know, simplified issued. You know, level death benefit. It's a 65-year-old woman. You know, let's say she's paying as little as $42 a month for $10,000. You know, $42 for $10,000. Some of you guys might be saying $10,000 ain't nothing. Well, it's something. It's better than nothing. You know, So let's just say the same person say she wants to get guaranteed. Well, health is probably worse, right? So what we're going to end up doing is guaranteed issue plan. It's going to be about $15 to $20 more expensive, right? For this example, right? It might vary also depending on the person. So keep in mind. So that's how it works. So yes, the simplified, some people think is better, but it's not. It's just cheaper because of the health of the person, man. So final access policies, yeah, they're typically a whole life policy, man. You know, I know Tony just talked about one, the traditional one, right? You can get it as big as possible as you want, right? It goes up to 100, 120 years, but these are final expenses. There's a difference, you know, into the two of them. Let me see, here it goes. So pretty much you're paying the same amount for the rest of the year of the policy, right? The premiums are going to be the same all the way throughout. Let's see, coverage does not expire. It's not like a term. You know, you guys done some terms already. You know, you got 20, you got 30 years, or maybe you're doing a GUL ROP where you got to get your money back, you know, but this one's going to be forever. This is going to be for the rest of your life. Okay. Whole life policies by law have reserves that create cash surrender value. Sometimes, and depending how long you have your policy, you start building some cash value where you guys could take out a loan. Okay. Some of you guys know that too, if you worked a lot with IULs and ULs. And let's see, so you see the commercials out there, you know, and they all say what they say. Some companies they're saying they're better than others. Are they the same? Well, it just depends really on the need of the client. You know, sit down with them. That's one of the beautiful things that we have here with our company is that we have, man, a list of final expenses and guaranteed life policies out there that we could compare and see what's best for our clients. Let me see. Am I too old for coverage? You know what? It just depends on your age and your health. But then again, some of these companies only go to 80. Some of these companies only go to 85. I remember 2 years ago with Daniela Sanchez, Jasmine, you know her. We went. I insured an 82-year-old. As I got there, she was actually running a track around her apartment complex. I'm like, who's that? Oh, that's her. I'm like, she's 82. Shit, she was better shape than I was. So she was insured through Omaha back then, you know. How can I make sure that the money will be there when I die? How many people ask you that? It doesn't matter if it's final expense. It doesn't matter if it's term or IUL, VULs, or ULs, right? These companies have been around for centuries, man. You know, some of these companies are 150, 168 years. So we have the time on our side and respectable companies. And Tony mentioned it this year, North American is a AAA, right? Across the board. So that's something that we could always use for our leverage. And two, you know, remember some of these companies we have here, we didn't have before. So do your homework before you go out there too. Ways to pay out, man. Some of these people, man, they don't have credit cards. Maybe they only have cash. Maybe they only have debit. You know, I don't know. Or maybe they have the Social Security payments, right? So you got to understand they do take different types of payments. It just depends on the client. These are some of them, you know. Yes, it's easy to say. There's different options for the client, you know. So keep that in mind. What can the policy be used for? Like I said, if it was pre-need, it'll be I don't even think I'm saying that right, but you know, it's for funeral costs. Anything else that you get for final expense, it's just, you could use it for anything. So just imagine if you're the son of somebody and you purchased a policy for your parents. Well, something happens to your parents. Well, you just get $20,000. You can do whatever you want with that money. Right? Hopefully you bury your parents first, but you know, it is your money, but you can do whatever you want with it. Pay debt, pay credit cards, you know, help the family out. You know, so keep that in mind. Social Security, lump sum death benefit. You know, some people say, oh, well, we have an insurance to Social Security. I'm like, oh yeah, how much is it? I don't know if you guys knew this, but you know, well, how much would it be if I die? $255. That's how much insurance Social Security is going to pay you out. $255. Let me see, the funeral about $10,000. What does it really pay for, right? It's not going to pay for the $8,000 or $10,000. It probably wouldn't even pay for the flowers. So keep in mind, man, that you know, it's these policies, there's a reason for these, right? Does the ownership of a whole life policy negatively affect my ability to qualify for Medicare? So some of you guys are not old enough to know about this, right? But I remember back in the day when my mom and some of her friends started retiring, right? And because they had property, they couldn't get Medicare, so they started selling out their property, started selling down, you know. If there is a reason that you maybe have too much asset for yourself, you can always ask your kids to get the policy for you. They'll be the owners of the policy. It doesn't show up on your side. You know, it will not negatively affect your side to get Medicare. So who can you trust? Well, you can trust us, man. Look at the faces we have on the board. You know, I trust, well, some of you. Just kidding. I trust you guys. You know, and that's what we're doing here. We're learning. We had incredible training, final expense training a week ago, you know, 2 weeks ago. But, you know, here's some of the companies we have. And it's not all of them, it's just some of them, you know. And as a VP, I had to throw this out there, you know. So as a VP, AIG, how much do they pay you? 62.50%. Gerber's 80%. Great Western, 95. Foresters, 110. Oh, Oxford 120, Mutual Omaha 120. It's nice and dandy. Some people would look at this like, well, I'm gonna do Oxford, I'm gonna do Mutual Omaha. I'm like, you know what? You ain't gonna get rich in one person. Make sure the policy perfectly fits, or not perfectly, but almost fits perfectly the client. You know, so keep that in mind. So let me see. So what I did here, I actually had this right here. I don't know if you guys can see this. This is Oxford. You know, it's available for individuals between the ages of 50 to 85. Take a picture if you want, because this is going to be coming up more and more. I don't want to hear the phone call. Hey, how much is? Well, I'll send you the picture. So available coverage is from 5,000 to 30,000. All right. Affordable rates. Well, we got to do our homework on that, right? Coverage will never decrease as long as the premiums are paid. Right. So keep that in mind. It will stop if there's not enough money in there. Right. Policy cannot be canceled as long as the premiums are paid. Death benefits paid directly to the beneficiaries of your choice. You know, it's tax-free too. So keep that in mind. So the death benefit, remember, change your beneficiaries. You know, sometimes we get divorced. Make sure you change it to your new husband or something, you know. You don't want your ex getting everything instead of your new one. So let me see, your policy with the low cash value, it's not a lot, you know, but it's something in there that eventually, if you want to get some cash out, you could, but don't think it's going to be that much, right? No medical exam required. Only medical questionnaires, some of them, right? Immediate eligibility decision made during the point of sale interview. So sometimes you'll be able to get the answer to your policy if it's going to fly right there and then. Rate based on your current age and at the time of the policy issue. And for some reason, I can't see this past one. Oh, great. Let me see if I can move this. Oh, there we go. There we go. Okay, so, and then the last one, the premium can be paid monthly, quarterly, annually or annually, you know. And some companies, I forgot, I think it's AIG or Gerber. Let me see if I have it on here. Hold on. Let me see. I think it's Gerber, the one that has it. If you set it up monthly payment, they actually give you a bonus. They actually give you an 8% bonus or something. I saw it somewhere. But this is Gerber right here. You can see how the ages may change, right? It's from ages 50 to 80, right? Final expense. Issue of amounts from 5,000 to 25,000. Is guarantee issued. No health questions, no medical exams. Premiums never increase, right? Everything's they're so alike, you know. Let me see, lifetime insurance protection. You know, graded death benefit. That means if there's any issue, they could actually not make it just 2 years, they make it 3 years where you're only going to get the premiums plus the percentage, right? 2 years of premium plus 10%. So if anything happens to you between the 2 years, you're not going to get the payout of the policy. You're only going to get what you paid, the premium you paid plus 10% of your premium. Okay. Let me see another one I got in here. I don't know why it's not clicking right. There you go. Is AIG. I hope you can see it's a little bright on my side. AIG is another one. You know, you can see how the max for this one's a little lower, right? Face amount is 5 to 25,000, right? The age 50 to 85. You know, I didn't do my homework on the ALB, so I can't answer that one. But you see graded death benefit whole life. You know, the first 2 years, you can see there 110% of premium paid if you pass away between that time. After 3 years, well, guess what? You get the full amount. Okay, so some of them do have some accelerated benefits, like you see right here, unique chronic illness accelerator. So that's nice. You got, of course, the terminal illness, right? Let's see what else we got here. Great Western. So Great Western, actually, I was going to be a little more detailed on it. This one actually has a younger age. This is the, I think they trained on this 2 weeks ago, and he was saying it. This one goes all the way down to 40 years old, right? It's from 40 to 80 years old. The face amount is from 1,000 to 40,000, right? The guaranteed assurance, it actually has riders on it. I know some of the policies we have out here don't have any spousal bonus riders. This one does. It has dependent riders for the kids and grandkids too. So keep that in mind. And then you see the benefits down here, death benefit for year one. There's a return of everything paid plus 10% in the first 2 years. Keep that in mind. And then after the third year, right, 3 years and plus, you get 100%. Assurance Plus is a little different. So that is 40 to 80, is 100 to 1,000 to 40,000. It has spousal rider, it has accelerated death benefit rider, it has child rider and grandchild riders. But also the nice thing about it is, as soon as you get this policy, you're pretty much guaranteed to have it all. It's 125% of the face value. So if anything happens to you year 1, 2, and 3, so that's something that we're talking about. Great Western. Well, I started doing some homework on it. I'm like, man, it's not bad, you know. And this is a question. These are 3 questions to ask. You can see here, you know, in the last 2 years, has the applicant been diagnosed by a licensed medical doctor for terminal illness, been in a hospice, or been confined or been advised to be confined to a hospital nursing home, right, for 5 or more days. So these are the questions they have to answer. You know, and it's right there in front of me. It's only 3 questions they ask. The application is real simple, right? There's, you know, there's no telephone underwriting, no medical exam. It's a simple, healthy questionnaire here that you fill out. No, that's it. Okay, let me see what I got. We're right on time, yo. So I did it all. I did it all for the nookie. Okay, so there you go. So guys, man, it's been great watching this company go from, when I got in, I think there were like 25 or 30 agents. Right now we're at what, 150? Where are we at, Tony?
You ready for that number? Let me show you the number. Hold up. Number 1, round of applause for my man. My man right here. My boy did a good job.
Good job, VP.
That's what I'm talking about. The best thing I would tell you guys, do exactly what he did. Call the carriers and ask them for a lesson. Call the carriers, ask them for a lesson. Learn 2 companies really, really well. Know that you have other companies if you need to dig, right? I always go final expense first. I go to guaranteed issued plans if only if the client doesn't qualify for final expense because they have medical issues. That's when I go the guaranteed issue option, okay? Hang on 1 second. Let me make an adjustment here real quick. How come I can't? What is going on? Hang on. Speaker here. Hang on. Sorry. You good?
Hi guys, sorry. Tony, can I just say something really quick?
Yeah, go for it.
Okay, so after we finished orientation, sorry for the noise. After we finished orientation, I got my first lead at like 1 o'clock. So I think I got all of them. So like I'm like super eager. Like I'm learning all of this and I'm like, I gotta start calling. And then also I want to shout out to my girl Lizette because she also got her first lead while we were in training. And thank you to my VP for the training.
There you go. Good. I'm glad to hear that they're coming in. So what I was saying is final expense products first. I would leverage Oxford first. Mutual of Omaha at the current time, we don't have it in our platform until about June. We still got to finish blacking out on that one. But Mutual of Omaha is going to definitely be the second one that we want to go to. Right now, you want to leverage Oxford, you want to leverage Great Western, you want to leverage Gerber. They've got final expense. Guaranteed issue is if the person doesn't qualify for insurance, right? And then there's another thing called pre-needs. Pre-needs is like final expense because all you're doing is you're making payments to a funeral service that's covering the cost of the funeral service. It's a little bit trickier to sell that one, but it's good in a scenario where someone doesn't qualify for insurance and they're younger than 50 years of age because pre-needs does cover a younger age bracket. That's the reason why I would go that route for a pre-needs. As far as how many people we've brought on board thus far, and 100% guys, this is all you guys, and then we're gonna go to lunch. I'm very humbled by this, guys. I just really want you to understand that. Like when I left January 7th and transitioned January 8th, there was literally, I think it was 15 people that were coming on board with me. And out of the 15 people, maybe 7 or 8 of them were actually active, right? Lamont was one of them. So he got a chance to kind of see how this kind of unfolded. And it just took off because of you guys. Because of you guys, it genuinely took off. And right now, to date, we have, anybody want to take a guess? Anybody want to take a guess how many people we've recruited into this model in the last 7 weeks?
190.
100.
70.
Higher.
200, 250.
140.
You ready? Number?
189.
179.
It's 218. 218 people have been onboarded into this organization. Now let me tell you this. This is the sexier number. Out of the 218, let me show you this one here. Where am I going here? Agents, okay. Out of the 218, 123 of them are licensed. 123 of them licensed because of what we've created, guys. This is a model that, in my opinion, is going to shake up the entire industry. And it's going to be validated when companies actually start to change their protocol. They start to change their measures. They start to change the way that they compensate people, the way that they write their contracts, the way that they train people on how to sell. When they start changing that method, that's when we know we've made a statement in the industry and basically let the industry know there's a better way to do business than just one way. There's a better way to do business than just one way. Okay, so I'll tell that. Second thing, if you're on Evernote, I've already uploaded the script and I've already uploaded the Kaizen Soulmate into the Evernote packet. If you're on Microsoft Teams, which everybody should be on Microsoft Teams, I've already uploaded the PDF of those both already there. So now the tools have been given. It's your job now to download them, leverage them, and use them, okay? It's 12:35 on the clock right now, Eastern time. I'm gonna give everybody an hour and 25 minutes for lunch. I need everybody back by 1 p.m. I'm sorry, by 2 p.m. I need everybody back by 2 p.m. Eastern time, which would be 1 p.m. Central time, 1 p.m. Central time, and what, 11 a.m. Pacific time. Okay, I want everybody back because right at that hour, we've got Paul. He's our licensing coach. We're gonna give him 30 to 45 minutes to kind of talk about the pre-licensing program. Nobody right now has been taking advantage of this, and I think everybody needs to take advantage of this for their non-licensed agents because it's gonna give you an opportunity to not only get pre-licensing courses done, but have an instructor that's gonna help them in a Q&A session go through the chapters, help them prep for the state exam, and create accountability for them so that they can get ready to take their test so you can convert people from non-licensed to licensed, from licensed to contracted, and they go from contracting to commissions in a 7-day period. Can you imagine contracting to commission in a 7-day period? You can't beat that. Don't log off the Zoom. Go ahead and keep it on. Just mute yourselves. We'll get back on in an hour and a half. If you must log out, log out. I'm going to keep it on so that there's no problem. And I look forward to seeing you guys on the flip. Let me hear your comments. I want your top 2 takeaways on the group chat on Microsoft Teams. And have a great lunch. Be blessed. Have a good one. Bye-bye. All right, let's get this second half started, guys. I appreciate you guys. Hope you had a good lunch. I'm looking at the list here. If you guys got my messages, we have a couple different Audible qualifications for the second half of training. So in order to qualify for the training here, okay, in order to qualify for the training here, you're either a VP. Number one, if you're a VP, you're automatically invited. You either finished your first week requirements, which again, getting on the group chat, getting set up for pre-licensing, scheduling your state exam, having your financial needs analysis, having, let me see here, what was the other one? Sitting in on 2 sales trainings and putting together your top 10 list if you're not licensed. If you are licensed, obviously getting through contracting replaces the licensing. That's the way you can get in. Now, the Audible that we just gave was anybody that bought leads within the last 7 days is automatically invited in. Anybody that bought leads within the last 7 days. And the last one is a wild card. Every single VP is going to get a chance to select a wild card, which is basically someone who didn't qualify under any of those methods that they're saying, hey, you're worth something. I see a lot of potential in you. I want you to sit in on training. So I'm looking at the list right now. There's 18 people on. I'm going to go one by one real quick, and you can let me know which way you qualified, por favor. Unless I already know, and I'll just shout your name out. So Rubiel, I know you qualified as a VP. Alexandra, how did you qualify? Or Ola, how did you qualify?
I think it's the week 1 checklist, and I might have, yes, I think so. That's what it was.
Yep, you're right. Week 1 checklist. Awesome. Angie Alvarez, you're a VP. Edgar, my man, Edgar, how'd you qualify?
I want to say the week 1 checklist, but I'm not sure. I got to talk to Puebli about it.
Okay. I'll get with Puebli right now. If you can let me know, Puebs, that'd be great.
Yes, and he scheduled his exam.
Yes.
Awesome, my man. I'm loving it. Okay. Let me see who's left. Somebody who's iPad. Who is iPad? If you can unmute yourself, let me know. Who's iPad?
It's Ozzy.
Ozzy, my man, how did you qualify?
I still think I'm still qualifying. Week 1 checklist, but I think there's a couple of things in there that I still have to do.
Okay, Puebs, is he fully completed? Is he your wild card? How do you qualify?
Wild card.
He's my wild card. All right, I'm glad Ozzy's
Tony,
on
I
here.
have Lorena.
Okay, hang tight. Let me go down the list real quickly.
Oh, sorry.
Jimmy, I know you bought leads. Lizette, I know you bought leads. Lorena seems to be Angie's wild card. Is that right, Angie?
Oh, my chin.
No,
Sometimes,
actually, got 2 directs and she's licensed.
Nice, good job, congratulations. Lulu, how did Lulu qualify?
Thank you.
Lulu, how did Lulu qualify? Anybody? Lulu's
First week checklist.
Awesome, love it. Susie's a VP. Lamont, I know qualified to minors VP. Yasmin bought leads. All right, so everybody on here is qualified. Is there anybody missing? VPs, did you get a wild card? Because I know about Angie's. I mean, I know about Puebly's wild card. What about your wild card? Did you get a wild card in? Rubiel, Angie. Who else? Who else am I missing? Minor, I don't think Minor and Nivea haven't yet started building yet because they're still in transition.
I didn't get a wild card.
What's that?
I did not get a wild card. I invited another gentleman, but he never responded. So.
Okay, got you. Feel free to see if you can get somebody invited. All right, we're gonna get started here because we're pressed on time. All right, guys, so I want to introduce somebody to you, somebody that pretty soon will be reaching out to your non-licensed agents on a regular basis. He's going to introduce himself to your non-licensed agents. Let me tell you a little bit about this individual. Number one, I found this individual from our pioneer up in the New York area, Mr. Lamont Ford introduced us. We've been having conversations for the last couple months, and we finally got something that's working, okay? This individual runs a continued education program. Okay, so any of your CEs that you guys need, I guarantee you're gonna find the simplest process on there. You're gonna find the most cost-effective process on there. He's a phenomenal instructor. He's got a world of information, but more importantly, he's also running a school for your pre-licensing for any of your students, any of your agents that are still studying for the license. This does not replace the pre-licensing course. This is in addition to. It's a phenomenal program. Pay attention. Let's give some respect to my man, Mr. Paul Odendahl. Paul, are you on? Can you hear me?
Tony, I can hear you. Can you guys hear me?
We can, brother. The floor is yours.
We're getting a feedback here.
Can you hear me now? You're gonna have to disconnect from one of them.
Yeah, let's disconnect from the phone.
There you go. Let me know.
And disconnecting from the phone is happening. Hello
Awesome.
there.
Can you hear me?
TKO Financial. Can you guys hear me?
Yes, we
I can hear you fine. I can hear you great. Excellent. Thank you for the introduction, Tony. Thank you, Lamont, my connection here in New York, for the opportunity, and God bless you guys. Looking forward to working with TKO Financial. I put some information in the chat. So in the chat is my email address, which is for the old guy, with all you young people on here, God bless you. The easiest way to reach me is by email. So reaching me by email, best way. You can call the phone number there and leave a voicemail, but I probably won't get back to you for 3 or 4 days. But on my voicemail, I do remind you, please email me. Oh, that's working out somewhat. And texting me is a good way to reach me. That works. And then I also have in there a landing page where you can schedule time to meet with me. But with the TKO opportunity and the opportunity to support TKO in licensing and continuing education, we have a specific register button on my educational website that says TKO Financial when you go to the register button, and that is where individuals will register for support in licensing. So I have mentioned to Tony and Lamont, that I am here to support you guys with licensing across the nation. I've been doing this for almost 40 years. I'm here to support you with continuing education, especially across the nation, but especially here in New York and in New Jersey, because in those two states, I have hundreds of people that come to me a week that I have probably the easiest CE that one can complete. In fact, here in the Hudson Valley where I reside, they kind of make fun of me a little bit. They call me a baby gecko because people are getting their 15 credits in about 15 minutes. So Geico started that, and Geico sends me a lot of people. So I do the continuing education and the licensing, not only in life and health, where you guys are located, but in property and casualty and in securities license. So here to support, here to speak to you. And one of the things I would like to do is when you send somebody new, I'd like to get a 15-minute conversation with them to see really where they're at, where their mind is about this career opportunity. And I would be the first to tell you about how great this opportunity is for you guys. Because again, I've been doing this for 40 years, and I started with a company you may have heard of many moons ago called Prudential. And I was a citation winning manager for Prudential and in the top 5% of the company. But you guys have even a better opportunity with the variety of products that you can offer to the public. So that's a little bit about me. Again, thank you to Tony and Lamont. If you have any specific questions, I'm here to hear those questions, or again, email me or reach out to me by text. Yes, Tony, I see you raising your arm up.
No, awesome. Yeah, so if you can, some people know exactly how your platform works, some people don't. Can you walk them through kind of what the new agents would experience by partnering up and leveraging your services, what the price is, kind of what the whole thing is from beginning to end?
So the first place one would go is to destinationforeducation.com. So destinationforeducation.com, which is in the chat, is my educational website. So if you go to that website, the third button over which says register, when you put the mouse over that register button, there's going to be a spot that says TKO Financial specific to you guys. So when you click on that TKO Financial, you will see the opportunity to register, and you'll see that I'm going to hold for Tony and Lamont 2 sessions a month where you can come in for licensing. There you go. And there you go. You can come in for support in preparing you for licensing. So I know you guys are using Excel, and I will become more familiar with Excel. For many, many years, I've used 2 other companies. I use WebCE and I use ExamFX, but we will work with you with Excel and prepare you so you can pass your licensing exam. But we need to see a commitment on the new agent's part. So one of the things that I spoke to Tony and Lamont about was that we wanted to see somebody at least more than 50% of their way through their self-study before they come to meet with me. I want you to come to me with specific questions or concerns. And I want you to be in contact with me so I can support you with additional material besides what you have from Excel. Because my goal for the last decade since I left sales, retired from sales in 2009, so actually the last 12 years, my goal is to develop and train really good financial services, property and casualty, life and health agents and brokers. So I want to see quality agents and brokers out there working with their clients and their clients' needs. And a sidebar to helping you with licensing is, Lamont would know this, I will be here also to mentor and support any of you in getting your business started. Because I spend a lot of time, not just in the United States now, but around the world on calls during the week, working with people. And if you went to that Now page, the landing page that I have in the chat, you would see transforming referrals into raving clients. So that's a goal that I think every small business person should look to do, is turning their customers or their clients into raving clients. So I work with agencies and helping them build their agencies too.
That's awesome. That's awesome. So guys, so you understand what this program's all about, okay? And a couple updates for Paul, but also a couple of things as well too for the VPs that'll be beneficial with regards to partnering with Paul. You guys know, right, as you're building agencies, sometimes you get agents that are studying for their license, and if you're not on top of them, if you're not checking up on their status, they kind of fall by the wayside, right? So what happened is I had this conversation with Paul, and he came up with a really great idea, and this is where this partnership comes in. So how it works essentially is when a new agent comes on board, you know, the enrollment form that you have to check off whether they're licensed or not licensed, that creates a filter. He's going to have access to seeing all nice non-licensed agents as they come through. And then what's going to happen is when they come through, he'll call them, introduce himself to them. He'll set up a 15-minute kind of get to know you phone call and really talk about the services. The services is designed to pair up with Excel solutions if you're in 49 out of 50 states. Paul, just so you know, Illinois is using ExamFX. Excel doesn't work in Illinois, but it does work in ExamFX. And Illinois, we can get you, if I'm not mistaken, a back office access so you can see kind of their progress and their status and stuff like that. But the idea behind this, guys, is he's going to provide that coaching mentality, that coaching experience. So he'll do Saturday sessions every other Saturday with the intentions of going through the chapters that people are studying to make sure that they're clear in the information and ready for the state exam, right? The requirements are very simple. They've got to be scheduled for their state exam before they enter his class. They've got to be able to show him that they scheduled their state exam. And you really want them to be at least 50% of the way done with the study program before they come into the first class. Now, what will happen essentially is it takes 2 Saturday sessions for him to complete the entire program. 2 Saturday sessions, he'll go through all the life side of it. He does not cover health side unless that person specifically wants health to be covered, which would be an additional session. And he can talk to anybody in any of the 50 states in one session because he doesn't cover the state laws associated to the state that they live in. Now, that doesn't mean he's not willing to do a state laws session, but again, that would be another session, a separate from that one. So what are the requirements? He needs at least 10 students per class. Okay, we want to make sure we value and respect his time. The price per student is $34.95. So if I'm a non-licensed agent and I'm looking at it, I'm saying, man, I want to speed my process up of getting my license because I want to make money, I would register for his class knowing that it's only 2 sessions, $34.95 each piece. I've got an instructor that's going to get to know me, that's going to talk to me, that's going to check on my status, create accountability, right? Make sure that I'm able to sit in on his live session for Q&A. Then make sure I'm able to sit in and go through these chapters. And the reason he wants people to be at a certain place is so that the lessons that he's teaching is all relative to where everybody is in the classroom. That's the benefit of this entire process. Now, VPs, what's the benefit for you? The benefit for you is this. On a weekly basis, Paul will get you a report. He'll get you a report on where your non-licensed agents are, where are they in their progress, who's actually absorbing the material, who's going to the trainings and really participating and capturing the information. Paul, something else that I do have access to now getting you is a weekly report card on where they are with Excel solutions. I wasn't able to get that to you before. I've got someone that'll actually give me a report on where they are. It's just a matter of getting the names of the people that are participating with you. You get me those names, I'll get you a weekly report. But the level of accountability is what I love. If you think about it, Sandra's all over the licensed agents. You guys have seen it. She's on top of it. She's texting them, calling them, where are you? Where are you? Where are you? That piece is covered by Sandra, right? You know, the VPs, myself, and the field trainers, we're all over the field. We're covering your end when you're finally contracted and getting out to the field and making money. So where does Paul come in? Paul fills the gap with the non-licensed agents. Now the non-licensed agents have someone that they can quote unquote report to, get coaching from, accountability from, deadlines from, and that should speed your process up because let's face it, in this industry, we want to have fast conversion. You want to convert from enrolled to ready for state exam, from state exam to licensed, from licensed to contracted, from contracted to commissions. You want that process. And if we don't have someone that's on top of the non-licensed agents, then you really have no choice but to focus on the licensed agent. And let's face it, eventually this wave of licensed agents that are coming through, it's going to slow down. And we're going to start really working with the greenies, the greenhorns. those newer agents, we are definitely going to benefit from leveraging someone like Paul. So remember, $34.95 per class. It's a 2-class session. Okay. He requires at least 10 students in each session. He'll call your associate, introduce himself, edify the organization, obviously, because the partnership that we have in place, create accountability with them, and then get you reports on a weekly basis of where your students are. Did I cover that about right, Paul?
That's perfect. That's perfect. I just get right to the work, Tony. You're doing a great job of verbalizing it. And I think that Lamont would have plenty to say about me also. Look, they're all going to get to know me, and Lamont knows me. So 1, I'm very direct. 2, I'm extremely heartfelt about what I do in this industry that I'm in, because guys, many of you don't even realize the value of that license that you hold and the difference that you make in people's lives. You're starting to learn about it. But I had a situation, if I could take a second, Tony, which was only in the second year of my career. I was only 24 years old. I'm 62, I'm going to be 63. And I wrote an application and collected a check on a gentleman who didn't live far from where I'm living right now. I've been in the Hudson Valley all my life with a wife and 3 daughters. And I collected that check, and we had reporting days on Tuesdays and Fridays. And my manager at the time, it was only my second year at Prudential, called me and said, Paul, do you have that check and application that you were on that appointment with? And I said, yeah, it's in my briefcase. He said, we just got a report the guy was rushed to the hospital and the guy passed away. And on a $375 check, they paid $425,000 to that woman and her 3 children. And I used to see him in my little town here in Pine Bush all the time, and they'd be like, I was God. And I'm not God, but I am very serious about what I do, extremely serious. So I will take the time to work with you guys, but I want to develop good people. And if somebody's not interested, I'm okay with that too. But I cut right through that stuff. That's why it's going to be a blessing to get to speak to somebody, because some of them are just not going to be interested. And that's okay, because the industry is not for everyone. But those who are interested and really going to commit to it, I will work very closely with you, not only through licensing, but if Tony allows me, once you're licensed and you guys get going, I have other tools that can help you build your business. And Lamont knows that. And I'll assist you with those tools, because I want Tony to be very successful, and I want all of you to be very successful. So, but I'll be very direct. I'll be very direct. I'll be very honest. I won't mean to hurt anybody, but sometimes I offend people. But when they get to know me, they know it's coming from the heart. So I just very serious about what I do. Very, very serious. In fact, one more little story, Tony, which maybe is a story that shouldn't be told, but I was licensing a class recently. And I had a kid that comes to, and we got to start dealing with this as educator. Kid came to class the first 5 times, stoned out of his head. He couldn't be any higher. And on class day 5, when he came in with marijuana all over his sweater, and the girl that was buying drugs with him on the breaks in our class said, oh, look, you got marijuana all over you. He brushed it off of him all over the floor, and he started to act up. And I grabbed him, which you shouldn't do, by the way, guys. I grabbed him in front of the class, and I went to throw his ass out the window. He sat right by the window, and we were on the 2nd floor, and I had him ready to throw his ass out, and I would have threw his ass out the window. And a big guy stood up between the 2 of us that was in class, and he's like, Paul, calm down, and separated us. And then the class was silent for the rest of that night. But when he came back on Saturday, in fact, he just called me. He lost his father on Saturday to COVID. And this kid became like a son to me. When he came the following Saturday, he asked to speak downstairs, and I said, look, Nick, you're 22 years old. You got your real estate license. You're about to get your insurance license. You come from a well-to-do family. You got a tremendous amount of potential. I'm here at 9 o'clock at night away from my family, helping you to get licensed. I'm serious about what I do. You're going to be serious about this. This is great. If you're not going to be, you can pack your shit up and leave. He said, you treat me better than my father's treated me. And we built a relationship like that. And just prior to this call, he called me to say, because the funeral was yesterday, thank you. And he said, now you're my papa, which is nice. It's a blessing. But I'm serious about what I do. And this is a serious business, guys. I want you to have fun, but it's a serious business. You're making tremendous differences in families' lives with what you're doing. So thank you, Tony, for the opportunity.
Thank you so much. I appreciate it. Does anybody have any questions before we let Paul go? I know he's got a busy day. Anybody have any questions?
I've got to do some CE at 2:30.
Oh, I have a question. On your website, you have some things that that you could probably extend to the community, but you're looking for the safety drivers, the defensive driving. It's so interesting that we're just having this conversation this week about people that really need that service, and so the affiliate is somebody that you present this every state, or is it just New York and New Jersey?
No, every state. I didn't go to, there's so many things. Minor, is that how you say the name?
That's right.
Minor. There's so many things that I do. Lamont will start laughing. There's several plates that I spin. The two primary plates are insurance education, and I've been almost 40 years in insurance. In March, it'll be 40 years. Coming up a couple days. And driver education, which is coming up on 24 years. Those are the two primary pillars that I spin, and both those educational fields. With COVID-19, the driver education field is kind of slowed down tremendously because a lot of that was classroom. And even with the insurance side here in New York, we changed some things, like our property and casualty is now available online. So I've made up a lot of adjustments going to the virtual world. But I offer a lot of services. That's one of the services I'm looking for. I'm always looking for people to represent. I don't want to distract you from what you're doing with Tony. I want you to be your primary focus. But I'm here to help you with additional services, and there are additional things you can do for customers that can help you retain your business. And I talk to insurance agents about that all the time. And then the other thing is, I want you to turn your referrals and your clients into raving clients. Guys, you can do this. They're not just a client. They're not just a customer, actually. I hate when I hear that in the insurance world. They're not customers, they're clients. You build relationships. I spend every day, people laugh talking about how R comes before S in the alphabet, relationship before sales. But you got to make sales too. You got to make a living. You got to pay your bills. But I want to also teach you to build relationships and build clients for life, and a referral system that's going to take care of you for life. Because I know, I've done it. So you can do it.
Awesome.
But thank you for the question. All right, guys, I got to jump because I got to go take care of a CE, but it's been a blessing to meet you all. Best way to reach me is by email, or you can call me, or you can chase after Lamont. He knows how to chase after me. Don't be giving Tony too much work to do. He's got plenty to do. He's got plenty to do. All right, guys. God bless you. Have a great meeting. Thanks.
Have a good one. Thanks, buddy. I appreciate it. Appreciate it. Does anybody, I know a good amount of that whole program. Does anybody have any questions that you want addressed before we move on to the next section of the training?
I don't want to hijack the conversation, but I don't see anybody talking. So I wanted to say, one of the things that they do is PNC. And when we're talking to clients in the home, this conversation comes up often. We're like, man, I wish I could pay a little less on my auto insurance. And then you don't want to call your agent, your State Farm agent, or your Geico agent. You could refer the business to Lamont and that company. That way, it more retention for you. So that's one of the things that I picked up on. I love the PNC referral.
It's good stuff. It's true. I mean, one hand washes the other, right? He's one of our partners. If we can help him, I guarantee he'll be able to help us as well too. Whenever someone needs insurances and they happen to be in a state that you guys are located, is a good referral he'll give to us if obviously we're feeding him. So 100% good. Anybody have any questions? Feel free. I know we just finished lunch. Hopefully y'all ain't lethargic. We've got a killer second session. So
can I chime in?
Yes, please go for it.
No, I'm a property and casualty agent. I have the agency that I'm running. If anybody wants more knowledge or more information on that, let me know.
Okay, awesome. Good to know. Good stuff. Cool. Anybody got any questions? Any questions before we go on? Let's go. No, nobody? Okay. All right. So let me give you kind of an agenda of the next session. Okay. Number one, this is the most pivotal part, right? You guys just had lunch. You ate some good food. You got to fight the sleepiness. You got to fight the lethargic behavior. Okay. These are the $1 million opportunities that you want to make certain that you are 100% focused. So if you need to get up and stretch, get up and stretch. If you need to do some jumping jacks, go do it. If you need to get some coffee, go do it, because we're going to go on right now for another 3.5 more hours. And this session, we're going to talk about how to go from selling just final expense insurance, but also now getting into potential IUL sales, potential annuity rollover sales. I'll tell you this, guys, you know, the formula for annuities, for example, it's such a sexy formula. Some of us came from a platform where, you know, they give you this percentage, but you really get a percentage of a percentage, right? So if you were at like a 50% and the annuity was they solicit this 8 points. 8 points was really just the credit that the company received, and then they would only give you half of that, right? This doesn't exist in the annuity world. So if you see your comp grid and you're at a 7% or a 6%, that is your comp. So that means that every $100,000 that you roll over is a $6,000 commission if you're at 6%. It's such an easy formula for you guys to do. I mean, that's the power of being independent. So the next training we're going to talk about is how to leverage mortgage protection leads, how to uncover opportunities when you're in those meetings, how those leads could be ran virtual so you can run multiple meetings, and how you can begin the process of nesting in the younger generation and get access to kid IULs, former employer rollovers, individual IULs, GULs, a huge market. Okay. So I need everybody focused, everybody attentive. Now, we're going to do this one in reverse, right? So the first half, I did the training, and then we closed it off with Rubiel's explanation of how final expense works within our platform. This one, we're going to do reverse. We're going to bring up one of our VPs that runs the agency called TOC Agency. Okay. We're going to bring him up. He's going to give you a good 30 minutes on mortgage protection, how it works, what companies we have. He's got a lot in store. And then after that, I'm going to take over and we're going to finalize with some training the same way that we started the first half. So without further ado, I want to bring up an individual I'm excited about. I'm excited about it because, you know, Rubiel talks about first two, right? First two. Rubiel was the first to turn in business. I think right now Rubiel is going to be the first to commission as well too, right? But Minor and Nivea have the record for being the first to turn in an infinite banking case. An infinite banking case that is the client, if I'm not mistaken, is putting close to $50,000 a year into this product, leveraging one of the companies that we have in our platform, or $50,000 the first year and then $10,000 afterwards. Either case, to get a client to make that kind of a commitment shows a strong knowledge base in the product line, and he's going to be delivering a message. So give him some love, give him a round of applause, unmute yourself, show some love to my buddy, my friend, Mr. Minor Ramos. The floor is yours, brother. All right, do you need the screen share?
Yeah. Woo! Yeah. Thank you. Thank you. I work along, you know, with Nivea. If it wasn't for Nivea, I wouldn't be who I am. So, you know, always want to acknowledge that as well. But I do, when we go through this, I only have 30 minutes. My intention for you is to bring you some value, not so that you learn every little bit of knowledge that we're gonna share with you, but that it gives you the push to get in front of clients, and that way you can be able to convert them later, you know, to bigger things. The only thing that I want to do, if you guys could if I could just see some cameras for just 2 minutes, I want to ask you a question. When I say the words mortgage protection, and if you have no idea what that is, you put up a 1. If you have some knowledge of it, put up a 2. And if you're an expert, you're like, Minor, there's nothing you can teach me about mortgage protection. I know everything, and you would be a 3. So if you could just put up put up your numbers here. So, okay, so I got some 2s, I got some 2s. But I don't see, I see some, all right, so kind of a mixture of some 2s here. Is anybody not going to participate no matter what I ask? Is that okay? I got you. All right. So good job there. What I'm going to do is I'm going to get right to it. I'm going to get to the information, and then knowing, you know, kind of where you are, I'm tailoring my information to you, because I want this all, you know, to be about you. And then I'm going to leave about maybe 3 minutes towards the end, and I'll tell you a little bit about me and my story and what we want to do. So let me go ahead and share my screen real quick. And I just need one person to say, yes, we can see your screen.
We can see it. You got it.
Yes.
Awesome, awesome, awesome. Okay, well, here we go, guys. Let me do this real quick. I gotta move this around so I can get this thing to show. All right. So I'm able to get this thing kicked off. Hey, Nif, can you help me out for a second? Now, I just want to be able to run this because every time I do this, like the little menu box gets in the way. Let me, yeah. Once we do this, we're rolling, guys. All right. Once we do this, we are good to go. So while Nivia's helping me out with this, I just wanna tell you guys, mortgage protection is nothing more than a marketing term. I want you to realize that when you talk to clients and they tell you that they already have life insurance, that's great. What is it earmarked for? That's awesome. What is it intended? You know, what is the intention for it? So when you hear about mortgage protection, it really is just a term in the industry. Now, what I want to do is I want to show you why it's important for you to be able to, you know, to kind of capitalize on some of the benefits that, you know, that the mortgage protection has. So let me give you this. When you're in the home, what you're going to do is you already had a great training today about some of the things to do to kind of set it up. But once you set up everything the way that Tony taught you, you're going to ask some specific questions, because what happens is most people haven't thought about this. So if you ask John and Mary, what would your situation look like if the main breadwinner didn't come home due to a car accident or heart attack? And then shut up. Let them tell you. Let them tell you what their thoughts are on it. John and Mary, if one of you passed away, would the other spouse be able to stay in the home where you would have to sell or move? You're really getting them to a point where they're starting to see that they're not invincible. And it's not that we're drawing attention to bad things, but we want to be prepared. That's what insurance is a loss mitigation, right? Is a loss prevention. It's managing risk. And that's what you're doing for the clients. You're helping them to manage their risk. The other question you can ask is, what happens to the kids if both parents were to pass away? Would the guardians have enough money to support the children? Now, we're going to talk a little bit about some of the companies that we represent, but I want to tell you this. If that happened to my kids, if it happened to us, I already know that the people that will be taking care of them, they don't have to scramble around to look for funds to take care of our kids, because that part's already taken care of, because we believe in this. One of the first things that you have to do, when your conviction in your voice and in your body language is going to come by you having it. I know Tony's talked about this all the time, but if you don't own one of these policies, it's very difficult for you to convey the importance of having these policies. So if you're a homeowner, you should be thinking about, you know, doing something like this. Okay. The other one's going to be what happens to the house, right? If the owners were to pass away, would the person inheriting the house be able to afford the mortgage? So I'm gonna share one quick story with you, and then I'm gonna go on to the next slide. Basically, what I like to tell people is the things that happen to you in your life are intended for you to learn something, or for you to prevent that heartache or that headache for somebody else. When my father-in-law passed away, he didn't have these affairs in order. And we're going to talk a little bit later about wealth creation. As you know, when I finish off, I'm going to talk about wealth creation. And there's three things that I like to emphasize. And one of them is a family constitution, a family bank, and something that we call a family office. But one of those things that are part of it is making sure that there is a succession plan. And that's what you're really doing when you're asking these questions. You want to know if your client has a succession plan should the inevitable or the untimely, death of either one of them should happen. Okay, so who is your ideal client? Now, what I'm talking about is mortgage protection leads. I'm talking about the way that a company solicits the mortgage protection, so that you can sit in front of these people. So obviously, you're going to have somebody who is an existing homeowner, or the people that are just closing on their home. Those are the people that get hit with mortgage protection leads more than anybody else, or somebody that's just refinancing. So if somebody is just closing on their home, that's a really good time to go and talk to them about this, because they, they're excited about, getting their new home, but they're going to be the most emotional about protecting the biggest asset that they have. And actually, I'm not going to get into this too much. It's really not an asset. It's really a liability. I'll talk to you a little bit more about that when we get into some higher level concepts. You want them to, to be married. Why? Because if you go into a home and it's a single person and they have nobody, like, no one's going to inherit the home, it's going to be a lot harder for you to close on that. But if this is why we do the appointments with the two, the two individuals. Married, obviously, if they have kids, that's a huge plus. And I'll tell you a story, some other time about how when somebody said, "Oh, I need to think about it," like when you're in the home, that's one of the things that you might hear about. One of the agents in the field said, "Listen, I'm not here for you. I'm here for him." And he pointed at the kids. It's like, I'm an advocate for that kid. You can think about this all you want. I want to make sure that that individual who doesn't have a voice gets to hear, the message. And believe it or not, that actually turned the individual around and started thinking, wow, I was thinking about it as an expense. I wasn't thinking about it as something that if things would happen, that, things would be, be handled. I'm going to encourage you. I'm real big, like Tony, I'm real big on retention. I'm real big on what we call placement. And I'm really, really big on the persistency. And very quickly, you're going to be able to identify, you're not going to be able to do this in the beginning, but you're going to be able to identify eventually what disposable income of at least $100. So one time I had an opportunity to put this together for somebody. And when I went to collect the check, he gave me a bank statement that showed a negative balance. It had insufficient funds. And I kind of had a question about that. Like, hold on a second, you want to put this policy in place, but your bank account says it's negative. Can I just ask you a little bit more about that? Do you at least have $100 of disposable income? He goes, well, I know I really need this, but I always battle. I'm like, we might have to dig in a little bit more. We might have to come back and do another presentation with them, get that FNA going. And this is actually going to be, able to help you to retain. But ideally, we want to have a family that has at least $100 of disposable income. Now, the age, this is not all inclusive. I'm just trying to tell you, if you get into a market that's between the ages of 25 and 55, that is your avatar. That's your customer avatar. That's who you want to be in. That's the market you want to be in, because these are the people that usually don't have the health issues, and maybe they're struggling with money. But if they both, and I'm going to show you a little bit more about how to assess once you're in the home, how to do this. But that's typically, where we're at. Obviously, we're talking about mortgage protection. Rubiel did a great job of talking about final expense, and that's into your 55 plus arena, okay? Now, what are the 5 keys to a good mortgage protection? So one of the things that, before, there was a long time ago, there was a mortgage protection that was sold as a decreasing policy. Now, I don't know that there's many carriers that do that anymore, but if you're talking to somebody who's a little bit older, maybe a boomer, they might think that this is what it is. And we want to make sure that they know that this is level, and there's going to be no change in the premium. It's going to be set and, for the term that you decide. Here, if you're writing down notes, I want you to really emphasize this. Now, John and Mary, with this policy, you become the owner, not the lender. I want people to really get that when people talk about mortgage protection, they're thinking about what's called MIP, Mortgage Protection Insurance, or the FHA PMI. What that is a portion of your payment. If you bought a home and you didn't put at least 80% down, you're going to be paying that. But what happens with that is the only beneficiary to that is the lender. And I want you to know that does nothing for you and your family. And the only way that I know this is, again, I was in the home. I was talking to this gentleman, and he told me a story about, he said that when his wife passed away, he thought that he had this mortgage protection. When he went to Bank of America, and listen, guys, working in banking, I am not ashamed of putting down some banks. Okay, I mean, I'll protect everybody else, but banks, I'm not shy about them. He went to Bank of America. Bank of America told him, hey, that policy or that premium was intended to protect Bank of America in case you can't make your payments. So thank you very much. We'll take it from here. We may start, the foreclosure proceedings and so on and so forth. So he was under the misunderstanding that that's what it did. I want you to know, when you work with us, Mr. and Mrs. Client, you own the policy. The other beautiful thing about this is there's been trends. Typically, either people move usually 4 to 5 years into the home, into buying the home, or they refinance. When they refinance, obviously, there's, that PMI follows them. What we're going to do is we're going to show them that this mortgage protection plan is portable. It goes with you. It follows you wherever you go. Well, Minor, what if we decide to sell the house in 2 years? Great. Just move it with you. Because you're the owner. If we're going to decide on the value. Now, what we're going to do is if you're into this home right now, it's only $274,000. If you buy a $500,000 home, I'll be there, the next day after you close, so we can update it and modify it to your current needs. Sound fair, Mr. and Mrs. Client? Great. Now, as far as the carriers, and I love the fact that we have a great platform for identifying some of the carriers that that we're working with. And I want you guys to know that this list of carriers is going to get even bigger. But I also want you to keep it simple. So I want you to master. When we're talking about mortgage protection, there's a lot of things that you can do, but the only thing that you should be doing is mastering the 3 main carriers that we're going to work on. The first one is American National Insurance. We call it ANACO. They have a tremendous product, and I'm going to talk to you a little bit about the ways that we can do it. North American is new to us, but it's not new to right? I mean, they've been around for over 100 years. And then now we're getting some really good stuff from SBLI. I know that Tony did announce that we got some special training from them. So what you want to do is it's really a couple of things. Understand which carriers there are, and then I like to go to the carrier website and get familiar with the underwriting guide. Your underwriting guide is your book in the field. You are a field underwriter. By the way, I want you guys to say this. I am a noble field underwriter solving people's problems. You are not an insurance salesperson. You are a problem solver, but you can't be a problem solver if you don't understand where this information is coming from. The reason why a lot of policies are written wrong is because people don't understand the underwriting criteria. If you're going to call yourself a noble field underwriter, the best thing that you can do is get to know these companies and to get to know their underwriting guidelines. By the way, you have people that you can reach out to, but you can also be self-sufficient. And by what I mean by that is, when Nivea, and I submitted that case, we weren't asking Tony, hey, how do we do this? We called the carrier, and we called UMS, and we did, like you have the tools. So now you have to use the tools. Once you have a writing code, an agent code, you can call these companies and say, listen, I'm kind of new to your company. I want to do a risk assessment. Would you help me out? In the risk assessment, you're going to tell them, I have a 45-year-old male, non-smoker in Florida. He doesn't take any medications at all, but 10 years ago, he had a TIA, right? Now, of course, you guys are wondering, what the heck is a TIA? Do what I did. Google it, right? And get familiarized. Don't expect somebody to feed you the answers. You can go out there and get this. The reason why I'm showing you this is because I'm I'm actually like, I always love listening to Tony because the words just come out of his mouth. Like it flows so easily when he's teaching about, you know, whether it's mortgage, but he can take any subject on this in this industry and he could just go on and on and on. You know why? Because he's practiced it over and over and over. So what I'm telling you, just master these 3 top companies, get to know their underwriting guideline. I'm going to give you a short introduction to what they offer and what we offer. Okay. We already know the term ROP, and you already know the term, the term policy. I'm not going to go into that type of a policy, but this is what I'm going to show an individual. Now, Mr. and Mrs. Client, take a look at this graph. On the one side, you have what's called ROP, return of premium. And then I want you to see where the money ends up, right? At the end of the term, you see the little arrow. Now, Mr. and Mrs. Client, who gets the money after the term is done? You, right? Now look at the right side. That's term insurance. If anything happens within the time that you have the policy, your family is gonna get the amount that we're talking about. But at the end of the term, who gets the money? The company. So Mr. and Mrs. Client, this is a very, very simple. You don't need to think about anything else. All you have to do is listen to your heart. Who do you want to get the money at the end of the term? You or the company? Did I tell you guys that I want to keep things simple? I mean, how simple is that? You guys want me to do it again? Okay, I think somebody's coming in. Tony, I don't know if you want me to let somebody in. Okay, you got a minute. That's great. All right. So Mr. and Mrs. Client, just take a look at this graph, right? We're going to put in this mortgage protection. I just want you to look at both graphs. At the end of the term, on the ROP, who gets the money? Ask them, let them tell you, right? At the end of the term, who gets the money? The company. Mr. and Mrs. Client, you don't need to think about this. You don't have to call your tax advisor. You don't have to call your pastor. You don't have to call your grandma. No, you don't have to do anything. All you have to do is listen to your heart and say, do you want to keep the money at the end of the term if nothing happens, or do you want the company to keep the money? Simple as that. All right. Now, the next thing that you want to do is you want to. This is the stuff that I love. All right. So my background is in banking. I am obsessed with what happens to the mortgage once the people have the mortgage, and what happens as, and how do they get rid of it. So I'm not going to go into, the volume of interest, how overpaid, highly interest, high interest is being paid on the mortgages. But I want to show you how you can, when you have the right conversation with somebody and you're doing mortgage protection, the way that you're going to introduce a guaranteed universal life, which is something that Anaco offers. This might be something that you may need a certified field trainer to go with you, a few times to go to show it, because you do have to case design it, right? And so that's something that, but I want to talk about, keep it simple and go high level overview. So have you ever heard of, if people do intend to stay in their home for 30 years, how can they pay off their mortgage in, 10 years earlier, or 5 years earlier, or 9 years earlier, right? Would you guys like to know how that works? So in the term policy, whether it's term or ROP, there's some thresholds that I like to follow. It's usually going to be anybody will pay up to $100. When into this kind of conversation, I'm going to have a few more. I'm going to dig a lot deeper into their finances. Here's the reason why. In order for their GUL to work correctly, it has to be properly funded. And typically, if you have a 25 to 30-year-old, it's going to be usually around $200, not the way that I design it. I know that there's a lot of people that design it. To me, it makes no sense if somebody pays $80 for a GUL. I think it's ridiculous, because they don't get it. They don't get how this works. So let's just say that somewhere between $200 to $400 a month. Don't get scared about that. Here's another thing: is you are the professional. You're the one that's bringing people this information. And the only reason why you never asked for a $300 monthly premium is because you're scared, because you're the one that's saying, I can't do that. And so you think that your client can't do that. Listen, there's people that are going to be putting in $100,000 of premium up front. And then, 10, 20, 30,000, 50,000 of annual premium. You just have to know how to ask the questions. So here is GUL. So John and Mary, here you are today, and your mortgage is $274,000. The red line shows the balance of your mortgage. The green line shows your position in the mortgage, meaning you are the principal in this transaction. You are the most important person in that transaction. Although when you look at the interest in the beginning of the mortgage, you see the yellow line. That's the bank's position. So the bank is going to get paid first. And so you start developing your position in the green line. And I wanted you to have that visual. What GUL will do with Anico is that it'll allow you at year 15 to take whatever accumulation that you've had. And if you, let's just say for like simple illustration, you get to year 15 and you owe $100,000, but you have $100,000 of cash value, you can cash that out, pay your mortgage 15 years earlier. Now, how many of you can get excited about something like that? Pretty cool. Obviously, when you go a little bit further, at 20 years, you can cash it out at that point, and then you can cash it out at, at 25 years. Now, most people say, well, what happens to the policy? Well, let's think about this for a second. John and Mary had this policy for $274,000. It covered them all the way through the year 15. The reason why they got this, it was earmarked for their mortgage. It allowed them to pay the mortgage off half of the time, 15 years early. So is it fair enough that because they earmarked it for mortgage protection, now the mortgage is gone, now they can take that $2,000 payment that they were doing and start creating wealth? This is why we talk about wealth creation strategies, right? Okay. Again, that is just a simple high-level overview of how you can explain the GUL. And I don't want you to think, oh, I could never do that. Don't worry about it. Just have that conversation with them. And it may be in the second presentation, that second appointment, that we may be able to go into that. All right, let's talk a little bit about money, and then we'll wrap it up. 2 more slides. The average premium on a mortgage protection is $84. That's about $1,000 of what we call annual premium. And the companies are going to, advance you 75%. The beautiful thing about this is that you can give the client the opportunity to say, look, if you want to pay the $1,000 right up front, just cut me one check and set it and forget it. You don't have to worry about it. And actually works out well for me, Mr. and Mrs. Client, because I do my annual reviews. So actually you're gonna be in sync here, because if you pay it all up front, I'm gonna be able to come back in a year and just kind of go over, make sure that nothing's changed, everything's good to go. And then it'll make my calendar easier, right? You know why people don't do that? Because the agents don't ask them, right? But you're a noble field underwriter that loves what you do, and you're going to be able to, provide this for them. But if that doesn't happen, if everybody's tight, on their money, that's what you would do. Is you would get up the 25% later. What's kind of cool about that, eventually you end up getting, these checks like a month 10. Like, where did this come from? Oh, that's right. That was that mortgage protection I did, 9 months ago. Wow. And it's kind of cool. If you have a bunch of those coming in all at once and they all hit, it can feel like residual. It's not residual because it was your advance and there's 25% paid at the end, but you guys get the picture. All right. I remember I talked to you about I'm obsessed with persistency. I think that keeping a 90% plus persistency is very doable. I'm going to show you how to do it. You ready? So we call that the quality of business. And the quality of business is, you don't just put in this policy because you need to get some kind of award or some kind of recognition or some kind of, rank, right? You do it because it's the right thing for the client. So you must bring a value to your client. You must be able they must be able to see that you're working in their best interest, and this is how we're going to be able to do it. You're going to provide some additional services, and Paul just talked about some of the things that we could talk about. We can do a comparison for PNC. We can do a couple of other different things, but what Tony's taught us is he's talked about nesting. Look at how nesting works. When you're in there, you're going to get it. You're not asking them. It's your responsibility to bring this information to their 2 immediate beneficiaries, right? Now, if they don't have 2 beneficiaries, well, then just add another one, right? Just make up another one. Just get in front of somebody else. And then 3 alternative beneficiaries. I want you to start sounding different in the marketplace. Guys, you know the industry. There's all these people that are pushing, all this other stuff. Start sounding different. Have your tonality be different. Learn your scripts and just really get to talk to your clients and build that relationship with them, right? So how do you increase your retention? Let's just say, for example, that in the unlikely event that somebody just all of a sudden says, you know what, I can't afford the $100 premium anymore. But you know what? If you wrote children's policies with Mutual of Omaha, at some point we're going to be able to do that. I have a client that she has, I don't know, was it 4 or 5 grandchildren? All those policies were $10 a pop, $15 a pop. But guess what that does? That helps your QBI, because that one policy that fell off was replaced with those 5 other policies. So think about that. And you think, well, why $10? Yeah, guess what? That's going to pay for your fuel, maybe some lead cost, right? You can also add, in addition to this, so you can start stacking with accidental policies. We'll talk about that, in future time. And then here's a good one. That's something that no one really talks about, but insure their neighbors. Now, Mr. and Mrs., John and Mary, listen, if your neighbor's house was burning and they were walking into that house, what would you do? You would scream at them, right? You would listen, your house is on fire, don't go into the house. Well, John and Mary, what I found in this industry is that what you just did for your family is almost like protecting somebody from a financial fire. How would you like to be the hero of that family next door? I think that's great. Let's go talk to them. Let's go over there right now. Okay? And I know you guys are saying that you don't have the guts to do that, but believe me, when you've been in this industry, you get some cool stories. All right. For the future, right? You have some wealth creation. Most insurance will never follow up with their clients, right? You want to be different. After you secure that mortgage protection, you bring in somebody else who's really good at finding the money for other stuff. The GUL is only one example of velocity banking. I'm going to talk about that some other time. And then the infinite banking concept that Tony was talking about it's a way for elite members of society to understand the battle against what we call TO. And some of you guys are from Hispanic descent or some larger families. You're like, yeah, I have one of those. I'm not talking about your uncle, right? I'm talking about taxes. I'm talking about inflation. I'm talking about interest, and I'm talking about opportunity that's lost because people don't understand these principles. So what I'm asking you to do is to help your community to eliminate scarcity thinking. That everything that you need already exists. You just have to have somebody show you how and be able to, basically take all the information that we already know, right? And be able to bring it to them. And I want to finish off with this because my time is almost up. I'm very respectful of your time. Very, very grateful to all of you, for being on here today. But I'm known as the principal defender. And what that means is that I'm obsessed with protecting people's money. So I'm the principal defender, not the principal, right? PLE, because I really get what happens on the other side of mortgages. I've seen it over and over again. And with this concept, we're creating people who are able to become private lenders, people who be able to, you'd be able to take out a mortgage with a private lender through an insurance product and not pay Wells Fargo, Bank of America, Chase, all these large sums of interest that goes to all the banks, and you start to create that for your family. My time is up. Tony, do you have any questions?
I love it. Does anybody have any questions, guys? If you have any questions, speak now, forever hold your peace.
I have questions for you, Minor, but if they're going to be more detailed. Oh my goodness. Awesome, awesome, awesome. Thank you.
Yes.
Awesome. Awesome, awesome. I appreciate it. Thank you so much, Minor.
I did have one.
You got a question? Go for it, Buzz.
So in a practice company, they had the same concept just inside the IUL. Without going into too much detail, could you just say why GUL versus IUL?
So you can do it with any permanent policy.
Okay.
With a whole lot. You could do it with a GUL, you could do it with an IUL. But what we have to consider is the cost of insurance within those policies. And so there are ways to do it the right way, so that there's what I talk about is the efficiency of money and the velocity of money. And that's one of the things that sometimes all these things are way later. I want to be able to find out, how does this work quickly? Like how do we execute this shorter rather than later? Good question.
Stuff. All right, guys. All right, let's get this bad boy started. Let me see where my camera is because I had to adjust myself. Where in the world is my camera? I don't know why. I cannot find myself. View. Let me see here. Gallery view. Are you guys able to see me?
Yeah, bro, you look good.
Why in the world can I not find myself? Hold up. What's happening here? I put my table up and I cannot find myself now. Let me see here. Turn that on. Speaker view. No. Okay, I got you. Let me. There?
Put yourself back. Okay.
What's that?
Put yourself back as host.
I am host.
Okay.
So weird. Yo, legit, like it just completely disappeared me on my screen. Let me see.
I always do that.
I cannot find myself for nothing. Hang on.
We can see you.
I'm not saying you can't. I'm just recording this, so I got to get myself back on the camera. So hang tight real quick. Wait a minute. Show self view. There he is. I hid myself. Pretty cool. It's kind of crazy when you can't find yourself. All right, let me see here. Speaker. Let me go this way. Let's go this way. All right, good. Awesome. So I'm glad, guys. I took some notes as well too. A couple things that I learned. Number one, self-efficient. That's a big word. Self-efficient. You know, he's 100% right. You know, just so you guys know, the reason we have mutual trust in our platform is 100% because they went out and they sought it out. They contacted UMS to say, do we have a carrier that's beneficial for, you know, infinite banking outside of X, Y, and Z? And they said, yeah, this company, great. We're going to call them up. They called the company up. They ran the quotes. They looked at the numbers. They did everything. And you know how I got wind of it? I got wind of it through Eileen, who's our back office licensing coordinator. Says, hey, they've got a pretty decent infinite banking case. They're ready to get going. You need to get contracted. Oh, okay. I didn't get a phone call from them or nothing. They're self-efficient. Sometimes you have to be that way, guys. Sometimes you have to be that way. What you're going to hear me talk about a lot when I'm training you guys on the field is, you know, removing the security blanket. Sometimes you get so used to, my upline's going to do this for me. He's going to do this for me. He's going to do this for me. He's going to do this for me. Let me explain what I mean by this. Sorry, I want to get my hat back on. Such a good hat. This is what I mean by this, guys. It's my job to get you to a place where one day you don't need me. That's the truth. It's my job to make you independent, not dependent. I'm not a big fan of leadership that withholds information from their downlines. I'm not a fan of that. There's leadership organizations out there that they've edified themselves so much and they're doing so well, but their ability to feed themselves 100% relies on their agents consistently taking them out to the field and splitting business, and they withhold information so that that agent always needs the upline. So what you'll see from me is that I run a 4-step training process. The first step is simple. You come, you observe, you watch me, right? You watch me, you take notes, we split it 50-50, okay? Do that for 2 or 3 times. And I'm really kind of measuring your proficiency. I want to see where you are. We move into the next stage. The next stage is you and I both, and we do it together, right? Let's talk before the meeting. Which part do you want to run? Which part do you want me to run? I'm here, I got your back, but now we're doing it together. We write business, we split it 50-50, no problem. The next phase, we do that for a couple times, right? And then we move into the third phase. The third phase is when it starts getting fun. Why? Because now we're going to go to a meeting together, and you're going to run the meeting, and I'm going to watch you. I'm going to be there to help back you up, maybe run some quotes while you're talking to the client, doing what you do, but you're doing everything. And, you know, I'm going to observe you, right? If we close the business, you take 75, I take 25, right? Now you're getting a bigger cut. So now you're being incentivized. Holy crap, I'm making more money. You do that for a couple times. And then the final phase is you go out by yourself. The test of whether or not you're ready to go or not is you go out by yourself and you come back with an application, because now you went out without me, right? And that's how the majority of the trainers here operate. And a lot of you guys right now, the conversations that I'm having with you is, how do you feel about, you know, jump into this next phase? And I always let you decide, where do you want to be? Now, you know, there is a level where I have to kind of rip the Band-Aid off and get you prepped, right? When I feel like you're ready, if you continuously kind of want to hang on to that security blanket, you might find me, you know, pushing you a little bit more out there into the deep end, but I'm going to be there. I'm going to be there. A couple of you guys have scheduled orientations with me, and I know you're ready to run your own orientation. So what I'll do is I'll be like, hey man, oh crap, something came up. Hang on, I'm busy. Click, boom, and I mute myself. And you're there in your Zoom meeting with your new associate, and you're like, what's going on? You're kind of waiting, and then I shoot you a text and say, hey bro, listen, I got backed up, bro. Can you run it real quickly? And really what's happening is I'm there, I'm listening to you, but I'm letting you run it, because you need to start running it on your own. The worst thing I can do for you in an entrepreneurial opportunity is make you codependent of someone else. You want to know what's the biggest leak in a business? When you rely on one person to get to the next step of your business. That's the biggest leak that you have in your business. So that's one thing that I learned from Minor. Next thing I learned was that Noble Field Underwriter. I like that. Noble Field Underwriter gives it that extra twist, man. I really like that. So something that I use when I sell ROP, just so you know, because I like what he used, something that I use as well. I go, listen, the way this program works is simple. If you die, your family gets the money, right? If you get sick, you get the money. If you don't die, you get the money. And if you decide to sign up for this, we all get money, right? It's kind of the truth, right? It's a little bit of an edge to it, right? So if you die, your family gets the money, right? If you get sick, you get the money to pay for medical expenses. If you don't die, you get all the money back, right? And if you buy this, we all get money. And I include myself in the we. And they just kind of chuckle and they laugh about it, but it's a way, again, to kind of break the ice. Let me see something here real quick. I want to do something. Hang on, one quick second. Babe, can you lift up? Is there a way to lift up that camera a little bit higher, or do I got to go up? Hang on. I feel like I'm like kneeling. No, it's not that one. Sorry, it's me a little wobbly for like 30 seconds. Making people dizzy. They're like, Tony, we just ate, man. I can't believe you're doing this to us. We're supposed to be on camera focusing on you. That's better. One of the greatest investments you guys can get is a table, a desk that rises. I got that desk that, let me see here. Is that better? I'm a little bit turned now. I got that. I got that desk that
we have those desks, and those are amazing. Thank you, Angie Alvarez.
Phenomenal. I love them. Let me see here. Go up a little bit more. And there we go. Just want to make sure I was good to go. All right, good stuff. Okay, good. Yeah, those to me are awesome, especially for phone zones. Phone zones, I love it. I utterly, absolutely love it because I typically will put on a Bluetooth headset like this and I'll walk around, I'll pace back and forth just to kind of get the blood flowing. It's a good feeling. It's a good feeling. Let me raise the table a bit so when I'm looking at the camera, when I'm looking at the screen, it looks like I'm looking at the camera, even though I'm not. Good investment, guys. This is, I got this one at IKEA. I think like 150, 160 bucks. They're not that expensive. Pretty good plan. Oh, make sure it don't break. All right, good. So let's get into mortgage protection. Just like final expense. Final expense is whole life, right? It's a marketing name. It's designed to pay your final expenses, right? Mortgage protection is term life, but it's a marketing name. Mortgage protection. So let's first talk about how the lead is found. Then let's talk about the ideal clientele that fits into that market space, okay? So the way you find the lead is through obviously creating marketing campaigns around mortgage. People get into a house, they sign up for a 30-year mortgage. What do they want to do? They want to protect that mortgage. They just got their nest egg. They just got their castle. They want to protect it in the event something happens. So people go online and they look for mortgage insurance. They when people buy houses, they hear that term all the time. Mortgage insurance. This is driving me crazy. Hang on, guys. I'm sorry. Maybe that'll help a little bit. No, I don't like it still. This is the tech. This is like the ADD side of me.
So while you do that, Tony, I was gonna ask you, for the mortgage protection, I have a couple people that I know that do loans, and they've asked me for flyers. Do you have anything that's like set up nicely that all we got to do is change the name, the address, and the license number?
Carriers definitely have things for that. Trying to think of carriers that do it, that have it. Americo has it. They have flyers for mortgage protection. Trying to think of who else. It'd be worth calling them and seeing which one. I think Foresters, I believe, does as well too. I believe Foresters has marketing material on mortgage protection as well too. Foresters, again, we don't have it in our platform for about another 6 months. Just so you guys know, we don't have it in the platform for about another 6 months. Just like Mutual of Omaha. SBLI would be a good one to check on to see as well too.
Okay.
So let me get back to it. So how is the lead obtained? The lead is obtained through the keywords, which happens to be mortgage, right? So they type up mortgage protection, lending insurance, something in that nature. They type it up on Google. What happens? It transposes over to social media. The person logs into social media. They see all kinds of advertisements, right? A lot of loans might already have what's called PMI, right? Principal mortgage insurance. And just like Minor talked about, that's insurance to cover the mortgage, but it's there to protect the lender, not to protect you. And it typically decreases as the balance of your house decreases. So a big selling piece in mortgage protection, mortgage insurance, if you're going to go the basics, it's just term life. Quick, boom. I'll do my presentation here shortly on how that works. If you want to upgrade a little bit, you go into the return of premium term, right? Now, why? Because the person gets their money back of what they invested into it, right? A great sales piece to that is signing up for, say, a 20-year return of premium term or a 25-year return of premium term, because most people get 30-year mortgages. So the idea is once you get that money back from that term policy, you can use that money to pay off the remaining balance on your mortgage and speed the time it takes to pay off your mortgage. That's a good selling piece you want to talk about with your client. But then the third level is a GUL, a guaranteed universal life product. Why? Because a lot of GULs have a return of premium rider embedded into it. So one of the questions that Josh asked was, is it ever right to sell an IUL? The answer is yes. You want to present it. And if it makes sense, the client will take it, the client will go for it. And if it's a suitable recommendation, I'm sure you'll present it. But the initial reason why we go down the GUL route is because the GULs have, it's almost like a lifetime term when you look at a GUL. You're guaranteeing the monthly price, the benefit, the time period, right? It lasts until age 100, however long you scheduled it to last for. The key component inside is the return of premium rider on year 20 and on year 25, which kind of validates the whole concept of, man, you can get this. And if you want to pay off your mortgage faster on the 25th year, you can cancel it, get all your money back and pay off the remaining balance. If you don't want to cancel it because you like having this insurance coverage until age 100, you can just keep paying it. And when your mortgage is paid off, it now becomes an estate planning tool that you leave for your family, right? So that's kind of like the layers, right? Term insurance, ROP with return of premium, and then GUL with return of premium. Does that make sense? Or does anybody have any questions? Everybody's good?
Well, does the living benefits come in packaged with that?
Yes. So North American and American National will do up to, I know American National will do up to $1 million of GUL with living benefits, with return of premium automatically included into the plan. That's not a rider that you have to attach. And it's non-medical with a premier rating up to $1 million with American National. With North American, I think it goes up to $2 million. So those are some very, very strong companies that you want to be able to leverage for that living benefit and return of premium option. Okay. Term with return of premium would be, Americo has a cashback option, right? I think it's called term CBO, cashback option, or Mutual of Omaha that also has a return of premium rider. But again, remember, Mutual of Omaha is not in our market and not in our platform until the end of May. Americo, here's the thing about Americo. A lot of people are selling Americo, and I'm not against it. I get it, but we're noble field underwriters, right? Americo historically is pretty stinking costly. I can, a lot of times for the same price that they're paying with Americo, I can almost get them double the coverage in another location, especially if they're healthy. So the benefits of Americo is, yes, it approves in 5 minutes, right there when you're in the meeting. The next day it gets funded. The next day after that, it's directly deposited in your bank account. I'm not knocking it, but when I know it's a healthy person and I know that, they can qualify for additional coverages with another product that has at the end of the day better value, sometimes I'd rather go that secondary route, even if underwriting takes a little bit longer, right? You do have to understand this: term insurance with return of premium rider, it's costly. If they can afford that one, I can almost guarantee you that they'll also accept a GUL. If they're willing to do it. And the reason why I say that is because most ROP terms that I've seen, I might be wrong, again, you got to do your research on it, are express underwriting plans, right? Mutual of Omaha is a simplified issue plan. Americo is a simplified issue plan. So because there's no medical, the prices are automatically higher. That's why I say if they can afford that one and they're healthy, chances are they can also afford a GUL through one of our top premier carriers like North American and Anico, and get more benefits for the same price they're already paying. Edgar, you raised your hand. What was your question?
Yeah, Coach. So I know there's people out there too that are refinancing or cashing out on the equity of their house. Is there any way we can market to those people as well, or is it just is there any way of marketing to them, to those specific people?
Yes, you can. You can. The refinance, I'm gaining equity, is an annuity opportunity, not an insurance opportunity. They're getting access to lump sum money. Where are you investing that money to? What are your goals? What are you trying to accomplish? Right? Premium financing could be an option as well too in that space. Because again, they have a lump sum money. They might want to look to reinvest. If that helps answer. I don't know how I would transition that to mortgage insurance. Maybe mortgage insurance if they're selling their house and buying a new one, right? Does your new mortgage have mortgage insurance? Are you protecting the balance of that mortgage if something should happen? Right? A benefit for someone who has a house, when you talk about selling the house or refinancing, is when you refinance the house or you sell the house, you lose your PMI that's already embedded into your policy. By getting your own insurance, it goes with you. It goes with you, right? PMI insurance also reduces to the balance of the mortgage, whereas your own mortgage insurance stays the same higher value that you initially started with, even though the balance is less on the mortgage. Those are kind of some of the things that I know are questions that get asked, the things that you can create and you can overcome the objections with. Does that make sense?
Yes, sir. Thank you.
Good. So, okay, so let's jump into it. So we understand leads now. Now, where are the opportunities there? Here's really where it is. The clientele that they're marketing to are between 20 to 45. That market is such an amazing market to work in. It really is. Why? Because that market, okay, that market allows for you to talk about kid IULs, because there's children involved, potentially, right? It allows you to talk about IULs, because they're young enough and IULs make sense for that market space. It allows you to talk about rollovers for 401ks from prior employers, because they're still in their working years. There's so much opportunity in that space. They're also much more tech savvy. So having the ability to have virtual meetings becomes really attractive. Like if you're going to buy leads and you're like, man, I live in a city where there's no leads, right? It's hard to find leads. I got to go buy it in other places. Mortgage protection leads is probably what you want to lean towards versus final expense. Final expense leads, remember, is the baby boomer market. What do they typically want? They want belly to belly meetings. Shake my hand, meet me in person. They don't understand technology. They don't understand, you know what I mean? It's funny, but it's not funny. But think about this for a minute. Paul just did our training earlier on his pre-licensing class. And what was going on with him in technology? He's like, yo, can you email me this link so I can open it up on my computer instead of my phone? And I'm like, you know, you can copy and paste it. He's like, yeah, but you know what it was? Technology was kind of getting the best of him, because that generation doesn't deal too well with technology. Notice what he said. You can communicate with me by email. Come on, let's be real. How many of us are like, send me an email? A lot of us are what? Send me a text. Send me a text, right? This device right here is the reason the millennials and even the Xers can run a successful business all over the place, right? So you just need to know that, right? Mortgage protection puts you into an environment where you can be a little bit more casual, right? You can do more virtual meetings. So if you're in a city or a state where you're like, leads are hard to get, final expense leads, for example, South Florida is hard. South Florida is a difficult market to get final expense leads. If you got to buy leads outside of your area, buy mortgage protection leads, because you have a higher likelihood of getting a virtual meeting than having to do a face-to-face meeting. And this is where you guys are going to want to learn how to find opportunities. So today's training has nothing to do with me teaching you how to sell IULs. Or how to sell annuities, but I am going to show you how to find them. I am going to show you how to ask the right questions when you're in a mortgage protection lead meeting, how to find those types of opportunities, because that's huge. That is clutch for you, okay? Before I shift, I did want to mention one thing that I didn't talk about with regards to final expense, and that's called life settlements. When you get into a meeting with a final expense lead, remember that person is 50 plus years of age. There's a probability, there's a higher chance, not a guarantee, but there's a higher chance that the reason that person is looking for final expense insurance is because they have a term policy that is about to expire, and they want to get coverage in place before it's too late, knowing that they can't qualify for a permanent plan because of the additional cost. You guys know that the more, you know, the older you are, the more insurance costs, because there's a higher probability. So wouldn't you agree that there could be people in their 50s and 60s who are like, man, I took out this term insurance policy back when I was 30, it's got 5 years left to expire. I don't need insurance any longer because I have enough assets, but I at least want to cover the final costs. Let me go look for final expense insurance. Would you agree that there's a probability in that world, right? Okay. Well, here's the opportunity. And you just got to learn to ask. You got to learn to ask. The kind of questions you want to ask is simple. Do you have any existing insurance in place? You do. What company is it with? Second question. Do you know of when does it expire? Third question. And the last one, do you know if that policy is convertible? can it convert from a term policy to some permanent policy? You know why that's attractive? Let me show you why this is such a killer type of a sale, right? You got say you got I don't know, it was a 35-year-old. He signed up for a 30-year term, which would protect him from 35 to 65. That's his time period right there. It's a $500,000 term. A 35-year-old would pay how much for a term policy? Like 40 bucks a month? Super cheap, right? Now, he's been paying into it for several years. No problem. Now, he's 60 years old. He's 60. He's talking to his spouse. He's like, honey, remember that term policy we got years ago? It's got 5 years left to expire. We got to make sure that we have something to cover the final cost of when we turn 100 and pass away, so we don't burden our family with that. We don't really need 500,000 of insurance any longer because we got assets. The kids are grown. They moved out. We at least need, $10,000, $20,000 to pay the final cost. Let's go online and find some final expense insurance. And then ring, ring, there's Edgar, right? He schedules the meeting. He's there. He's ready to go. He's in a suit, right? Buttoned down because he's professional. He understands that market. And he's explaining final expense, but then he remembers, holy crap, Tony talked about these questions. Let me ask. Mr. Klein, do you happen to have any existing insurance in place? I do. What kind of insurance is it? It's a term policy. I've had it already for like 20 something years. It's about to expire. Really? Okay. Let me ask you a question, Mr. Klein. When does it expire? Well, it expires in 5 years. Okay. How much are you paying on it? 40 bucks a month? Do you know what company you have that with? Actually, I do. It's with a company called AIG, or a company called North American, or a company called Nationwide, whatever it is, right? Mr. Klein, do you know if that policy happens to be convertible? Well, what does convertible mean? Can you switch that policy from a term policy to something that, will last you for the rest of your life? Yes, but have you seen my age? I can't afford it. I've looked into it. It's super expensive to convert that plan over. Oh, okay. Mr. Klein, let me ask you a question. What if I could have a company that I work with buy out your insurance policy from you in exchange for a lump sum of cash right now? Well, what do you mean? How much insurance is this? It's a $500,000 policy. Okay, so let me propose something to you. If you turn in this $500,000 policy to an investment company, they become the owners of your policy. They become the beneficiaries of your policy, and they'll keep making the premium payments for you. But in exchange, they give you $100,000 of this $500,000 right now, no questions asked. Would you be interested in something like that? Hell yeah. That's the thing. Yes, of course. I'm about to lose this anyways in the next 5 years. If I could get some money for this right now, of course I would. Can you qualify me for something like that? I need to talk to one of my specialists, but I'd like to set up a follow-up meeting with you within the next 24 to 48 hours to figure out if that's something you qualify for. We've helped a lot of people out in your position, and I have a good feeling we can help you out too. Let me repeat it. I'd like to bring in my specialist within the next 24 to 48 hours to figure out if this is something you qualify for. We've helped a lot of people in your position, and I have a good feeling we could probably help you. That's called life settlement. You know what life settlement is? There's investment companies that we have within our platform that will take ownership of these policies. And it's like reverse underwriting. They actually want the person to be unhealthy, because what's the business side of it? We're going to buy out this policy. We're going to convert it into a permanent policy. We're going to continue to make the premium payments. And when that person passes away, we're going to get $500,000 from them. In exchange, we got to give them $100,000 of our money from our bank account right now in their hands. It's reverse underwriting. It's so easy to do. And you know what's crazy? It pays out like an annuity. It pays out like an annuity. So think about it, $100,000 in their hands at 6%. Anybody know how much you get paid on that? Come on, somebody give me the numbers. You know it. 6% of 100,000, what is it?
$6,000.
Make my toes curl. Make my toes curl. $6,000 commission. That's not bad. You found this out of a final expense lead? Yes, I did. So you know what I did? I sold them the final expense and I did a life settlement plan. The final expense paid me $1,000 in commissions. The life settlement plan paid me $6,000. Holy crap. They don't got to do a medical for that? Nope. Right? What do they need? They need somebody that's elderly, typically 65 years or older. They need to make sure that the policy that they have is convertible. They need to make sure it has a conversion provision. And the client needs to be willing to relinquish their rights to that money. Sign it off. Here's the investment firm becomes the new owner, right? The investment firm becomes the beneficiary, right? And you give me my money right up front for it. Pretty stinking cool, wouldn't you agree? Any questions about this program before I move on?
Yes, Tony. So you said that typically the client has to be over 65 years or older. And do they have any requirements of how far they are in the policy? Let's say they're 25 into paying into the policy, they have 5 years left, or is it like, let's say 10 years and like 10 years left, or is there any benchmarks that they would be interested on?
Good question. The time period that they have left for expiration is irrelevant.
Okay.
It's irrelevant, right? The reason I say 5 years is because most people have a likelihood of wanting to get rid of their policies if there's only a 5-year period left.
Okay.
If they've got 20 years left, a lot of times they're like, I'd rather keep paying the $40 a month, right?
Right.
But they do have to be elderly, typically over 65, and the policy that they have needs to have a conversion.
Okay.
And just so you know as well too, this is with term insurance, but you can also do this with permanent. You can do this with permanent. So, let's say the IULs you guys are selling right now, we sell an IUL to a 30-year-old, and then 30 years later, he comes across some financial hard times, let's say, and he's like, man, I've got cash in there that I can dip into, right? I got 100 grand worth of cash that I can dip into, but the face value is a $500,000 policy. And times are tough. I can't keep paying this plan. I'm going to let it go. I'm going to surrender it. There's investment companies that'll take over those IULs or take over those whole life or take over that permanent plan, right? They'll take it over and give them a lump sum amount of cash up front for it. That's very plausible. You won't know until you ask.
What company are you using?
Let me get back to you on that one. There are companies in there. I just don't remember off the top of my head what the name of the company is. That's a great John Countryman question in our back office.
And also, is there any limits on the life of the policy, on the amount?
Typically, it has to be a minimum of $100,000 policy face value. That's
okay, what happened with that policy that's convertible, but some company has limits, like 15 years conversion into it or something like that. It has to be within that area, I guess.
To my understanding, at least as long as it has a 5-year conversion period, you're good.
Okay.
Okay, but again, my best thing I'm going to tell you is to what the first thing I started with: become self-efficient, contact the back office, and just educate yourself on it. Just know that those features are there. Know that those features
Very
are
good.
there. I'm sorry.
Very good.
Okay. And if anybody here wants to take up that challenge and educate yourself a little bit more on it, I encourage you to do it and then come and run a training on it. Here's the person I would definitely link up with. And I'll tell you this right now, I would probably even link up with him if I found a case like that. It's Michael D'Amico. You guys remember Mike D'Amico from the last Closers College? That's his world. That's his world. He's working a $1.5 million case right now. It'll pay like $40,000-$50,000 in commissions if he does this. And it's a pretty solid case. I'd recommend heavily that you guys leverage him if you have those types of cases, right? The first couple cases, 100%. 50% of something is better than 100% of nothing. Learn from someone who knows how to do it. Take a lot of notes and take advantage of this, because this is the benefit that you guys have. It's a huge benefit. The key here in today's training is understanding that it exists and asking questions. Now, here's something that someone might give you. Why are you asking all these questions? I'm just here to buy some final expense. What do you care what I currently have? You might get those questions, right? Like, why are you asking me these financial questions? I just want some additional final expense insurance. Why do I need to disclose what existing insurance I currently have? Your answer is simple. Mr. Client, Mr. Client, I'm a field underwriter. My job is to prove financial suitability. And I can't show financial suitability to the insurance company unless I know where you currently are with your finances. So I need to know what assets you have. I need to know what existing insurances you have. I also need to know what your health is like before we can, apply you for the right company. Because if I don't know enough and I apply as though I don't know, they could look at it like like you're withholding information and just decline you outright. And I don't want that for you. I don't want that for me, because believe it or not, Mr. Client, when you get approved is when I get paid. I don't get paid hourly. If that's okay with you, I'd like to continue. If it's a problem, I can respect that. It was a pleasure talking to you. Nothing wrong with that. Nothing wrong with having that conversation with your client. But you guys need to understand that insurability, you need to know what their assets are and how much insurance they have. If you don't disclose it, you put yourself in liability. That's why you have errors and omissions insurance, because you omitted information on the application. So you have to get that information. You have to. Because at the end of the day, the insurance companies are going to give limits to how much insurance somebody can have. You can't have $500,000 over here, $500,000 over here, $500,000 over here. 6 different insurance companies, $500,000. You got $3 million worth of coverage, but you only make $30,000 a year. Like, wait, what? Where is the logic behind that? Is how insurance companies would look at it. So we have to ask those questions. And in asking those questions, what do? We find opportunities. Assets are important to know. What assets do you have? Those are important to know, because if your dime analysis says you need $500,000 of insurance, but you got $200,000 worth of 401k money tucked away, do you really need $500,000 of insurance? No, you need $300,000. You get what I'm saying? So that's what insurance companies look for. That's why you've got to do a good job of asking those types of questions. Asking those types of questions. What are your assets? And in uncovering what they have, you uncover opportunities. That's the key piece. You uncover these types of opportunities for final expense, but in mortgage protection, you uncover rollover opportunities. You're going to uncover rollover opportunities, right? Do you have any existing assets? And then what you want to do is you want to list it off to get their mind thinking. Checking accounts, savings accounts, money in other investment accounts, business assets, maybe old 401ks from old employers. You happen to have anything like that? Oh yeah, I got $30,000 sitting with this old employer when I was let go during COVID-19. I didn't think I could move that money and that I was going to pay a penalty if I did. No, Mr. Client, you would get penalized if you take the money and move it into your bank account. But if you move it to a different investment firm, you don't pay penalties. Mr. Client, do you know that your existing 401k is charging you fees, right? And doesn't give you the opportunity to put additional money in. By the way, do you happen to know the name of your advisor? Don't worry, I'll wait. Do you know what adjustments he's made to your investment portfolio in the last year to 2 years? Don't worry, I'll wait. So does it make sense for you to keep your money in an account where someone isn't managing it, you're being charged fees and can't make any future contributions? Wouldn't you agree, Mr. Client, that keeping your money with an old employer is like keeping a bank account with your ex-girlfriend's name on it? It's just not a smart idea. That does make sense. What if I could show you a place where you could move it, where you don't have fees? You could put additional dollars into it if you want. You can sit with an advisor on an annual basis and review your plans and make adjustments accordingly. Can you do that? Yes, I can. I work with someone in my office who specializes in that department. Can we sit down in the next 24 to 48 hours to have that conversation? Sure. I just need to do a couple of things. How much do you have? And do you happen to know what firm it's with? Is it 401k money, IRA money, or you don't know money? I'll repeat it. How much do you have? And what investment firm is it with? Is it 401k money, IRA money, or you don't know money? Gather the data, get on the group chat. Yo, I need help. I found $40,000. Somebody help me. Right? Call me now. Morgan, right? Whatever commercial you want to use, but go seek help and get into a field meeting. Now, watch what I'm going to do. Something my field trainers are probably not expecting for me to do, but it's important that I do it. If I'm talking to the trainee who doesn't know how to sell this, put the field trainer up to the test. Meaning, this isn't about them coming into your meeting and writing up the business. This is about them coming into the meeting, writing up the business, but showing you how to write it. You got to be present for the case design. You got to be present for the application input. You got to be present for the underwriting. You got to learn the parts of the business before the meeting and after the meeting, because eventually you want to do this stuff on your own. I mean, don't get me wrong, if you don't care and you don't mind not learning how to do it and just getting 50% for them doing the legwork, go for it. If you want to be independent, you're getting 50% of your business, but you got to get something in return. It's called intellectual property. Teach me what you did the case design. Teach me what you did when you submitted the application. Teach me what underwriting is. Teach me why this company versus that company. Don't get me wrong, respect their time. This isn't about you taking 4 hours of their day just to ask Q&A over one case either. I got to respect the certified trainer's time as well too. But this is about you learning how to become a certified trainer. So that if one day you need to go out there and run meetings on your own, you got it. You got it. That's what training is really about. That's the opportunities that you find. Any questions before I go forward? Okay. So let's go into what a meeting would look like for mortgage protection. It can be virtual because they're younger. You've got to address the first part, which is the mortgage. So a couple of things you want to be able to do. Number one, congratulations on the house. Talk to me about your mortgage. It's a 20-year plan or is it a 30-year plan? Why is it important for me to know if they have a 20-year mortgage or a 30-year mortgage? Anybody?
The right product?
20-year term, 30-year term. Simple as that. Right? My conversation has to be relevant to their needs. I'm going to try to find other opportunities no matter what, but my conversation needs to be relevant to their needs. Right? Okay, great. And how much is your mortgage for? Oh, it's for, $300,000. Okay, gotcha. And how much? What's your mortgage payment on it? Oh, it's $1,800 a month. Okay, gotcha. Listen, why don't we do this for a moment? Let me explain to you the types of insurances that exist. And then based on this introduction, you can tell me which of the three you're interested in, if that's okay with you, Mr. Klein. Sure, no problem. Go right ahead. Perfect. So what am I going to do? Same thing. If I'm in a virtual meeting, some guys have seen me in virtual meetings. I have this dry erase board. I just literally back up and do it right there. I also have flip charts, digital flip charts with a lot of my presentations on there. So if that's something that's important to you to use a flip chart, we have those as well. Reach out to your VP, but get you access to the Evernote so you can do that. Or if you're face-to-face, same thing as I said earlier, legal pad, black highlighter, go at it. So I'm going to give you my presentation when it comes to mortgage protection that I always do with that particular clientele. Okay, so let me use give me somebody here in their 30s who's willing to be my supposed clientele. Anybody? Anybody? Come on now.
Yeah, I mean, Tony, I got that. Coach.
My man, Mr. Juan Graziani. How old are you, brother?
I am 36, sir.
Perfect. So you're gonna dialogue with me back and forth, okay?
Yes, sir.
Awesome. So Juan, let me ask you a question. How much is the mortgage that you just recently took out?
$1,600. Wait, how much?
The balance to pay off the house, to pay off the mortgage?
Oh, 170.
170,000. Okay, gotcha. And how old are you again?
36.
36 years of age. Okay, so we've got a couple different insurances. The first insurance is called term life. The way term insurance works is I'm going to give you coverage from 36 all the way to 66. That is a period of time of 30 years. Okay, it's a 30-year plan. Now, how does this plan work? You're going to make your monthly payment. If something happens to you within this time period, your beneficiaries, by the way, who would be your beneficiaries should something happen to you?
My wife.
Your wife, and what's her name?
Jalissa.
Jalissa, perfect. So we're going to use Jalissa here. All right, perfect. If something should happen to you, Jalissa is going to receive a check in the form of a death benefit for $170,000, and she can use that money to pay off the mortgage, or she can use that money to walk away from the house and get something else. Right? Now, I want you to know something, Juan. If something happens to you in this time period and you don't pass away, but you're not able to work because of a cancer, a stroke, a heart attack, or something in that capacity, we're going to give you access to this money in what's called a living benefit. Living benefit means you didn't pass away, but something chronic occurred. Cancer, stroke, heart attack, an organ transplant. Would you agree that something like that could stop you from working?
Yeah, I agree.
What if you can tap into this money and use it to pay the mortgage payments while you're out of work? Use it to pay the doctors, use it to pay for the electric, the water, the food. Would that benefit you?
Yeah, well, a lot. Yes,
Beautiful. Awesome. This plan offers you all those features, just so you understand. Just so you understand. Now, something like this, so that you know, it's going to run you about $40 a month. So the benefit to something like this, super cost effective. Super cost effective. The negative to something like this, it does expire. Once you hit 66 years of age, your mortgage is paid, which is great, but you also don't have any further insurance. That insurance piece is gone. Does that make sense?
Yeah, it makes sense.
Perfect. If I do this on a legal pad, I tear it out, boom, I give it to them. I go, now I'm going to call this the Camry of insurances. This is the Camry of insurances. Let's upgrade a little bit. What is the upgraded version of Toyota, Mr. Gassiani?
Lexus.
This is the Lexus. How does the Lexus work? You still got the same 170,000 of mortgage. You're still 36 years of age, correct? You haven't changed ages, right? In the last couple of minutes. Okay. See what I'm doing there? Humor, building rapport. Again, I'm selling me, not this. I got to sell me first, right? So now the way the Lexus works is I'm going to give you coverage from 36 all the way to age 100 now. That is not just 30 years of coverage now. This is literally going to give you 64 years of coverage. My goodness. Let me ask you a question, Juan. Is there a higher probability of something happening to you between 36 and 100 versus 36 and 66?
Yes.
There is.
Yeah.
And because there's a higher probability, I want you to know something. This insurance is going to cost a little bit more money. The Lexus costs more money than the Camry. You and I know that, right?
Yeah.
This is going to run you about $100 a month. Okay. Now, Lexus, just like many, right? Lexuses have some additional features that the Camry does not have. How does this plan work? You make your monthly payment. Something happens to you inside of that time period, same rule applies. A death benefit to Jaleesa, right? Or a living benefit for you if you're not able to work and financially provide because of a cancer, stroke, heart attack, medical illness, organ transplant, and a list of other things. However, I'm going to give you a feature here. If you could pay off your mortgage faster, would you take my offer? Would that be interesting to you?
Definitely.
Would be, right? Okay. So this has a feature called a return of premium. What this says is this: when you get to the 20th year or the 25th year of the plan, which 20 years from now, you would be what? 36, you'd be 56. 25 years from now, you'd be 61. You haven't fully paid off the mortgage yet because you got a 30-year mortgage. But on the 20th year or the 25th year, if you wanted, you could cancel this entire insurance policy and get a full refund of all the money you've ever paid into this. Now, what you do with that money is your choice. What you do with that money is your choice. Let's do the math here real quick because I'm really bad with numbers, right? Let's go 25 years, $100 a month for 12 months a year. That's $1,200 a year. Multiply that by 25 years. That's $30,000 I'm giving you back, guaranteed. You like that word guaranteed, don't you?
Definitely guaranteed.
Okay. Now you can do what you want. You could take that $30,000 and put it in your bank account. You can invest it, or you can use that $30,000 to pay off the last 5 years of your mortgage and help you speed up that process of paying off your house. But you have that choice. You have that choice. This is the Lexus. Now, what's the benefit to the Lexus? The benefit? It lasts until 100 years of age, and it has a return of premium. What's the negative? The negative to something like this is that you're not earning any interest on the money you're getting back. Only thing you're really doing is getting back the money that you invested yourself. Does that make sense?
Yeah, it makes sense.
Awesome. What do I do here if it's on a legal pad? Tear it off. Put it on the table. I'm literally, congratulations, somebody brought someone on board. Somebody, you guys are recruiting. I like it. While we're training, y'all are recruiting, man. Like my toes curl, man. Goodness. So literally, think about this. I'm at the dining room table, and they got one sheet over here talks about the term. Another sheet over here talks about what? What is this product called? This is called a GUL. Bam. Right? I tear it off. Boom. I put it. Then I go, okay, Mr. Client, let me ask you a question. If you and I are in a car dealership lot right now, listen to my language here, guys, please, because these are what I call trial closes. I'm testing the waters out before I go in for the kill. Okay, they're tie downs. I say to them this, Mr. Client, if you and I are at the car dealership right now, and the only thing I'm offering you is a Camry or a Lexus, now that you've seen these two cars, which of the two? Number one, are you interested? Number two is within your budget. You saw what I just said? Which of the two are number one of interest, number two in your budget? Because let's be real, everybody loves the Lexus over the Camry, but not everybody can afford a Lexus. Some of y'all need to be taking a bunch of you see what I'm saying? So which of the two, if you and I are at a car dealership right now, and the only thing that I could offer you is a Camry or a Lexus that I just shared with you, which one of these are two things? Number one of interest and number two within your budget. Right? Go ahead, Juan. What would you tell me?
I mean, interest, of course, the Lexus, but the budget, of course, the Camry.
Gotcha. But right now, based on your current budgetary situation, which of the two would you be more interested in?
One and the Lexus.
Lexus, right? Why do I do that? If he tells me right then and there, listen, I love the Lexus, but I can't afford that for nothing. Why on earth am I going to bring up the IUL? If he can't afford even a GUL at 100, why am I even going to bring up the IUL? There's no point. I'm going to retract. What I'm going to do is I'm going to retract and I'm going to start talking a lot about the benefits of a term insurance policy. I'm going to talk about the benefits, the features, the companies we have. I'm going to talk all about it. If I decide to go into an IUL conversation, it's because I've done a budget and I realize that they actually can afford it. But I'm not going to go digging myself into that other situation. They already addressed they can't afford $100 a month. Why am I going to talk about the IUL at $200 a month or $250? Does that make sense, everybody? Okay.
Yeah.
Now, if he says to me this, he says, you know, Tony, I like that Lexus, man. You like that Lexus? Great. Listen, I've got a third car I want to show you. I got a third car. Juan, what's your dream car, bro? What is your man, if I pulled up in this, my wife would be mad at me, but I'm okay sleeping in this car. What's that car?
My Vantage, my Aston Martin, bro. That car.
All right. So this is gonna be your Aston Martin.
Oh my gosh.
You see how I got him?
My clothes are pretty right now, bro.
I'm tying his dream car with an IUL. I can transfer the emotion of a dream car to this because I know his favorite car. Right? So this is the Aston Martin. Let me explain to you how an Aston Martin works in this scenario. Okay, it's still the same $170,000 to pay off your mortgage, as you stated. And what's going to happen essentially is you're going to pay into this plan. Aston Martin's cost a little bit more money than Lexus. Would you agree?
Yeah, I totally agree.
Okay. Let's just say that this is a product. This Aston Martin is going to cost you $250 a month. Right? Now, what happens with this money? This is a savings account now. This is an asset. See, you and I now are having an asset conversation, not an expense conversation. So don't look at this $250 like, man, I'm spending $250 a month in insurance. No, I'm putting $250 a month away towards my future. It's a very different way to look at this. But what happens with this money? This money is going to do two things. To the left, we're going to give you a death benefit and a living benefit of this amount, and it'll last you for 121 years of age. Mr. Client, do you know anybody in your family that's lived past 121 years of age?
I do not.
Do you know anybody that's lived past 121 years of age?
I do not.
Would you agree that this is now not an if I die, more of a when I die scenario?
Yes.
Pretty good, right? This type of person says, I worry about my last name before I worry about my first need. Now, that's what this side of the bucket does. This side over here, however, it's a savings account. And this savings account is going to do a couple things. Number one, it's going to earn you anywhere from 6 to 8%. Number two, it's going to have liquidity where you can tap into this money before retirement if you need to and use it to pay off the remainder of the mortgage if you want to pay it down early. Number three, it's going to grow completely and utterly tax-free. And the last piece of the puzzle is going to offer you lifetime income so that when you retire, not only is your mortgage paid off, but you can take the asset that it is and treat it as a lifetime stream of income for yourself. Juan, let me ask you a question. Would you agree with me that your biggest asset right now is your ability to earn a living and pay your bills?
It is.
So what if this could protect your home while your income is the biggest asset you have? But then when you pay off that home and you retire, it becomes the asset that now pays you for the rest of your life and replaces your income. See, what if I could turn your paycheck into your playcheck? I'll repeat that. What if I could turn your paycheck into your playcheck? Would that be of interest to you, Mr. Client? Why, yes, it would be. Great. So now, Mr. Client, based on the 3 products that I just showed you, right? Tear it off. Now that they got all 3 of them there in front of them. Based on the 3 products that I just shared with you, and based on the budget, because none of these make sense if you can only do it for a short-term period. Which of the 3 are you more interested in driving away with today? The Camry, the Lexus, or the Aston Martin? And you let them answer. Let them answer. Man, I really like that Aston Martin. Can you afford $250? I can. Is it going to cost me $250? Roughly. It'll cost you roughly $250. Right? Give or take a few. I can't guarantee you, because here's one thing I'd like to do. I'd like to run the numbers and see what this looks like before you commit. Can I get 24 hours to put together an illustration plan to show you how something like this would work based on this number 250? Will you give me that opportunity? Yes, of course I will. Great. Let me ask you a couple of questions, however, before you go. I need to know a little bit about your assets, because a lot of these companies that offer these products, so that you know. And and by the way, just so you know, this is called a LIRP. Stands for Life Insurance Retirement Planning. Okay? A lot of these products require what's called suitability, meaning they have to make sure that this recommendation I'm going to give you is suitable. And because of that, I need to know your assets, and I need to know a little bit about your expenses, and I need to know a little bit about your budget. Is that okay with you? Great. Let me take 5 minutes. What assets do you have? 401ks, IRAs, old employer plans, da, 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 da. You start filling out your F&A. Start filling it out. Gather the facts. Get the name, get the date of birth, get the gender, smoker, non-smoker, all that stuff. Get it all. Get it all. And then run back to the office. Oh my God! Hey, help me! No idea what the hell I just talked about, but I learned to do this presentation. Tony! Rubio! Somebody help me. Right? And then we'll help you case design. Right? You start case designing, and you put together your presentation. But here's the piece about this, guys. Don't feel like you got to present this every single time. No lie, I'm being dead honest with you. I stopped before I present the IUL and I asked them, Mr. Client, based on these 2 cars that I just showed you, we're at a lot right now and you're going to leave with a car. And the only thing I had to show you was a Camry and a Lexus. Which of these 2 cars are you more interested from a benefit standpoint, but also from the budgetary standpoint? Which one of these 2 can you financially afford right now? Oh man, I'm really interested in that Lexus. Okay, now I know they can afford 100. Now let me stretch and see if I can get them to afford 250. Let me add more value, see if they can afford 250. Because if they tell me, listen, I love that Lexus, man, but $100 right now, bro, there's no way. Why the hell am I going to keep going? Imagine being a realtor and you sit down with somebody, they're like, well, you know, I'm trying to get a $300,000 mortgage, and you take them down to Beverly Hills to go look at mansions. What's the point? Let me stay within your budget. Let me recommend something you can keep long-term, because a chargeback is a reminder to you that you should have done a better job fact-finding. Just so you know, a chargeback is a reminder to you should have done a better job fact-finding. This is why 95% persistency for me was the numbers that I carried because it was important to me that I recommended something that was going to be there long term. Edgar, you raised your hand. You had a question, bud. What's up?
Yeah, Coach. From what I understand too, we also got to be careful when we present these like the IULs and stuff, because we cannot use words like investing, right? Because then it can be an issue. From what I
It's not
understand.
that you can't. No, that's not true. So it's not that you can't say it's an investment, but you also got to disclose it's an insurance as well.
Okay.
You can't say this is an investment that does that, and then not disclose it's insurance. I mean, if it earns interest, it's an investment. At the end of the day, it's an investment if it earns interest, right? A savings account is an investment. It earns interest. You just got to be very clear. You got to be very clear and not withhold the fact that it's also an insurance product. It's going to have an insurance product because it is an insurance product. It's called life insurance retirement planning. You can't withhold that it's a life insurance policy. Does that make sense?
Correct. Yeah, because I know from the other practice companies that will say don't say investing, because then people will say that you have a series license you got to have a series license to say that word and stuff like that.
Listen, if a banker on salary without an insurance license or without a series license can sell a CD at 3% and call it an investment, trust me, you can call it an investment. Just don't hide the fact that it's also an insurance policy. Just don't hide that, and you're good. Don't call it a 7702 plan. That's what WFG used to do when I worked with them. Well, this is a 7702 plan. You know, a 401k. This is a 7702. You never heard of that? That's what the Wealth of America does. No, 7702 is the tax code that's affiliated with this insurance policy that allows this money to grow tax-free. Technically speaking, you can't even call it a 401k plan. It's not a 401k plan. 401k is the tax code affiliated to it. Hopefully that makes sense.
Thanks, Coach.
No problem. Questions? Questions. Okay. This is my biggest advice to you with this. Okay. If you notice, there's more presentations here because there's more opportunities. Final expense is clean. It's simple, right? Final expense, GUL. Boom, boom. This has more presentations. This does require a commitment to study at home. This does require a commitment that if I'm recording this right now, you're going to be listening to, I should be in your ear and on your phone for months learning these presentations. I should be, because this requires a level of understanding. First, now here's my advice. Before you learn how to run illustrations, which company to use, what medical underwriting is, before you learn all of that, just learn this first. You do this, and you learn how to tee up. You learn how to tee up a secondary meeting with a specialist. And I promise you, on the field, you're going to learn how to case design. On the field, you're going to learn how to present. On the field, you're going to learn all of that. I'm not going to teach you today how to present an IUL using illustrations. I'm not. That's a whole different layer. I first need to get you here. I need to get you here, understanding this. This is like the 50-foot bird's eye view of it. You want to zoom in? Right? Fly in, swoop in. Let's look at the illustration. It's a whole different presentation. It's a whole different presentation. It's a whole different presentation. But this puts you in that world. This opens up that opportunity, because now you took a case from mortgage protection, term life, and this guy now is saying, man, I could use this as a retirement account and insurance. You took this from a term case, $40 a month, right? I mean, you want to see something kind of ridiculous? Watch this. Let me show you the value of learning this presentation. All right, $40 a month for the term. $40 a month times 12, $480 of annual premium. Let's say you're a 100% contract agent, that's a $480 commission. Or master the presentation, study the presentation, leverage the presentation, and then leverage my certified trainers. And all of a sudden, I just went to $250 a month times 12, which is $3,000. Let's call the annual premium, because of overfunding purposes, $2,500 instead of $3,000. Right? You worked with a certified trainer. Man, I got to split that business. So now you split it and you're sitting at what? You're sitting at 1250, right? Because you get 50%, your certified trainer gets 50%. At 100% comp, you're making $1,250 instead of $480. 50% of something is way better than 100%. See the difference? And now you do this enough times, and one day you're going to get this chance to say, hey, I'm going to go do this by myself, and I'll make a $2,500 commission. So you first learn term, step one. Then you learn how to match up IULs, step two. Then you learn how to write IULs on your own, step three. And every time you advance, you grow your income. But if you try to go from here to here, you're going to fall on your face so many times, I promise you. And you know what's crazy? Not all of you are going to take my advice. Some of y'all are going to say, I can do this without you, T. I can do this without you, UBL. I can do this without you, my VP. I can do this without you. Go for it. Go for it. Call me. Let me know how it goes. Call me. Let me know how it goes. Right? So that's why I say to you this way. Step one, I learned term insurance. Simple. Step two, I learned how to present in a 50-foot bird's eye view, and I split the commission with my certified trainer. I make $1,250. Step three, I've sat with my certified trainer at least 3-4 times, learned how to design the illustrations, and now I know how to do the illustration presentation. So now I get to do it on my own, $2,500. You see how knowledge becomes power? This is called intellectual property, intellectual property, intellectual property. You know, it's one thing I can catch right away. I can catch it a mile away. When there's an agent in the organization that doesn't want to use a certified trainer and just wants to call you and ask you questions. Hey, so, you know, I'm putting together this case. Can you, what about this? And what about this? And what about that? And I'm like, wait. Are you disrespecting a certified trainer's time? It's intellectual property that they've been able to carry through the sweat and tears and experiences that they have in the industry. Do yourself a favor, shorten your curve. Shorten your curve, take them to the field with you. Let them show you how to do this. I promise you guys, you've got plenty of years to go out by yourself. I promise you, it's my biggest desire that you guys go out by yourself. And if I could find a way to shorten your curve and go from here to here for every one of you, I promise you I will. I promise you I will. But this business is caught, it's not taught. This business is caught, not taught. It's not what we do in a classroom. It's not what we do in a virtual training. It's not what you learn from the YouTube channel. It's not. It's not. It's what you learn in the field. It's what you learn in the field. So I say this to my non-certified trainers and my certified trainers. Certified trainers, respect your time. If you start to see that the people are asking you questions left and right, 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 in the industry, you know, on the phone and taking up your time, your valuable time, because you can read, you can tell who that person is. You just want to go out in the field on your own. You want to get the information from me now. Listen, go call sales support. Go call sales support. And I'm telling you this I'm telling you this with my heart in my chest, because it hurts me to tell you that. But go call sales support, because if you're going to disrespect the certified trainer by just bleeding out their time over the phone because you don't want to take them out to the field and really learn the business, then go call sales support, because they're on salary. Certified trainers are not on salary. Certified trainers are on commission just like you. They're building a business just like you, so don't waste their time. Don't waste their time. I hear people all the time, yeah, man, but I get it, bro. You got a big team and I don't have it yet. Listen, you know how hard we worked? You know how hard people worked to build that team? You know how many people they went through that didn't make it, some failed meetings to build that team, and now you're telling me you want a handout because of the work that they did that you haven't done yet? Absolutely not. Go call sales support. Or take them to the field and learn. Take them to the field and learn. So certified trainers, respect your time. Non-certified trainers, do what you need to do to become a certified trainer. And it goes through this step, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. This is the steps. This is the steps. In the independent world, we request at least 10 practice meetings. Do you know when I was at Northwestern Mutual, I had to do a solid year of joint work? I wasn't allowed to do a meeting by myself. I wrote 105 pieces of business my first year. 105 pieces of business were split 50-50. 50-50. My son was about to be born. I was 100% on commissions. I was scared out of my mind. I couldn't work another industry. They didn't allow me to work another job. The little odd and end jobs that I did was under the table. I couldn't work another job. They don't allow you to at Northwestern Mutual. You can't do two things. I had to split it 50-50, 50-50, 50-50. Do you know how much I valued that first year? You know how much I learned that first year? You know how much I learned that first year? I wouldn't be here today if it wasn't for that first year. I wouldn't be here today giving you this type of knowledge and this type. I wouldn't be able to run an FMO. I wouldn't be able to do none of that if I didn't do what I did that first year. You know how many times I sat in on case designing, overcoming objections, phone zones, you know, illustration presentations, follow-up meetings, annual seminar, annual meeting. How many times? To be able to say, hey, I'm going to go now and do it on my own. You think 10 meetings are going to do it? Absolutely not. But you can try. Go call sales support. No disrespect, but go call sales support. You're more, I'm not going to stop you. This is the independent world. And here's the one thing you can't do to a builder. You cannot threaten a builder with you being here and not being here. You can't. You know why? Because a builder will always continue to build. This isn't a threat, but this is just the reality of what it is to be in business with partners. Respect each other. I'm going to value you and respect you. Value me and respect me. Right? But if you're going to threaten me, listen, bro, I'm going to continue to build. And you might be a killer closer, but you know what? Maybe I get 10 guys to do the kind of work you do. I'd rather work with the 10 guys that are coachable than the one guy who's not. Simple as that. Builders will build. Producers will produce. I'll teach you how to produce well. Everything we've done today is production. But I'm also not going to show you how to shorten your curve, your learning curve. It's going to hurt you. You don't jump from elementary to high school. You go from elementary to middle school to high school. Some people skip a grade. Maybe they'll skip 2, but they don't skip a school. You don't skip a school. Maybe you get into honors classes. So now you're doing some higher level sales, but you don't skip a school. Elementary school, term insurance by yourself. Middle school, IULs with a certified trainer. High school, IULs by yourself. College, annuities by yourself. PhD, premium financing, life settlement by yourself. I'm just being real. It's the truth. Take it for what it is, but it's the truth. It's the truth. 100% it's the truth. Intellectual property, time, exposure, working with somebody. That's what this all comes. So today I want to train you on how to present like this so you can tee up a meeting and take somebody with you that can really show you how to max this out. And it's the difference between 480 and 1250. That's your difference. It's the difference. It's the difference. Listen, nobody can say anymore, I'm not making enough money, not with these comp plans. You could argue back in the day, well, man, you know, I'm at 30% contract and I'm going to split it, so I'm really only getting 15%. You're splitting 100%, you're making 50. I made 6 figures on a 50% contract, just so you guys know. I made 6 figures on a 50% comp. Simple as that. And I don't mean to go on and rant with that, but I had to bring that out because it always happens. There's always one person. There's always 2 people, one of them. I can smell them a mile away, calling you 10, 15 times. Well, what about this and what about this? Or, hey, let me bring you into this meeting because but I want you to only talk about this because I already did this. Wait, what? Hold on. What? Listen, bro, call sales support, dude. I respect you, man, but I respect my time too, man. You know what I'm saying? And one day you're going to call me. You who are, if you're brand new, you're going to call me. You're like, Tony, I've been with you now for 3 years. I'm making $250,000. Thank you so much. You remember that call, that meeting that you trained us on? Bro, it's happening to me, man. It's so true. These guys they just want to go out there by themselves. They want to bring me on half the case, or they want to keep me on the phone for 30 minutes, asking me questions because they're trying to bro, it's so true. I'm where I'm at right now because of the training that I got while I was hands-on. Puebly right now has written more business than many people here. I guarantee you Puebly's income in the next 30 days is going to be higher than anybody here. I think there's not a single case that Puebly's done by herself in the last 30 days. If I had to guess. Mark my words, her income will be higher in the next 30 days than anybody else here. She hasn't done a single case by herself. Not one. She has a 42,000 annual point case with premium financing going in. She'll be the first. Her downline Caesar has 2 more premium financing cases that they're working. I think individually with a bunch of independent cases, she's probably written another 8,000 to 10,000 in annual premium, if I'm not mistaken. She's turning in business left and right. And you know what she's doing every single time? Here's my certified trainer. Here's this cut. Here's my certified trainer. Here's this cut. Here's my certified trainer. Here's this cut. Here it is. Here it is. Here it is. She'll make more money than anybody out here trying to run business on their own. because she's wanting to learn. She's wanting to learn. She's wanting to capture it. Now, granted, now this is a call out to the certified trainers. Don't do what Practice Company does. Don't give them only a piece of the pie and never expose the other side of the business. Show them how to run illustrations. Show them how to underwrite. Show them how to submit an application. Push them to run meetings with you. Don't put them in that position where it's like, the only way I make money is if I bring this guy, but he shows me the field work, but he doesn't show me the behind the scenes. He doesn't show me how to case design. He doesn't show me how to submit the business. He doesn't show me how to, he doesn't show me how to, no. This is a call out now to the CFTs, the certified trainers. Teach them everything of the business, beginning, middle, and end. If you're trying to breed a bunch of agents that don't know how to conclude business because you want to keep yourself so important to them and split business the entire time, shame on you. Ask Puebly if the conversation I'm having it with her right now, saying, Puebly, I think you're ready to start running meetings with me. Not me running them and you observe. I think you're ready to start running meetings with me. I'm pushing her that way. I'm pushing her that way because you know what? I need her to be a beacon of light, a light that shows everybody I'm able to write business by myself now through this process. And I'm pushing her that way. And sometimes she pushes back. I ain't ready. But you know what?
I want to do what you did on your first year of business.
Okay. As long as we're pushing you forward. And listen, full disclosure, first year of business, I split business, but I wasn't just observing the entire time either. I was running it together, illustration design, By the last 3 months of business, the last 3 months of the first year, I was making my own calls. I was running my own illustrations. I was running the meeting with the certified trainer and they were sitting in the entire time, but I respected their time so much that I still put them on 50% because I have to expect, they're not on salary. I'm taking up 6 to 10 hours a week of his time. The least I can do is put him on a cut. He's observing me and stopping me from making mistakes. The last 3 months, I was running every meeting by myself, but he was still there. He was still there just watching. He was still there just watching. He was still there observing. I still put him on 50%. I still did. So the process he taught me is the same process I teach you guys. At first, I watched him. Then we both did it together. Then he watched me, and then I went out by myself. Simple as that. Any questions?
I'll be graduating, but for now, I appreciate the fact that you are accessible to train us and to teach us. And I was telling the team, I think Thursday we did a call where, I let them know you are accessible right now. And I mean, we have 200 recruits, right? And you're still accessible. I'm scared to the day, to see the day. I'm happy and scared. Happy because we're growing, but scared that when we start recruiting as an agency, 500 recruits a month, 1,000 recruits a month, you won't be as accessible. And so I get anxious. I'm like, I need to be in front of Tony. I need to learn from Tony. I need to take notes in front, when I'm around Tony, because I know what it's like to be separated from you. I know that once you get so busy, you won't be as accessible. And I really want to absorb as much as I can from you, and learning and becoming a professional life insurance agent. So thank you.
I appreciate it. She's right. Right. My focus right now is duplicating as fast as I can because she's right. There's going to come a time where it's uncontainable. Right now, I'm at a place where I could tell you confidently I need other people to start doing orientations. Right. That's a load off, right? Just to be able to do your own orientations. And it's not hard. I know Puebly's already doing hers. I believe Lamont's already doing his. I think Rubiel's doing his. I'm actually working a little bit more right now with Rubiel because I hadn't done much orientation with him in the beginning. But little by little, you're going to see it's going to get bigger. There needs to be other leaders that stand up to the cause and say, hey, I got you. Hey, I got you. I love the fact that I can leverage Rubiel for training and Minor for training. I love that ability to be able to do that. Angie's learning how to do it in Spanish. Pretty soon we're going to have that operation. There's got to be a level of duplication in order for us to grow. Otherwise, we pinch ourselves. You want to stretch out that capacity. That's how we prove everybody wrong. That's how you prove all the doubters, all the haters wrong. Like, man, I came over there. I stood on my own 2 feet and look what I'm making. Look what I'm doing now. Okay? Good? Okay, any questions? Because what I'd like to do now is I'd like to start, showing you kind of some of the ways that I run quotes. Showing you how I do a dime analysis. I want to show you kind of that piece Because all of that stuff you do in a mortgage protection meeting. Questions, no? Anybody want a break? Anybody want a quick 10, 15-minute break? Let me see some faces if you do. Where are we at? Yes, yes, yes. Okay, I see people nodding. Okay, good. All right, good. So it's 4:27 my time right now. Let's be back at 4:45, which gives you 18 minutes. Okay, we're gonna push all the way through until 6 o'clock, which is another hour and a half. My goal in that hour and a half is to show you some websites that I use that I keep on my phone to run some quick quotes, to show you how I do a dime analysis, because the dime analysis to me is clutch. That's where I really build the case out, in a dime analysis. Okay. And really after that, just kind of conclude and make sure that you guys have enough information to go out there and be lethal. So remind me as well too, to go through my approach language. Somebody just remind me, I don't want to forget that. I want to give you my approach language, which is pretty much my elevator pitch when I first get into a meeting. Cool? Everybody be back 4:45 Eastern time. I appreciate you. Thank you so much.
I made the change from a common thief to up close and personal with Robin Leach. And I'm far from cheap. I smoke soap with my peeps all day. Spread love, it's the Brooklyn way. The Moet and Alizé keep me pissy. Girls used to diss me. Now they write letters cause they miss me. I never thought it could happen, this rapping stuff. I was too used to packing eggs and stuff. Now honeys play me close like butter play toast. From the Mississippi down to the East Coast. Condos and Queens, Indo for weeks. Sold out seats to hear Biggie Smalls speak. Living life without fear. Putting 5 carats in my baby girl ear. Lunches, brunches, interviews by the fool. Considered a fool cause I dropped out of high school. Stereotypes of a black male misunderstood. And it's still all good. And if you don't know, now you know. You know. Thank you. Super Nintendo, Sega Genesis. When I was dead broke, man, I couldn't picture this. 50-inch screen, money green leather sofa.
What's up? What's up? What's up? All right, let's close this bad boy out. Let's close this out. So I want to give you guys a quick recap of some of the things that I think are highlights. And then I want to get your takeaways. Honestly, I'm really interested in getting your takeaways, because if there's an area that you have a confusion in, the best way I can uncover it is if you kind of tell me what your takeaway was to make sure it's accurate. And if you have a question, make sure you bring it up as well too. Do me a favor. Let me see some people. Let me see some people on camarita, por favor. I'd love to see some additional people on camera. So here's what one thing I want to highlight. This is what I want to highlight. I wrote a couple things. Number one, personalize it. Right? Some of you came from Practice Company where you saw that we did the hustle presentation, and it was always the same scenario. The 30-year-old lady, ... If you notice, when I did this with Juan, I personalized it. I asked, how old are you, Juan? I'm 36. So my numbers were based on a 36-year-old. So I went from 36 to 66, 30 years, right? My GUL went from 36 to 100, but it was personalized to him, right? Because the way I see it is, what in the world does a male 36-year-old give a damn about what the cost of insurance is on a 30-year-old female? He wants to know kind of what it looks like for him. Don't kill yourself on the price. You might be off on the price. It's okay. It's all conceptual selling for them to understand the difference in pricing between one product and another, but personalize it. If you notice, I also asked about the beneficiary's name. Who's your beneficiary to get the money? Julissa. It's good in building rapport to use their name and their significant others' names. Their significant others, the most important people, are typically always the beneficiaries. Julissa. When you can customize your conversation to that, again, it's a way of building more rapport with them. That's something that I've always learned to do. And I was taught to do it when someone explained to me the importance of personalizing your meetings with your clients. I always try to do that piece. So leverage that piece, okay? Trial closes or tie downs, right? Before you jump into the IUL, ask them, hey, based on these two, right? Which car do you want to be driving? If we're at a car lot right now, and the only thing I have to show you is a Camry and a Lexus, which of the two are you more interested from a value standpoint and from a budgetary standpoint, meaning what you can afford right now? Because if they lean you right into the Camry and that GUL is like, holy crap, there's no way. The last thing I want to do is show them the Aston Martin, which is another part of the personalization, right? We remember the old school hustle, right? It was Camry, Lexus, Ferrari. What if they don't give a damn about Ferrari? I'd rather personalize it to them. Honestly, I'd rather. Did you see how Juan's response was when I was like, this is the Aston Martin? What did he say? Oof. Right? I want to take that feeling and transfer it to this. I want to take that feeling and listen, no lie. If the car doesn't motivate him, let's say it's a female, the car doesn't motivate him, right? Use something that does motivate him. Maybe it's shoes. I don't mind learning a lesson or two. Like let me ask a female in here right now. Is there like a female shoe-headed, like a heels galore type person in the house? Unmute yourself if you know a lot about shoes, and that's like a thing of yours? Anybody? Anybody? Nobody? I got no red stiletto heels out here? Okay. So I'm using that as an example because if you notice that the car doesn't motivate, then use something that motivates them. Ask them. I'll always start with the Camry and the Lexus, but when you notice that they stumble when it comes to the third car, the big one, ask them something else, something that does motivate them, something that's like a luxury to them. What's a dream place you'd like to travel to? I'd love to go to Aruba. Okay, perfect. So listen, let's call the Camry, Miami. Let's call the Lexus Mexico, and let's call Aruba, the big car. Whatever it is, but personalize. It's okay to do that and have fun with the business. Trial closes is huge. Always tie it to the mortgage. Remember, this was mortgage insurance lead, so tie it to the mortgage. This term policy is going to last you for 30 years. If something happens to you within that 30-year period, your mortgage is paid. And guess what? If there's any extra money left over, your family can use it for whatever they want because she can decide. Julissa can decide, use this money to pay off the mortgage or use this money to get another house. It's there, right? When you look at the GUL, right? You can make a decision on the 25th year to cancel this policy, get all that money back and pay off that mortgage and save yourself 5 years worth of interest, worth of payments, right? You could say, you know what? I don't want to cancel it. I want to turn this from a mortgage protection plan to a legacy plan because I worry about my last name and not my first name. Tie it to the mortgage. Look at the third vehicle I talked about. Listen, this is going to grow in assets for you. You could use the cash in this to pay off the remaining balance of your mortgage and then continue to use it as a savings account, which at some point is going to start to pay you later on. Mr. Klein, would you agree that your biggest asset right now is your income? I would. Well, listen, when you retire, your biggest asset won't be your income. Your biggest asset will be this because this will replace your income. Allow me to turn your paycheck into your playcheck. Right? But everything I use, I tie it to what? Mortgage protection. Because remember, you are the mortgage specialist. You came to that meeting for mortgage protection, so don't leave that sphere. Don't leave that world. Boom. Okay, I would love your takeaways because my next thing I want to do is I want to show you some websites. I want to show you some presentations. I want to show you some objection language, but I want your takeaways. Tell me what it is that you've learned. Tell me what are some of the biggest aha moments that you've had because I want to hear about it. What you got?
Tony.
Yes, sir.
So from WFG, this is the first time I've ever heard about mortgage protection, life settlements, anything other than IUL. So, just being immersed into actually what the industry offers with just your license, but having somebody who's been there, done that, and having the experience with life settlements blew my mind. So I'm definitely most interested in hearing more information about that. But I really, really liked how you broke it down with the cars, and then tying that back into mortgage protection is very important because like you just said, you're there for mortgage reasons. So if you get off course, they may be like, why is he trying to talk to me about retirement assets now? So.
Correct. Good stuff. Awesome. Love the feedback. Anybody else?
Yes, Tony. I like the fact that because I like how you presented, everything backwards so the client can understand what you're trying to present to them. And you made it look easy, but that came from all that time and hours that you put into practice beforehand for it to be like that. So that's one of the takeaways that I'm taking is we need to continue to put in all the work, be dedicated, because I kind of compare it with boxing. A lot of the boxers can't step into the ring not knowing how to throw a hook or the footwork. You got to practice that. You got to put the hours in before that. So I see the same thing here. You just got to be dedicated. You got to do your homework, do some due diligence, ask your upline for help, and just, steady, just continue working that cycle and continue developing that discipline that it needs for it to require to do a presentation like that. So that was my takeaway.
Awesome, brother. I appreciate it. Anybody else?
Yeah, for me it was the simplicity of the presentation. I think I like the drawing that you have the arrow and how you like make a different, I even the simple fact that you make each of them on a separate piece of paper. So later on, when you're asking the client, it's easier for them to understand. So I really like that.
Good, good, I'm glad. Good, good. Anybody else?
I think for me, also being in real estate, I feel like really learning when it came into the ROP about taking advantage of paying off your mortgage, you know. I know I promoted a lot of that. I'm like, oh, let me show you how you can use life insurance to your advantage. But I myself didn't even know how, you get me? I was just like, you know, emphasizing on just the living benefits, you know, and maybe even on, you know, some of the cash accumulation, but never really in that aspect of the way you put it in. So that was one of my aha moments that is like, girl, you've been in real estate, you couldn't even put that together yourself. So that was my takeaway.
Okay, okay. And listen, don't minimize it. Remember, this is 15 years of just going at it and going at it and going at it, learning from other people. I'm like a cut and paste kind of guy. I've learned from so many different people that the end result is this guy right here. And my hope is that you guys will capture things from me and I'll capture things from you that are good ideas. So, but I appreciate that, Lizette. Anybody else? Any other feedback?
Yeah. Go ahead.
Go ahead, Ozzy.
Oh, I was just gonna say that what I enjoyed about when you're doing the presentation, when you're doing the whole, you know, Camry Lexus to the Aston Martin, I do like the fact that you kind of feel the client out and you make sure, you know, really what they could afford before you unveil the luxury car, you know, so that you're not wasting time. So I like that.
Good stuff. Good stuff. Awesome. Anybody else? Two more.
Hey, Tony, and everyone else. You know what I really appreciate about you, Tony, and your candidness. You know, you're real. You know, you kind of hit, you know, throw no blows, you know, and especially when it comes to just utilizing you, you know, and your intellectual intelligence, you know, and making sure that we're using it the proper way. You know, I was one of the ones, I came from WFG as well. And I didn't learn or have anyone teach me. So I pretty much am a go-getter. I'm gonna go get it myself, but I'm also gonna ask the questions. You kind of put a lot of things in perspective, you know, so thank you for at least having that session, you know, that sometimes you don't want to have that talk, but thank you for having a talk with us and letting us know.
No problem, bro. That's what I'm here for. One more. Anybody else?
Yeah, I could good from even the action, the questions from uncovering the life, what is the life settlements, the simple questions, opening that door for that. I took away from that, even from the role play, right? From which two are you interested in, right? Like filtering it, right? And if they're going towards the Toyota, then you just emphasize on the carriers, you know, then you boost that up, right? Like with that. And even the term you said, once you're looking into the Aston Martin, I'll get one, watch, I'm gonna get one of those. Then you switch over to an asset conversation, which that's just totally different perspective, and an asset conversation going into that, which I thought was pretty cool. But yeah, man, great stuff. And I'll get my Aston Martin, guys.
There you go.
Hey.
There you go. I love it. And he's right. When I talk about IUL, I make certain I make sure they understand you're not spending $250 a month as an expense. This $250 is your savings. This is your future savings. This is an asset, not an expense. It's going to pay off the mortgage and protect the mortgage, but ultimately, long term, it's going to become something that 4X's and 5X's itself if you treat it the right way. That's the biggest piece to that. Because here's the thing: when you tell somebody, listen, your insurance payment's $250 a month. What are they going to do? Damn, that's expensive, right? Versus, hey, can you save $250 a month for your savings, for your future? It's a little different. It's a little different way to kind of take in that number. So you got to prep them for that in the very beginning. You have to prep them for that. If you don't, they're immediately going to be shut down. So you got to be willing to do that for sure. So let me give you a little bit more back office type stuff, right? So for term insurance, there's a couple companies you want to be able to leverage, right? If you feel like you need express underwriting, fast approval, maybe the person has a couple medical issues and you think they're going to get rated or maybe they'll get a decline. The company you want to look at is called SBLI. Right? Savings Bank Life Insurance. They'll do $750,000 of coverage, express underwriting, and a guarantee of no medical exam. So there's no medical whatsoever. They're the most price competitive with regards to term life insurance that's expressed. Their prices are almost the same price as someone getting a full medical done, right? That's SBLI right there. Outside of that, you got North American term insurance. You've got Anico term insurance. And if you want the very best term insurance with living benefits, you're going to lean into the NLG platform. There's many other ones. I'm just showing you this is kind of the way I break it down. These are my options, right? That's term, okay? When it comes to, by the way, North American, Anico, and NLG will do more than $1 million of coverage, non-medical, at a premier rating with living benefits automatically included into it. NLG has a little bit of a market advantage on their living benefits because they also include chronic injury. But if you look deeper into Anico, Anico also has chronic injury. They just don't segregate it in their critical illness rider. They don't segregate it, okay? But that's there. For the GULs, you're gonna be looking into North American, and you're gonna be looking into Anico. I told you priority, number first, Anico, second, North American. For a couple reasons. Both great companies, both A-rated companies, both have a 20-year return of premium and a 25-year return of premium. Both do $1 million, non-medical, both living benefits, both. Here's the advantage Anico has over North American. Number one, it pays you, the field agent, a little bit higher. Why not? If they're both the same, might as well get paid more. And number two, the illustration software is a lot easier to run illustrations on here. And number three, there's an actual application you can, a website you can go on your phone and run quotes if you're out on the road, which I'm going to show you that shortly. North American doesn't have a quoting system for it outside of going directly into their website or going into the Call UMS website. So there's you get a little bit more mobility over here. This is the route that I would go for you for GULs first before you jump into the second, okay? This is the GUL. Now, IUL, it's a matter of perspective. This is a little bit trickier. This is where field training really comes in. IUL is going to be sold under two pretenses. Okay, you've got cash accumulation, right? Cash accumulation as the priority and the reason why you're getting it, or you've got benefits, right, as the reason you're getting it. If it's cash accumulation, here's the priority list you always want to look at. Allianz, number one. Allianz is IUL, hands down, hands down, hands down. The best in the market space from a cash accumulation standpoint, okay? Number two, I would lean into Anico. Number three, North American. Number four, NLG. If you're dealing with non-resident aliens, then NLG all the way. NLG has a good platform for non-resident aliens. But that's the priorities I would go to for. If the priority is cash accumulation, if you have a meeting and the biggest priority to them is benefits, living benefits, number one, NLG. Number one, NLG. Number two, Anico. Number three, North American. And number four, Allianz. Notice the shift. These trade places. You want to know the logic behind it? I'll show you. It's simple. Highest cash accumulation than anybody else because this doesn't have all the living benefits. This has terminal illness and critical illness, but it doesn't. Terminal illness and chronic illness, but it doesn't have critical. So if you get cancer, stroke, heart attack, or something like that, you cannot use this as that plan. So because those benefits aren't there, the cost of insurance is a lot lower, which allows higher cash accumulation. It also operates on a participation in reference to how the index grows, meaning it's 120 to 150% participation versus a cap. All these other ones have a cap, 10% cap, 12% cap, 9 3/4 cap. It has a cap. It's not going to go higher than that number. This has the potential of earning more because it's a participation of the index, not a cap of the index. And if you don't necessarily understand that, that's probably going to have to be a different training, because that's really going to dig deep into how IULs work, which I don't mind giving it to you. I just also understand information overload. Just know this is the order. Does that make sense? Know that this is the order. Now, benefits, why is NLG the best in benefits but the lowest in cash accumulation? NLG has chronic, critical, and terminal, all the living benefits, but it also has chronic injury. Now that added benefit has a cost, which compromises the cash accumulation. This is why cash accumulation is the lowest on NLG, but the highest in benefit. You see how they correlate with each other? Benefit, Allianz has the worst benefits of all four of these because it doesn't have all the riders, but it has the best cash accumulation. That's how they correlate with one another. So if you want something that's more holistic, you're like, man, I want the best of both, you're going to Anaco. Easiest to illustrate, right? Easiest to run quotes on, good, strong company, good rate of return. There it is. And then North American as well. But whichever is your cup of tea, you can really use. Any questions about that?
I have one, Tony. So let's say that a client, for instance, let's just talk about the case that I was discussing with you. He liked the uncapped growth potential, but also had a concern for a health-related risk. So, like, is there a carrier that provides a uncapped strategy with health benefits?
Our job is not to show a perfect plan. Our job is to show a perfect program. I'll repeat that. Our job is not to show a perfect plan. Our job is to show a perfect program. So what does that mean? A lot of what I do is I'll sell them an Allianz, IUL, and then I'll attach an NLG term. This has the best benefit. This has the best cash accumulation. Combined, it's an impenetrable force.
Program.
So there's your program. There's your plan, right? Now, and I apologize, I changed it. It's not, I'm not here to show you the best product. I'm here to show you the best plan. This is the plan. This is the product.
Okay.
Plan, both of them combined, product, individual company. Okay. So how I sell this, it's simple, right? If I sell them on the IUL and they tell me, listen, here's my budget. My budget's $400. $400 a month. I'll say to them this, I'll say, listen, you're looking for cash accumulation, you're looking for living benefits, you're looking for death benefit, and you gave me a budget of 400. If I could meet your needs and give you the best of all three, but it costs you 450, is it a deal breaker? You know what they're going to tell me 90% of the time? No, it's not a deal breaker. I could stretch it to another $50. Cool. You know what I do is I put 400 into the IUL here, and I do a $50 a month term here. That's how I do it. Now, if they tell me, no, I can't go over $400, then I do $350 over here on the IUL, and I do $50 over here on the NLG term. At the end of the day, I can meet both needs, right? But I'd rather go up than down. So I ask them, Mr. Client, you gave me a budget of $400. What's important to you from our conversation seems to be cash accumulation, death benefit, and living benefit. If I can show you a solution that'll give you the best of all three, but unfortunately, I'm not able to do it at $400 a month, would you allow me, if I can meet it at $450, is it a deal breaker? No, that's not a deal breaker. That's using a negative to a positive, right? Them saying no now becomes a positive. That's not a deal breaker. Okay, good. Now I know. So now I got 400 over here, I got 450 over here. That's how you upsell.
Okay.
Got me?
Yep.
Good. Okay. So that's kind of the how, and again, this is all my opinion, right? Not everybody will agree. Do your research. You know, I'm willing to always listen to other options as well too. But from what I researched, that's kind of the order that I would go in when it comes to the IUL sales. And if you notice, because I talked about cash accumulation, I talked about benefit, I make sure that I leave the FNA knowing what's their priority. Out of this program, what's more important to you? Is it the cash accumulation or is it the benefits? Right? Like if you had to, you know, most people are going to tell you both are important. Hang on one second. Most people tell you they're both important. But then I say to them, if you have to pick one, if one of them has to be the priority, which one would you say is the higher priority? And based on what they say, tells me kind of which route I want to go.
Okay.
Angie, go ahead.
I have a question on the IUL for the Allianz because I have a client that I did an NLG and he puts about, I think it's like $375 a month. And so I asked him, well, I talked to him and because we're friends, and I told him about the Allianz if he was, that I would wanted to show him an option because, his money could be put into there. But my other question to you was when they're cash accumulating, now we're talking about, where it says the maximum or the minimum or the 7-pay, that they are actually putting that amount in, right? So it could actually have the amount that they want to see in 10 years or 15 or 20, or is it just the minimum that you're talking about or the premium that it doesn't lapse the account every year?
Yeah, so I never operate off a minimum, just so you guys know. Minimum is like whatever the minimum number is on an IUL, because what she's talking about is this, they'll give you different options of how you want to pay it. Minimum pay, target pay, 7-pay, right? That's typically what you'll find. Max pay as well. Minimum is the insurance company's way of saying, hey, if you have a really bad year, right? Excuse my French when I say this, the shit hit the fan. As long as you do this minimum, at least your policy will be good that year. But you don't want to do that number forever. So I never sell off the minimum. Never, right? Imagine a mortgage payment that is $1,000 a month. And if you do $1,000 a month, your mortgage will be paid off in 30 years, right? But instead of paying 1,000, I pay 700. What would happen eventually? I lose the house. Eventually, I lose the house. If I don't pay the right amount, I'll eventually lose the house. Same thing with an IUL. The $1,000 payment is kind of like saying target. The target payment is like, okay, it's going to take me 30 years to kind of build momentum on this, right? The minimum payment, you can do it 1 year, but eventually you're going to lose your IUL because it will collapse on itself, right? The max pay is like saying, hey, my mortgage payment's 1,000, but instead of paying 1,000, I want to pay 1,500. I'm going to overpay. What happens when you overpay on a mortgage? Less interest, you pay it off faster. That's overfunding policies. My rule for overfunding policies is very simple. If you're under 33, I run it right at target. If you're under 40, if you're under 40, I overfund by 30%. If you're under 50, I overfund by 40%. So let me write it a different way. Hang on, because to the eyes that doesn't look right. Okay. Anywhere from 1 to 33 years of age, I run it right at target. Between 34 to 40, between 34 to 39, I overfund by 30%. Between 40 to 49, I overfund by 40%. Between 50 to 59, if I even do an IUL here, I'm very cautious about doing IULs here, I overfund by 50%, and I typically want at least $750 a month in order for that to even make sense. If not, it just doesn't make sense. I'd rather put them in a GUL I'd rather put them in a final expense policy. And if they want to accumulate cash, I'd rather go into a Roth IRA. What does this tell you? Are you ready? The IUL is not the solution for everybody. Be very cautious when you're selling IULs to 50-year-olds. Be very cautious when you're selling IULs to people in their late 40s. If they're putting a good amount of money, it makes sense. Or if the insurance is very low, but they're still putting a good amount of money, it makes sense. The IUL is best suited right here. Because the IUL needs something that these guys don't have. Think about it. What do these guys have that these guys don't have?
Time.
Time. They have time to compound their money, grow their money. They have time to recuperate the cost of the insurance and make money on top. If you don't give policies enough time, the best that they sometimes do is just recuperate the cost. And then that's pretty much an ROP. But you need to give the policies time. Guys, it takes 10 to 15 years for you to recuperate the cost of the insurance. So if the first 10 to 15 years is just recuperate time, you still need another 20 more years after that just to compound and make it an asset even worth having. That's 30 plus years. It makes sense here. It makes sense here. Be cautious here. Because if you don't have that time, you got to make sure you're overfunding. The problem with this industry is this: agents don't get paid on the overfunded percentage. Your percentage, your comps, that 80, 90, 100% comp is based on the target, not on the overfund. This is overfunding, overfunding, overfund. So if you run it at 50% overfunding, you're only getting paid on half. And the downside to this industry is, unfortunately, agents care more about their wallet than they do about doing the right thing for the client. So they try to run everything at target because they want to get paid on all the contribution, not realizing you're hurting your client long-term by doing it that way. Does that make sense?
It makes sense.
I have a question. So
Yes.
let's say someone does 500 a month, just for easy math, that's 6,000 a year. And if they're in between the age of 1 to 33, 34 to 39, you're saying on top of that 6,000, they should contribute another 30% of that? Is that what you meant by that?
What I'm saying is this: if the person says my budget is $500 a month, but right, as an agent, you got to overfund it by 30%. Here's the number. Here's the formula. It's very simple. $500 a month is their budget. If they're overfunding by 30%, that means that the target has to be 70% of this. The target is 70%. So what I do is I take 500, I multiply it by 0.70, 70%. That means that the monthly payment of the policy that the system should read for target is $350 a month. Multiply that by 12 months. That means that the target has to be $4,200, even though the client's paying $500. So what they're paying in premiums is $6,000, but the target of the policy is $2,400. You're getting paid on this number, not on this number. The client's paying this, but you're getting paid on this. And now the next question you might ask is, well, what do I have to adjust in order to make the target $4,200? The face value. You have to adjust the death benefit so that and you adjust it until the illustration hits $4,200 target, but you tell the IUL to still pay $500 a month. Now you're overfunded by 30%. That's how you design it. Make sense?
Okay, because I was doing I was doing $50 or $100 over, but I wasn't using a percentage.
I mean, look, overfunding is overfunding.
I was doing that wrong.
I was taught that way. It's simple to me. If you're in your 30s, overfund by 30. In your 40s, overfund by 40. In your 50s, overfund by 50. But be very cautious when you're in your 50s, because the overfunding, the rule is overfund by 50, but they got to really put in a substantial amount of money for it to even make sense. Substantial. We're not talking $100, $200. We're talking $750 and above kind of money on a monthly basis. If they can't put that kind of money, put them in a GUL and get there and use that money as your insurance protection, and the rest of the money that they want towards savings, put it into a Roth IRA instead. You'll do better for the client that way than doing this.
one more question in regards to the overfunding.
Thank you.
No problem. Let me get Lamont and then I'll get Minor because I see he has some questions and then we're going to move on because don't get me wrong, I tread lightly when I talk about these conversations because everybody will easily jump right into there. Oh, that's field work. That's field training. It's not, there's no cookie cutter answer to it. That's why I say that. Go ahead, Lamont.
When I think of overfunding, again, you kind of move me away from this. I think of the participating and then the paid up additions. Are we talking about that where the customer pays money on the outside?
You're talking about whole life right now. That's the problem. You're stuck in that whole life world. I remember you even call permanent insurance whole life.
Yep.
It's a different world, brother. That's a whole different. I'm talking IULs right now.
All right.
Okay. It's apples and oranges. You really want to know about IUL? I mean, a whole life? Talk to Minor. I think somebody questioned there. Do you deal with participating, not participating? Guys, anything that has to do with that world, your guy is Minor. I know it as well, but Minor knows it just as well, if not better. He's your guy for the whole life world.
All right. That's a WFG thing, FYI.
Thanks for the question. So, something that we're going to run into because, as we migrate, right, from another world, we may have had some people that we put into these kinds of policies. 2 questions for you. I know that we can ask to be the agent of record, but yes. Can we do an in-force illustration, bring them over, and then try to salvage what they had? Because some of these policies were not written correctly. So those are the 2 questions, and then I guess maybe just a comment after that.
So I'm so glad you mentioned that. Something that agents don't do and you need to do. You meet with a client that has an existing insurance policy. If that policy is over 2-3 years of age, you cannot use the illustration that they have in their hands when they first bought the policy. You can't. That policy is already 3 years old. Numbers have changed and adjusted. You want to see where it's at today. How you see where it's at today is by requesting what's called an in-force ledger. You want to see what the policy is currently at and what the projection is looking like based on the company that they're doing business with, so that then you can do a comparison and do the same contribution with what you're recommending to see which one earns more money. Number 1. Number 2, you want an in-force ledger because you want to know what the cash surrender value is. How much money is in here? If they cancel this policy, how much money is in here? Because you're going to take that money and move it into the new IUL under a tax code called a 1035 exchange. Let me tell you something. I've seen this happen time and time again. Agents won't do 1035 exchanges, and they'll tell the client, just call, surrender the policy, and put the money in your pocket. You expose yourself so much to lawsuit by doing it that way. You expose yourself so stinking much. You're not doing the right thing for the client. You're not doing the right thing for the client. Take the extra steps and do the 1035 exchanges. I'm not going to tell, don't get me wrong. Let me correct that. If the policy is only a couple years old, no big deal. But when there's 10,000, 15,000 in there because the policy's, 8, 9, 10, 11 years of age, remember what the objective was for that money to begin with. It was future savings. So do the right thing and put the money into another permanent policy so they still get the same tax benefits. But you can't recommend, I can't tell you, and I think a lot of you guys will vouch for me on this when I go to meetings with you. Someone says to me, is this a good policy? I don't know. I need to compare it. I need to see it. I can't tell you if something's good or bad until I have something to compare. But another point to answer to you, Minor, is this. There's a lot of policies out there that are written poorly from some of your former colleagues. When that happens, don't just accept it just because I have something already. You know how many policies I've run into recently that are from NLG, from colleagues that have no idea how to actually run it. And then you run the numbers and you're like, holy crap, bro, do you realize that this policy is doing this, 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 and this, and you're going to get, they don't know. They're like, I had no idea. That's such a poorly designed plan. This policy is going to collapse on itself. It's going to eat itself alive. It's not designed the right way. Yes, it's a company that you sell right now, but it was just poorly done. That happens. I run into that so many times. When that happens, can you become an agent of record? Yes, you can. But you can't make modifications even if you become the agent of record outside of putting more money in the policy. So what do you do when the client can't put more money in? the best thing that you should do is give them the option. Say, listen, you stay there, this is what's going to happen. Look at the illustration. That the company's telling you what's going to happen. Or we replace it and properly design the right plan and move the money that's in there into the new plan. But again, this is why I'm very cautious when I give this type of training. There's no black and white. There's no such thing as a black and white in that space. Every case is going to be different, and you're not going to learn what differences there are if you don't go out to the field and learn it. What I teach you right now might not apply to this client, but it does to this one. You won't know the difference. You got to go to the field with someone that knows it. But the first place you start, Enforce Ledger.
Tony,
Yes, ma'am.
you froze.
I didn't freeze. You froze. Am I frozen?
No,
Okay.
you're good. You're good.
Okay.
Yeah.
Okay. Angie, I didn't freeze. I think you froze. I'll wait for her to come back. I'm very, very weary when it comes to IULs, guys, because it took me, no lie, it took me a good solid 3 years to really understand the mechanism behind it. It took me a lot of just running different numbers, different illustrations, different this, different that, to just be like, oh, okay, I understand how this affects this and how that affects that. That's all field training, guys. Angie, I think you're back now. What's up?
Yeah, I froze, sorry. A question that I had is, okay, so if these are our clients and we know that they can have something better, or for, we run the numbers to compare it, do we literally have to become an agent of contract with the policy of the former company, or can we just do the 1035 exchange and that's it, we're done?
Yeah, all you're gonna do is you schedule a three-way phone call with your client to call the insurance company. And when you scheduled it, you're basically, you tell the client, we're gonna get on a call, they're gonna verify your identification, you're gonna give them authority, you're gonna give authorization for me to speak on your behalf. And then when you get on the phone, you say, Miss, I just want to know some quick information about your policy. I want to know what the face value is. I want to know what the issue date is. I want to know what the cash accumulation is. I want to know what the cash surrender value is. And I want to know what the riders are. I also want to know what interest rate are you running the illustration? And can you email me an Enforce Ledger of that? And they're going to typically email it or mail it. They can email it to you, they'll email it to the client, but you need that Enforce Ledger. You need that. Here's the projection of where this policy is today and what we expect for it to do in the future. You cannot do a replacement without seeing that. You can't. And if you do, you expose yourself to potential future lawsuits and future issues. That's the stuff that I typically get. Let me give you a tip about this, because a lot of you guys came from, not practice company, a lot of you guys came from WFG. Let me give you a little tip about this. WFG, you can call them and they'll give you all that information over the phone, and then they'll email you the illustration within like 24 hours. No problem. You want to know a big leak inside of the Transamerica FFIUL platform? A lot of their IULs don't have living benefits, number one. Their new ones do, their older ones don't. And their living benefits aren't what they say it is. And how I validate it, I literally get on the phone with the client and I call Transamerica and I have Transamerica tell them on the phone what it is. You guys want to know what the leaks are inside of Transamerica's living benefits? Who's interested in that? Okay. What's this? This is the easiest justification for a replacement just because of this alone, right? Watch this. Let me use Josh. Let me use Mr. Josh Collier as an example over here. Let's say hypothetically someone has $500,000 of the Trendsetter LB, which is the term policy that has living benefits. And let's say they have a living benefit claim. Lady's got stage 3 cancer, breast cancer, and she calls the company up and the company says, listen, you qualify for $100,000 of living benefit out of this policy. And she takes the money. Everybody follow me so far? She takes the money. She's got a $500,000 term policy. She has cancer, qualifies for $100,000 of living benefits. She takes the money. What's remaining, Josh?
400,000.
Nope. No. You would think logic says, well, if she takes 100,000 of her face value, she should have 400,000 left over. in death benefit? Nope. What she'll have left over if she takes this 100,000 is about $65,000 of death benefit, and she'll relinquish the difference if she takes the 100,000 in living benefit.
That sounds like an internal life settlement.
Ta-da!
Is that what it is?
That's exactly what it is. You know, I've met with clients, they say, no way, that's not true. Let's get on the call. Let's call Transamerica right now. I'll let them tell you. You don't want to believe me? Let's go right to the horse's mouth.
I have another question. Is just Transamerica like that, or is it all carriers?
It's not all carriers, it's that one. They do not have a dollar for dollar reduction of benefit. Transamerica doesn't. They do not. NLG does, Anico does, North American does. Those are the LB companies we're using right now. That alone right there validates a replacement.
Yeah.
And you can write case notes down. Guys, when you do replacements, you should write notes down as to why you're replacing them, just in case, just so you know. If somebody ever questions you, you got to have notes as to why you replaced the business, because you can't put people in a lateral position. You can't put people in a downward position. You got to put them in a better position. You got to validate the replacement. So think about this now, because a lot of you guys came from WFG. How many of you guys wrote up term setter LB with your clients and you didn't even know this? Well, what if you could put them in a term policy that's the same exact price, but has full living benefit, dollar for dollar reduction? Doesn't that validate a replacement?
Yep, it does.
Welcome. Let me know which company you write. I'll give you my code number. You put me on 25% of the business. I'm just playing. Guy killer. There it is right there. There it is right there.
Wow.
Okay, good. Okay, I'm gonna move on because I know we can get stuck in the IUL world forever. I wish, guys, I wish there was like a blanket black and white. Here's what it is. The most black and white I can give you is the percentages that I like to overfund based on your age. The most I can give you is, you know, make policies increasing instead of level benefit unless the person's in their 50s, then you want to do level benefit. That's kind of the blanket rules I give. But outside of that, everybody's a case-by-case basis. Everything. And when you're replacing business, get an in-force ledger so you can do a side-by-side comparison. Let the ink validate. Let the ink. I do that a lot. Look, tell me, look, this is your policy. This is what I can give you. What do you think? I just had a meeting with Puebli a couple days ago. Client says, I got a State Farm policy. I got a Primerica policy. Okay, great. Talk to me about the prices. And and Okay, well, do you know that State Farm and Primerica neither have living benefits? What if for the same price that you're paying, I can get you, now mind you, State Farm was a UL. What if I can get you a GUL? What if I can get you a GUL and for the same amount you're paying, I could double your coverage? No way. Yes. So that's what I did. I ran this side by side. I go, look, you currently have this. You currently have $350,000 of insurance and you're paying $250 a month. For the same $250, I can double your face value, give you the return of premium option in a guaranteed world with living benefits that you don't have right now. I let the ink make the sale, not me. I wouldn't be able to do that if she wouldn't tell me what she had. Tell me what you have. Tell me what benefits you have. Tell me what you're paying. Tell me what your face value is. Tell me what company. Guys, State Farm, Primerica, write this down, please. State Farm, Primerica, Northwestern Mutual, Guardian Life, New York Life, Allstate. Trying to think. All of those companies, zero living benefits. Prudential, zero living benefits. You're welcome. You come across those policies, zero living benefits. 9 times out of 10, if those policies aren't 10 plus years of age, if they're less than 10 years, 9 times out of 10, you can replace it for the same face value, come pretty close to the price, and make sure you're adding living benefits. Justifiable replacement. Justifiable replacement. The only thing that wouldn't justify a replacement is if their health has changed, which causes them to not qualify for the coverage any longer. Transamerica, IUL, pre-2014, 15, somewhere around there, their FFIUL, no living benefits. No living benefits. Now theirs has prior none. But even then, I just showed you it's not a dollar for dollar reduction. Somebody had a question.
Could you repeat the companies again, please?
Hang on. Yes, hang on. State Farm, Allstate, Northwestern Mutual, New York Life, Guardian Life, Primerica, Prudential, no living benefits. No living benefits. Na, 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 na,
AIL
na.
also no living benefits.
There you go. Look at that. AIL also no living benefits. I believe combined life as well too, no living benefits, but don't quote me on that. Yes, no living benefits. Crazy, right? That's an opportunity like no other. Bro, someone tells me they have Primerica, game over. I'll double your coverage for the same price with living benefits all day, every day. Okay, good.
So can we post this like publicly, like on our Facebook or something with all these companies, or we can't do that?
Why not? You're not lying. It's the truth.
Marketing.
It's called marketing. And if you're not securities licensed, feel free. You could do it, no problem. You might get some shade from existing
Awesome.
agents.
Tony, are we
We
gonna have
can
access?
ask who has these companies.
There you go. You can. Josh, go ahead.
Are we gonna have access to this recording?
Yes, this will hit YouTube in the next couple of weeks as soon as my man Miner makes things legit. We're taking care of my boy over there. Yes. Okay. All right. So I got 25 minutes left and I got some things that I definitely want to cover so I can move forward. Okay. The biggest thing I want you to understand about mortgage protection companies is that mortgage protection leads. It opens up so many opportunities outside of just mortgage protection. It really genuinely does. If you do a good job of fact finding, you do a good job of asking questions. If you're coming in there to be transactional, boom, here's a term policy. It'll cover your insurance. You're out of luck, right? Make sure your conversation is always relative to the mortgage. Notice how I tied term to the mortgage. I tied GUL to the mortgage. I tied IUL to the mortgage. I presented it and let them choose. But if you don't ask questions like, what are your existing assets? What is your existing insurance? You're going to lose out on opportunities. By asking those questions, you open up opportunities because you find the leaks of what they currently have. Find the leaks of what they currently have. Remember nesting. You get a policy in place, get 3 contingent beneficiaries. Get 3 contingent beneficiaries so you can begin that process, that journey of nesting. Here's my promise to you. If you get 4 generations deep on a family tree, you're doing a really good job nesting. And I promise you, people are waiting for you to call by that point. They get annoyed because you haven't called them yet. They'll be like, yo, how come you call my cousin, my aunt, my uncle, my brother, but you ain't called me yet? Bro, don't get mad at me. Somebody didn't assign you as contingent until now. You know what I mean? Like, it is what it is. But bro, imagine one lead, let's say a $20 mortgage protection lead. You do a good job and not become a transactional seller. That one lead gets you 10, 20 clients because you're hanging out inside of that family tree. You're hanging out inside of that family tree. Positives and negatives to nesting. Positives, they'll all love you if you do a good job. Negative, don't screw one single person over or you'll lose everybody. Don't do it. You treat the youngest one and the oldest one and the one in the middle like every single one of them are the most important person in the world. Because you burn bridge with one and that'll spread like wildfire. That family tree will burn you to the ground. You lose all that business right away. But the positive, you do them right, they'll refer you left and right to everybody. They'll refer you to their in-laws and you'll get into a new family tree without you even realizing it. I promise you it works. You just gotta do a good job about it. Don't press nobody, don't pressure nobody. Present and let them choose. Present and let them decide. Build rapport, understand charisma, go above and beyond. You learn things about people. Don't be afraid to, send them a thank you card. Don't be afraid to send them a food. You have no idea how far food goes. I brought you a bottle of wine. I brought you a cake. Thank you so much. I really appreciate it. You have no idea how far that goes. Go above and beyond. I promise you they'll take care of you. They will take care of you. I want to close with this because I've got 20 minutes left. Let me show you something. And what I'm going to do as well too is I'm going to post the links. Now, if you do nothing with these links, it's your fault. I've got the recording of how many people are on this training right now. If you call me up later, hey, can you send me the link to this again? I'm gonna tell you it's your fault. I'm about to post all of these links on the group chat. It's your job to grab them, save them, and store them. How I store them is simple. I store them on my phone, not as bookmarks. I store them on my phone as apps. The website, I save it. I save it. I do what's called adding it to home screen. So it looks like a phone app, but really it's the website. It's the website. Boom. I just went to the website. There it is. And boom, I'm in Oxford. I save them all, right? So I'm going to send them to you. This is Oxford. Tony, do you mean I could run an Oxford quote with this application without actually having a contract? Yes, I can. And you ready? Okay, I'm doing it right now, right in front of you. Ready? There's Oxford's link. SBLI, I want to run quick term insurance quotes. Can I do that in the road? Can I do that from my phone? Can I do it from my computer? Yes, you can. Hang on one second. There's SBLI. North American term insurance quotes. Can I run North American term insurance quotes? I'm not contracted yet. Can you help me out, please? Of course I can. Not a problem. There's North American. I just sent it to you. Right? This one I did. Anico. I did this one like crazy. Here's American National. You could do term quotes, and guess what? You could do GUL quotes right here. Tony, can I run GUL quotes right from my phone, please? And term quotes? Yes, you can. There it is right there. But Tony, give me more. I want more, Tony. Well, let's go to our back office. Let's go to our IMO's back office, callums.com. We go to Agent Portal. You go to Agency Life Quotes. Look how cool this is. Let me put a sample in here. Let's talk about this guy, Tony Martinez. He seems to act like he knows what he's talking about. I don't even know who the hell he is. He's got a good haircut, though. August 18th. Right, Tony Martinez, he's male, non-tobacco user. He's in the state of Florida. You know, let's put him in standard, preferred. Let's see both, though. Let's see preferred and standard. Let's see what that looks like. He's interested in a 30-year term, but he's also interested in possibly a GUL. You know, he wants a GUL that's paid to age 100, and he wants to see a 30-year term product. Okay, and you know what? Let's look at let's see, North American. Let's look at SBLI right here. Let's look at American National. We'll look at all three of those. And you know what? I did his dime analysis. He's looking for 250,000 of coverage, but you know what? He might want 500,000 of coverage as well. And you know, let me make this professional. Let me make this, you know, really, really professional, right? Let me put, what's my name? I'm Edgar Cortez. Aren't you Cortez, bro?
That's correct.
All
That's my
right.
middle name.
There it is. And you know what? Let me put my email. Edgar, what's your email, bud?
ecortez, msm@gmail.com.
Yeah, we got to change that.
Yeah.
Yeah, I agree. All right, perfect. Edgar, give me your phone number, bro.
Area code 331-871-1451.
All right, perfect. And if you had a license number, boom, you put your license number there. And then we hit this magical button called Run Quotes. Holy crap. Did you just run quotes for a bunch of companies at once? Yes, I did. Yes, I did. Tony, you mean I don't got to call you and ask for quotes? I don't got to call my upline and ask for quotes. I can actually do this on my own. But are there lessons to learning this? Well, there's a video right now that we're recording that you guys are going to get access to. And then there's, you ready? It's called Life Experience. It's called getting your hands dirty and playing with the system. Tony, how did you find that American National had a website? I searched for it. How did you find that SBLI had a quote website? I searched for it. There's this magical thing called Google. Tony, how did you search for North American quotes? I searched for it. I typed up on Google North American quotes. I found it. Tony, how did you find? Oh my God, this is crazy. So many resources. There it is. So SBLI, $250,000 right here, 30 years, costs $29 a month. North American 30 years for $250,000 costs $31. American National, $32. SBLI for, is that SBLI twice? Why is SBLI there twice? There's a reason why you're there twice. Oh, I'm sorry. Select non-tobacco. So that's, I went preferred and standard. So standard, $41 for SBLI. Standard for American Nationals, $41. And SBLI, 500,000 is $51. Is that crazy? Look at all the quotes. Look at all the quotes that are there. 30-year for $500,000 North American, $55. Wait, how much was the $250,000 for North American? Let me just go back up. Let me, oh, there it is. $31 versus $55. Pretty cool. But Tony, you said that you also wanted to see what a GUL looks like, didn't you? Well, let's go to term to age one. Let's go to age 100. Look at that guaranteed universal life, guaranteed to age 100 right there. $250,000 preferred, right? $250,000 standard. Pretty cool. Tony Kent, is there any way, is there any way you can email this to me? Like, is that even possible? I don't need this one, but I would like this one. I don't need this one, but I would like this one. Can you please email this to me? Oh my goodness. Are you ready? Let me see. Share. Oh my God. I can download it. I can email it. Hell, I could text message a link that'll let you open it. Holy crap. I don't need to be contracted with these companies to do this. No, you don't. You just need to turn in your contracting paperwork. Congratulations to Josh Collier, who just came on board yesterday and last night processed all his paperwork for contracting. By Tuesday, he'll have access to all of this. All of this, he'll have it ready to go. Ready to go. Tony, is there any way I can run IULs? Yes, let's schedule a time. You and I will contact John Countryman and he'll show you how to, he'll run IULs for us. No problem. No problem. Tony, do I need to call you like last minute, 5 minutes before the meeting? Absolutely not. I'll respect your time. I'll let you know ahead of time. I'll let my certified trainers know ahead of time when I need something as well too. That way I'm prepared and I'm planning versus calling last minute. You get what I'm saying? You cannot tell me you don't have resources. Let me do it. Let me do a text message. Right? That's pretty cool. Look at this. Look at this. My goodness. Look at this. Which way do I want it? Do I want it this way? Do I want it this way? Let's see. Let's see here. Phone number. I'm going to text it to myself. I want to see what it looks like. Look at the message. Thank you for your interest in a life insurance policy. Take a look at your personalized insurance quote. Edgar's such a good agent. He's literally text messaging my quote. He's putting it on my phone because I'm a millennial and that's just the way that I operate. I'm better that way. Success. Let's view the PDF just in case. Goodness. Hey guys, I just got a text message, by the way. Half a second after I hit that send button. Let me see. Oh my God. Thank you for your interest in a life insurance policy. Take a look at your personalized insurance quote. Let me hit that link and see what I got. Holy crap. Are you kidding me? There's all my quotes. There's all my quotes. That's so sexy. Right? I can look at it from my phone. But I'm a truck driver. How am I going to actually, I can look at it from my phone, then I can get on a Zoom with Edgar and I can look at it and be like, Edgar, I want to apply for that one. Or I'm on the road. I want to apply for that one. You can't get better than this, guys. Do you notice the hint of sarcasm that I have when I hear some agents are kind of, I don't know how to run quotes. I can't do this. Are you kidding me? Have you dug deep into this? Have you dug deep into what you have and the resources that you have in front of you? I didn't sit in a 5-hour session with UMS and Marianne for her to show me. She just said that it was there. And then I said to myself, I'm going to go research and I'm going to learn because I'm an entrepreneur. I'm an entrepreneur. I need tools. And I know that my coaches, because I have a coach, Marianne is my coach. She runs a 37-year-old FMO. She teaches me, develops me. You know what's the one thing I don't want to do to her? I don't want to treat her like a tool. She gives me tools and I use those tools, but I don't ever treat her like a tool. She gives me the tools and the resources. I leverage those resources. I've had about as much experience with Call UMS and this website about as long as you guys have. Let's say a month longer. That's about it. That's about it. There it is. Everything's right there for you. Everything is right there for you. Every single thing is right there for you. So in your Microsoft Teams is what? You have the links to the websites directly, or go to Call UMS and run your quotes right stinking there. Can't get any easier, guys. The question now falls, who's ready to fall forward? Who's ready to fall forward? There's a crap ton of people, guys, that are voting against you. And I've heard a lot of stories from you guys. You know, they didn't teach us products. I didn't know what I was selling. All they wanted to show me was how to recruit. And, you know, I want to be confident in my products. I want this, I want that. There's not a single person here that can tell me that we focus here at TKO Financial, that we focus more on the recruiting and not the products. There's not a single person here that can tell me that. Not a single person. Well, you know, your clinics, they're only for an hour long, and that's not enough time. We just did 8 in the morning until 6 p.m. Yes, the website is callums.com. Callums.com. Call UMS, save that. You're going to need that like crazy. You know what's crazy as well, too, is this. I want you all to stink and win. I want you to win. Let me tell you this. Final Expense is not a product that you need a field trainer to go with you to too many cases. It's so plain vanilla. It's such an easy thing to do. Like, guys, it'll be so easy for you to be able to run business in the Final Expense game and make really good income, guys. If you're brand new, you're making 90% comp in Final Expense. 100 if you're a senior associate, 110 if you're a field manager. 110 if you're a field manager. You know what that means? That means, look, 83 bucks a month, one policy, times 12 is $1,000 a year of annual premium. It approves in 5 minutes. And you're going to get $1,100 in commissions if you're a field manager, or a $900 commission if you're a senior associate. I'm sorry, if you're an associate. Are you kidding? Are you kidding? You could not know a single thing. You could not know a single thing. You could be dumber than a bag of rocks on the IUL space, on the GUL space, on the annuity space, on premium financing. But there's 76 million baby boomers right now, 43% of the entire United States that's retiring. 62% of them are going online looking for Final Expense. All you got to do is buy the leads and sell that one product, and you're making 6 figures. You don't even need to know any more companies. Just master 2 of them. Seriously, just Oxford, Great Western, done. Just boom, 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 boom. I'm telling you, there's no reason why people shouldn't succeed here. There's none. There's none. Is there a script? Yes. I just sent it to you on PDF. Is there a hook that allow me to get into the meeting for free? Yes. I just sent you the Kaizen Social. Is there a presentation that I could do? Yes. It's recorded for you to go back to and reference to. Is there a flip chart? Tony, do you have a flip chart? Because, you know, I don't really like that whole concept of, you know, writing on the legal pad and all that stuff. Holy crap. What is this? What is this? Is this a flip chart? Oh my goodness. There's a flip chart that we all have. Is that a dime analysis? Is that, oh my God, is that the term presentation that you just did? Is that the GUL presentation that you just did? Is that the IUL presentation you just did, Tony, on a
what?
Wait, I can download this and use this on my tablet, or I can print this out at an Office Max and get it laminated and have my own flip chart? Oh my God, is that Final Expense? Is that indexing strategies? Is that how you present an IUL? Is that tax strategies? Is that how you explain a 401k? Is that how you sell an annuity? Is that credit repair? Tony, wait, whoa. How much does that cost? You ready? Oh, God. Free 99. It's free. Oh my God. But listen, Tony, I'm a VP, bro. I respect TKO Financial Network, man, but I want my agency name, baby. I want my company. What if I told you, if you're a VP, that I'll get you in contact with the marketing company that put that together for me? And I'll have them remove the TKO logo, put your logo in. If you don't like the green, change the color green. I don't care what you put on it. Make it yours, and they'll charge you one time $200. One time 200 and they'll do that for you. Not just for that presentation. Wait, let me take it a whole nother level. Tony, you're outside your mind. Are you really giving us all of these resources? There's no way. I thought we were independent. We don't have resources. Well, that's the sales presentation. What if you wanted the recruiting presentation? Do you have a recruiting flip chart? Oh my God, what is that? Is that supply and demand? Is that services that we offer? Is that premier carriers? Is that term again? GUL again? Oh, and look what he has in the bottom, how much the comp is on those policies. Oh, that's right. That's a recruiting presentation. So you got to talk about comp there. Final expense. How do we obtain our clients? Wait a minute. How do we not obtain our clients? We won't start writing up your warm market to give you a fake promotion while you study for your exam. Did I say that out loud? No way. Did I really just say that out loud? Oh, wait, why TKO? Because it's an independent model, because it's designed for you to build your own agency, because you're vested from day one, because starting comps are 90%, because there's a zero cost to enroll. Because of all the stinking resources, there's ways that you can partner with us. Referral agent, free consultation, become a business partner, because we have a system in place. Pre-licensing, open, word again, free. Oh my God, it's crazy. You mean I get this for the same $200? Yes, and my VP could put his logo or her logo on there. Yes, you could do that. But wait, there's more. Tony, I know you run opportunity meetings every single Tuesday and every single Saturday, but I want to run my own, bro. I want to run my stinking own. I want M&L Financial Agency to be there. I want the BBA agency to be there. Is this our BOM? Is this our, or what WFG calls a BPM? You mean I can run my own, put my own logo on there? Yes, you can. Right? Oh my God. Oh my God. They're all there. Everything is there. But Tony, listen. I just brought on board a new agent. I got to orient the guy. I don't really know how to do an orientation. Anything you have to help me out. Wait a minute. Wait, for the same $200, I could put my logo in. I can have this, or I can just get it for free and use the TKO logo. It really doesn't matter. But is that an orientation? Did we not just go over that yesterday when it comes to compensation? Oh my goodness, it's all there. Oh wait, that looks very familiar, doesn't it? Let me close. I can't. It's too much. It's too much. I'm telling you guys, it's too much. It's too much. There's no way. There's no way. Tony, is that what you've been up to for the last like 9 months of 2020? Yes, that's what I was up to the last 9 months of 2020. That's why you guys saw me really quiet. I was secretly building the model that's going to make you a $250,000 earner. That's what I was doing. And I'm very honored and I'm very blessed and I'm very humbled, and no lie, sometimes I shed a tear just thinking how blessed we've been in this last 7 weeks, that over 200 and some odd people have made a decision to come on board. Over 120 something agents have made a decision to come on board, because your dreams matter. Because overrides are a big thing. I believe in overrides. But you know what? I also believe that the guy at the bottom of the totem pole needs to be able to eat as well while the overrides are coming in. And there's nothing wrong with that. There's nothing wrong with that. There's absolutely nothing wrong with that at all. There's absolutely nothing wrong with that. So let the haters hate. Let the doubters doubt. Let them hate. Your quitters, listen, some of the biggest organizations started because somebody quit one thing and started something of their own.
Yep.
There's nobody that can tell anybody otherwise. Secretly, I want you to know something. Secretly, I want you to know the founders of any organization right now are looking at us and they're saying, bravo, you took the same leap that we did. We can't tell you out loud and in public that we respect what you've done because it would cripple what we have. But secretly, bra freaking vo. Good freaking job. I commend you. Way to fall forward. Way to go fight for your last name and your legacy. With that being said, guys, I'm going to let you go because I'm hyped up. I'm ready to go make stuff happen. I hope you're hyped up and you're ready to go do something. And I hope you're hyped up to prove everybody freaking wrong. And I hope that I see 100 recruits come through the system. But more importantly, I hope I see 100 applications come through the system with a whole bunch of new writing agents that are coming through. Because this next month in March, I want to write up 100,000 of issue place business out of this organization right here that nobody expects to see anything happen. Have a good one. Be blessed. Let me hear you on the chat. Let me hear you in that group chat. Tell me what your thoughts are, bro. And I'll leave you guys be with the rest of your day.